framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Aha. Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान MSME लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge,
upskill, opportunity,
experience, empathy,
change,
exciting future.
India, young, vibrant, aspiring, a country of a billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling and tripling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On completion of the CPBFI program, students undergo an assessment process followed by workshops by human resource professionals. This is extremely important as these mock interviews are simulated by Bajaj Finserv recruiters, providing students insights into industry expectations from them.
Before the course began, our students were in dilemma whether we should take up this course or not. But once they started the course, they developed the confidence. This confidence, which is the need of the hour.
One finance professional at a time, the CPBFI program is making a telling impact on society and the financial services industry. 70% of students are young women, while a sizable 66% of students have parents who are not graduates. The CPBFI program is enabling these families to grow their income multiple times, leading to their financial well-being.
I'm on first postgraduate in my family.
Check.
I'm currently doing MBA in marketing. This program inspires me to enter this sector. So
Check.
the whole
Attention, ladies and gentlemen.
What started?
We will commence in the next couple of moments. You all are requested to kindly be seated and please turn your cell phones to the silent so as to avoid disturbances during the proceedings. Thank you for your cooperation in advance. All those who can hear me outside this ballroom requested to kindly proceed inside, and all those already here, do ensure that your cell phones are on the silent, and we all know the reason why. Thank you once again. I seek your attention, ladies and gentlemen. We are beginning immediately. All those yet standing requested to please settle down quickly. And I hope your cell phones are on the silent. Thank you. A very good morning, everybody. Good morning. On behalf of CII, the Confederation of Indian Industry, it gives me, Manasi, immense delight in extending a hearty welcome to all of you, especially our esteemed guests, distinguished dignitaries, and invitees who are present here for this extremely special event. inaugural plenary of the Financing 3.0 Summit with the theme Preparing for Viksit Bharat. Ladies and gentlemen, this is the inaugural edition of this summit, and before we begin the inaugural plenary session, is India's financial sector geared up to support our country's sustained double-digit growth? Let me profusely express deep gratitude towards the luminaries who have extended their valuable expertise, time, guidance, and wholehearted support towards setting up and building this summit. Let us appreciate and welcome with a resounding of claps the chair of the summit, Dr. V. Anantha Nageshwaran, Chief Economic Advisor to the Government of India. A very warm welcome to you, sir. Mrs. Sanjeev Bajaj, the co-chair and past president of CII, as well as the chairman and managing director of Bajaj Finserv Limited. Welcome, sir. The other co-chair of the summit, Mr. Chandrajit Banerjee, Director General, CII. Welcome to you, sir. Ladies and gentlemen, we also have senior industry experts joining us this morning for this session. Shri C.S. Shetty, Chairman, State Bank of India. Welcome to you. Mr. Ashish Kumar Chauhan, Managing Director and CEO, National Stock Exchange. A warm welcome to you, sir. And the moderator of the panel discussion of the session, Madam Ira Dugal, India Financial News Editor, Reuters. Request you, ma'am, to please join us. I believe she'll be here shortly. So, ladies and gentlemen, over the last decade, India has emerged as a beacon of economic growth, showcasing an impressive average annual growth rate of around 7% despite global headwinds due to geopolitical factors, increased inflation and the like. As India aspires to become the third largest economy by 2030 from the fifth largest economy presently, the role of financial sector and foreign investments, both FDIs and FIIs, will remain extremely important. The key objective of the summit is to identify and explore various sources of funding for sectoral and overall growth of the economy by bringing together key stakeholders at this common platform. With those words, I call upon Mr. Chandrajit Banerjee, Director CII, for the introductory remarks. Sir.
A very good morning, ladies and gentlemen, and it's a proud privilege to welcome each one of you to this very well-timed Financing Summit 3.0, preparing for Viksit Bharat. And it's a singular honor, if I may say, to have Dr. V. Anantha Nageshwaran, the Chief Economic Advisor, to have led this summit, given so much of time during the last few months and weeks to see to it that we shape the content the way it is today, and to see such high quality presence in this room. It was his idea to have this deliberation and discussion in Mumbai. So indeed, a pleasure to have worked with him. And of course, as you heard, Mr. Sanjeev Bajaj. Sanjeev's been co-chairing the summit with Dr. Nageshwaran, which has led to such a very good output in terms of the content and participation. So welcome Dr. Anantha Nageshwaran, welcome Sanjeev. Thanks for being here. And I would really like to also welcome each one of you who are in this room. This is a very hand-picked, if I may say, audience. We are indeed privileged to have such great leaders from the financial sector and some of the best minds. And incidentally, I was telling Mr. Sethi, the chairman of the SBI, that this is your first public function for CII after assuming this phenomenal role. So congratulations, and I'm hoping to see you many more times at the CII event. But a very old friend, Ashish Kumar Chauhan. Ashish, has always been a pleasure working with you on many many areas. And Ira, who I was asking whether her questions would be too difficult or to answer, I request you to make it very difficult for some of these panelists led by the Chief Economic Advisor. Ladies and gentlemen, if you see the forum's title, the way we have done it is, of course, Viksit Bharat, and we look forward to the Chief Economic Advisor's inputs on whether India's financial sector is geared up to support this and look at sustained level of high growth and what's the role, I mean, his perspective and how he sees from his prism as to what's happening. And as I was saying, one of the things that the Chief Economic Advisors have been doing, and if I can say it in 3 C's, one is his collaboration, as I have seen, with industry and with many sectors of the economy. The way he has collaborated to get views, ideas, inputs, and then sort of deliberate on it, always open to idea. And the second part, which has sometimes been difficult for us to navigate, are the challenges that he has thrown to the industry from time to time, saying that why is this not being done, and why do we think in spite that certain things have not moved. But the third thing, the third C, which I have seen in him, which has really bolstered much of what's happening, is his confidence on the Indian economy, his confidence on the various stakeholders, his confidence on Indian business. While he has, if I can use a fourth C, which is that he is a crossover from business to government and from the private to public service. But his brilliant mind of economics and his rich experience in key economic policy areas would today, of course, be of great value as we take the couple of days today and tomorrow forward. So I will just really like to stop here, because this particular summit, which is, as we have said, the Financial Summit 3.0, we would deliberate, discuss, and at the end of the 2 days, come out with, as I was talking to some of our leading speakers and the co-chairs, not just come out with recommendations, but also keep some questions alive for further deliberations in the times to come. I'm actually also very happy to see, as I was speaking, some of our friends from the consulate generals to be present here, and the consul generals. I really appreciate that. So, ladies and gentlemen, once again, welcome to this summit. Thank you.
Thank you, Mr. Banerjee, for the initial remarks. I will now invite Dr. V. Anantha Nageshwaran, Chief Economic Advisor to the Government of India, for his presentation.
Yeah, for moving forward, right, for going back. I know. Okay. Thank you. Good morning to my fellow panelists on the dais, and good morning, ladies and gentlemen. We have gathered here for a conference that deals with the crucial and pivotal role the financial sector could and should play in ensuring the country's sustained and sustainable development. This is not just a topic for discussion, but a call to action for all of us. All of you assembled here have a very crucial role to play in this conference. The comprehensive schedule is before you, covering all angles and considerations by which the financial sector can be a valuable aid to the real economy. Your insights and contributions are very eagerly anticipated, and I look forward to the deliberations as you are. I thank the CII for organizing this event. It is very timely, and thank you for inviting me to co-chair the conference. I look forward to a lot of learning. Before I proceed further with the substance of my remarks, I would like to state that these are my personal views and not that of the Government of India. I want to take a step back or step higher from looking at the specifics of the financial sector's role in the macroeconomy. And I would like to invite the audience to journey back with me to the years before and after the global financial crisis of 2008. Time erases memories and habits return, mostly bad ones. Notwithstanding the lessons available from history, most of us insist on repeating the mistakes ourselves. Our policy models and mental models must retain the memory of financial follies committed by others because we can do better than repeating them. This speech, therefore, is a small attempt at minimizing the chances of those happening in our country. The Indian financial sector is poised at an important turnpike moment. The dominance of banking support to credit is being reduced and replaced by the financial sector, both with its products and participants. This is a long-awaited and welcome development for a country that aspires to be a developed nation by 2047. The challenge is to ensure that the sector grows in size and importance. As it does so, that it avoids the mistake that their counterparts in many advanced economies have committed over the years and continue to do so. Therefore, I'll confine my remarks to what we need to avoid doing rather than spell out what we ought to be doing. The rest of the conference will take care of the latter aspect. First, it is important to remember the financial sector shoulders a much higher responsibility than other sectors. The big difference between the financial sector and other sectors is that the consequences of what happens in this sector reverberate throughout the economy and beyond, carrying therefore a significant weight of responsibility on its shoulders. We know that when it comes to trade, globalization has slowed or is in the process of slowing, but global capital flows are going strong. As you can see here, the global merchandise trade volume growth used to be between 5 and 10% or even 15%, coming down to below 5% and now trying to stay above the zero line. However, if you look at the portfolio flows to emerging economies, while it might have dipped during the pandemic time, by and large, and also because of higher interest rates in the US and developed countries in the last couple of years, by and large, capital flows have not really seen the secular decline that we are seeing in trade flows. Global finance continues to dominate. Global credit rating dominates. But actions, fiscal, financial, and monetary policy decisions are local. Recognizing this incongruence or non-compatibility is important. Therefore, building resilience and domestic strength matter to us. Equally, retaining policy autonomy and space to insulate the economy from the vagaries of global capital flows is critical. As a country that runs a modest current account deficit, India relies on global capital flows. But India has one of the brightest global economic growth prospects. It is up to us to sustain it, and it is also up to us to use that to our advantage in carving out policy space for ourselves. In short, the country has to find and treat the fine balance between national imperatives and investor interests or preferences. Of course, it also means becoming a global agenda setter rather than an agenda taker. That will be a good thing. While some actions can be initiated now, such as, for example, an Indian entity making the effort to become a global credit rating agency, the outcome and the impact will take much longer to materialize. It is also largely endogenous. That is, our economic growth, economic size, and economic clout will influence our ability to become a global agenda setter and that in turn will favorably impact our economic performance. We have to work on both, therefore, simultaneously. But agenda setting aspirations cannot run ahead of acquiring economic strength, size, heft, and vitality. The advantage of being a global agenda setter is evident in the case of the United States. The US ran fiscal surpluses in the last 4 years of the last millennium. It continued a bit in 2001 as well. Since then, fiscal deficits have been the norm. And in the last 4 years, fiscal deficits have topped 6% of GDP. However, the 10-year Treasury yield then was 6.4% in 2000, and now it is below 4%. What has driven the bond yield is not, therefore, fiscal deficits or government debt, but the Fed's monetary policy and market expectations. That is why the Chicago Fed National Financial Conditions Index is what it was in 2017. For the most part, in the last 30 years, financial conditions have remained easy and accommodative in the United States. In other words, what you are seeing on the right side of this chart, the tightening of monetary policy undertaken since 2022 is not seen in the Financial Conditions Index. Financial markets, therefore, are not the most reliable barometer of risk and reward. If they are not, they cannot be trusted to direct available savings to its most efficient applications. There is a secondary tendency related to that towards short-termism, narrower horizons, and investment windows in markets today. I remember reading in a World Economic Forum post that in the United States in 1970, companies included in the S&P 500 had an average tenure of 35 years. By 2018, the average tenure was down to 20 years, and by 2030, it is expected to fall below 15 years. That is also now reflected in the investors' holding periods, which is now considered to be below 1 year, probably close to 6 months. To be sure, there are long-term investors whose horizons stretch to several years, but the vast majority of investors today have much shorter horizons. Evidence from markets in advanced countries suggests that the probability of earning positive investment returns increases with the horizon. The shorter the horizon, the probability of losses increases, and the size of those losses also increase. This is far truer for derivative instruments than it is for underlying assets. Indeed, shorter horizons and more active trading have immensely benefited financial intermediaries. In the 3 years between FY20 and FY23, corporate profits before tax in India went up nearly 4 times. But excluding the financial sector, those profits rose only 3 times. Evidence from the global financial crisis of 2008 is that when the financial sector is in excessively robust health, the health of the rest of the economy becomes more fragile. India's stock market capitalization is around 140% of GDP. The record profitability of the Indian financial sector and high levels of market capitalization, or the ratio of market capitalization to GDP, give rise to another phenomena which deserves closer examination. When the market becomes bigger than the economy, it is natural, but not necessarily reasonable, that the considerations and priorities of the market dominate the public discourse and also influence the policy discourse. I am referring to the phenomenon called financialization, or the financial market dominance of policy and macroeconomic outcomes. In brief, financialization is the dominance of financial market expectations, trends, and importantly, interest in public policy and macroeconomic outcomes. As India looks ahead to 2047 with optimism and hope, this is something it has to avoid, because The consequences of such financialization is there for all to see in the developed world. Unprecedented levels of public and private sector debt, some visible to regulators and some not. Economic growth dependent on continued increase in asset prices to offset the leverage that have built up, and hence a massive surge in inequality. India must be wary of these outcomes and avoid this trap. Developed countries are encountering these challenges after they have become materially prosperous. Per capita, India is just about stepping into the lower middle income category. Therefore, as we deliberate on preparing our financial system to support our economic aspirations, India can ill afford the financialization and its ramifications that afflict advanced societies. In other words, we cannot afford to let the tail wag the dog. In a paper that they wrote in 2012, Professors Stephen Secheti and Karubi wrote that the relationship between the financial sector and productivity was inverted U-shaped. Their interpretation was that because the financial sector competed with the rest of the economy for scarce resources, financial booms were not, in general, growth enhancing. Ensuring that the dog is always ahead of the tail entails having a proper policy approach to financial innovations and compensation in the financial sector. Both are interlinked. In 2012, in the aftermath of the global financial crisis, Professor Eric Posner of the University of Chicago proposed a financial products authority along the lines of the Federal Drug Administration in the United States for approving financial innovations. He hoped that such an authority would take a net benefit cost approach to financial innovations as the FDA does to drugs. The crucial test is whether a financial innovation, product or process, advances the efficiency and the effectiveness of the savings investment intermediation function of the capital markets. A close look at the financial or compensation incentives of those who propose or sponsor the innovation will also help decide whether the financial innovation is a net positive contributor to social and economic welfare in the country. In his landmark speech delivered in July 2008 in Manchester, Dr. Y.V. Reddy, the former Governor of the Reserve Bank of India, remarked, and I quote, "In particular, it may be argued that the incentive frameworks for financial intermediaries appear to be disproportionate to their conceivable contribution to the economy. The arguments in favor of persevering with financial innovation and urging regulators to continue to give priority to facilitate innovations should be viewed in this context." Unquote. I would add that the consideration of crypto assets as investment option and the recent discussion in India on retail participation in derivatives must consider Dr. Reddy's wise words and Professor Posner's proposal. I think I'm running out of time just as well. For the most part, India has charted its own path in social, cultural, religious, and economic affairs over the centuries. It has to have the courage of conviction and awareness of the socio-economic context of a low, middle income, and aspiring large population to repeat that feat with respect to the financial sector. Success in this endeavor, which requires us to learn from the mistakes of others, will enable India to be a true Vishwaguru to emerging and advanced economies in ensuring that the financial sector remains the servant of the real economy. Thank you very much.
Thank you. Thank you very much. That was really a great exposition and really provokes a large number of thoughts. And I'll keep that for later so that we can get as many people in for this discussion. But before I turn to Ira Dugal, may I ask the other co-chair, Sanjeev, in case he has some quick comments to make before Ira starts shooting.
Sajeev?
Morning, friends, and my own warm welcome to this Financing 3.0 Summit. And what a way to start this morning with a power-packed panel. Not only do we have the Chief Economic Advisor with us, we have the largest bank with us, we have the largest stock exchange with us. We are going to be moderated by one of the largest and oldest news services, not only of India, of the world. And all this organized by the largest industry association that we have over here. So there's no way this can get better. Now, just a few quick points. We are all aware that the financial sector plays a very important role in any economy, and that's no different from ours. Whether it's banks, insurance companies, asset management companies, over the years has helped our economy grow from about a $350 billion economy in the 90s to the 3.5 trillion that it is today. We are also seeing how technology, led by the digital world, led by the India stack, is transforming our economy and is transforming financial services. So there is a lot that is happening, and yet there is a long way to go, especially in our dream towards Viksit Bharat. So let me touch upon a few things. If you look at our rate of domestic credit to GDP, how much is that credit available to us? We are in our mid-30s. The US, the UK are between 70 and 80%. Clearly, we have a long way to go. Of course, we have to make sure that this credit availability comes with the right quality. Next, our biggest growth engine is the MSME sector. It accounts for 30% of our GDP. And yet, the access of formal financial credit is available to less than 15% of MSMEs. And that means there is a gap of 25 lakh crore of credit to MSMEs. And this is not according to me, but the Finance Committee report of 2022. Third, we have a large stock market. And everybody over here thinks overnight we can become millionaires. Of course, some are billionaires who become millionaires. But our larger capital markets are still underdeveloped. For example, our bond markets have a long way to go. If you look at our insurance companies, our pension businesses are still very small and are further restricted by limitations on how they can invest for the long term. And fourth, we will need greater harmony between our various regulators to ensure that our policies, while robust, allow for innovation and are aligned. And let me share with you 6 quick thoughts on how I think we should move forward. We are all seeing in the last decade or two that a number of Indian corporates have not only built scale, but have also gone global. We have to ensure that we have many more financial services institutions that can match them in scale, in capability, and in ambition. Next, we need much greater spread of financial services, whether it's banking products, insurance products, mutual funds, others, pension products. We need to make sure that these permeate all across the country, whether for the individual Indian, for the MSMEs. And in these times where the transformation to a greener earth is very important, we need to channelize green financing to them as well. Third, I talked about the fact that we need a larger corporate bond market. And we need to do this by facilitating new products, by bringing in additional industry participants into it. There is no reason why banks should be lending for long-term projects. They're actually ill-suited because there's a mismatch between the assets and liabilities. This has to come from the debt markets. It has to come from insurance and pension money, and it's our responsibility to facilitate that. Fourth, we've seen the massive technological and digital change driven all around the world and in India. And this is where both the government and the regulators have a very fine balance in promoting innovation, but at the same time controlling risk. The digital age has also exposed all of us, whether as corporates or as individuals to cybersecurity and data security risks. And this is where the government has released their DPDP Act, and I hope to see rules around it coming sooner than later so that it helps us create a more robust system. New and emerging technologies also mean greater transformation, but this also requires continuous upskilling in jobs. It requires significant increase in financial literacy and awareness. And this is not the responsibility of only the government. It's the responsibility of each one of us as businesses. If we want to do more business, we want to do well, it's also our responsibility to take others, whether our own employees, whether every citizen, or small businesses that work with us together. So let me conclude by saying that for banks and other financial institutions to play this critical role in taking India forward, it is going to be preeminent that we continue to streamline, harmonize, and align regulations with best practices so that we can reduce the cost of compliance. We should not forget that for our ambitious dream for a Viksit Bharat, this will hinge significantly on the robustness, the scale, and the ambition of the financial services system. Thank you.
Thanks so much, Sanjeev. And now I really give it to Inaugural, as you described, as the largest and the strongest person on the dais to really question this eminent panel.
That's excessively kind. Some of the excesses on the financial sector reflecting in that phrase. But thank you so much. So I think we've been set up in a lovely fashion with Dr. Nageshwaran talking about what the financial sector may need to avoid or the follies they may need to avoid, and then by Mr. Bajaj on what direction they need to go in. And I think we'll try and keep this conversation a mix of that. But Dr. Nageshwaran, my first question is to you. Your comments as always have layers and layers, and I'm going to try and pin you down on one of those layers. Your comments were made in a wider context, but I'm going to try and pin you down into India. You talked about the fact that financial booms are not always growth enhancers. Let's talk about the nature of the financial boom that we are seeing in India right now. Whether it is on the equity market side, you described it, I won't take up too much time. We all know what's happening there. Whether it's on the banking side, again, very retail driven, very driven by credit for consumption from everything that data tells us. At this stage, as you look at the various aspects of the financial boom in India, do you think they are not adding to growth? Are they subtracting from growth, given that these can lead to follies in the future?
Thank you, Ira. So I think the key word in anything is, of course, the balance.
In balance, yes.
So right now, I think since we are starting from a low base compared to other countries, we have to say that the financial boom or the financial inclusion that it has led to has been growth enhancing. The point is at what point it turns out to be growth subtracting, not growth additive, but more of a growth drag. I think we should be mindful of not crossing that path. But right now, I don't think there is a situation that we should worry about that it not being growth enhancing. And even the paper I referred to by Professors Secheti and Korubi said that there is an inverted U-shaped relationship. There is, up to some point, it does contribute. And beyond a certain level of financialization of the economy, it tends to become a growth drag. But we have not gotten there. But the reason why I therefore made those remarks is that as the market capitalization and as the emphasis on very short-term oriented financial products come into the market, etc., there is a risk that we end up repeating those mistakes, but we are not there yet. And not in a systemic level. And that is the reason why I said, therefore, we should be mindful. But right now, I wouldn't think that the financial sector's great performance and the inclusion it has spawned has so far been growth enhancing.
but you would like to see it broaden out, and we'll get to that through the panel. You would like to see that boom broaden out beyond the sectors we are seeing it in.
Absolutely. Not only broaden out, but also in terms of the kind of horizons that we get people to participate in the markets, longer horizons, not day of the week or the last hour kind of products. And more importantly, we need to ask ourselves the question, what is the leitmotif of the financial sector? It has to be about channeling savings into its most efficient applications. Is that happening? So that is the yardstick by which we need to ask ourselves. And in the US, for example, until 2008, between 2000 and 2008, the share of profits of the S&P Financial Index was rising much faster than the share of profits of the rest of the S&P index. And sure enough, it was a case of an excess, financial excess. And we need to always have internally people asking these questions within the financial sector so that we are able to keep this concurrent growth of both the economy and the financial sector going for a very long time, rather than seeing one outrun the other and therefore topple the real economy.
I think that's a cue to bring Mr. Chauhan in, since that seems to be sort of the most headline-grabbing part of this financialization that we are seeing right now. Mr. Chauhan, as you apply the lens that Dr. Nageshwaran is speaking about to the equity markets, what do you come away with? Do you come away thinking that this sort of endeavor of channelizing financial savings into the right parts of the economy, the productive parts of the economy, is being met partially, or not being met at all, given what you're seeing on the equity side?
Broadly, of course, the economic theories say that the good markets are good for the economy. And in some ways, it's also said today also that Indian markets to GDP ratio is 1.4. Which is actually comparable to rest of the world. But if you look back at the traditional, what I call long-term numbers, it's actually amongst the highest in the world today. It's also reason because the world has, in a way, moved to faster moving technologies. So that's where basically, and very little capital is required to create more capital. The entire concept of capitalism was basically about putting a lot of money to create some profit. That is the sort of framework, the capitalism which Karl Marx saw and all of us adopted over the last 120 years. And it required a lot of capital. Countries like India were traditionally capital starved, post-independence and pre-independence. And that's why we had very few capital intensive industries. And slowly the technology changed. And today the new framework has come up, which is basically what I call capitalism with very little capital, or capitalism without capital, where you need to put in little bit and you get to create great wealth. And that has happened to many companies. Some of them, of course, go down. We have seen over the last 2, 3, 5 years, even 10 years, that many of those companies have gone down, and we tend to focus on those bad examples. But then there are many good examples which have set up with very little capital, have become very large, and of course, good market capitalization. And that's why I'm trying to differentiate between the traditional wisdom vis-a-vis the current wisdom. Why? The second part is also interesting, that from 1991 to 2014, we were, at least I would have participated in few thousand seminars about financial inclusion, which is also a similar word for financialization. When you do too much financial inclusion, it becomes financialization. That is how now I have come to know. But we were just making noises and nothing was happening. And we were actually ruining the opportunity which India had of financial inclusion. Once 2014 came, all the Jan Dhan Aadhaar mobile came. And now we have a lot of people participating. And we are now saying, now too much of good thing is bad, which is actually true. But we also need to figure out that has world changed? Can it be reversed? Or can it be used for actually productive purposes? The third portion which came about, saying that some of the people have postulated, and some important professors have postulated, that because you have too much of financialization, the country's debt increase and the corporate's debt increase. In India, both have not been true. country's debt to GDP has not increased as much, nor the corporate debt. In fact, India's banking system total size vis-a-vis GDP is now less than half. While as China has probably 3 or 4 times, America has 3 or 4 times. And that's where, for me, if you control those parameters, that the corporates don't become indebted compared to what they need to, and if you continue to take advantage of the newer technologies, which allow you to create huge wealth with very little capital and allow many more experiments, I'm sure our capital markets can play a greater role. And that's what they have done with Zomato, with Swiggy, whatever. I mean, you can say many such examples where they have been able to create great wealth, great new models, and we need to be aware and also try to channelize rather than trying to think, how do we stop this? That's how I would like to put it in a nutshell.
Okay, so you're saying, sorry, go ahead.
Go to the next question. I just wanted to bring up one last, this is the slide that actually vindicates the point that Ashish was making. What you see here is the overall credit given by the entire financial sector, not just the banks, to the economy, excluding the government. So the source of funding is banks, non-banks, foreign sources, etc., which is the line. So in the case of China, what you see is bulk of it is actually coming from domestic banks, which is the blue bars. In the case of the US, the bulk of it is coming from non-banking sources, which is why the gap between the blue and the brown is very large. In the case of India, it seems to be at the moment a good balance. So I think we need to make sure that both the capital markets and the banking sources of financing both grow in tandem, rather than the top two being excessively unbalanced towards one or the other. So India needs to watch these two as extremes that we need to avoid. Thank you.
No, okay, so that we have to maintain that very fine balance, which brings me to the bankers on the panel, Mr. C.S. Sethi and Mr. Bajaj. Mr. Sethi, to you first. On the banking side, if that graph was subdivided over the last 5 years on where that banking capital is going, we know there has been a skew, and the skew that not everybody is comfortable with. It's been very heavily driven towards retail, maybe not by your bank, because, you know, nature of your bank is that you have to lend to everybody, but has banking grown in tandem with the economy and contributing to the economy's needs in the right way, particularly in the last 5 years as we have sort of come out of a bad loan cycle and started to sort of ramp back up?
Yeah, I think a couple of points what Dr. Nageshwaran, Mr. Chauhan and Mr. Bajaj have mentioned. If you really see the way the financial services sector, I like one statement Dr. Nageshwaran made. The financial sector displayed greater responsibility. I'm very happy to hear that, sir. I think because there's always a feeling that there have been excesses. The asset quality review of 2015 and subsequent NPA recognition, recapitalization of public sector bank, resolution which is under IBC, I think the shift from the corporate banking to the retail personal has significantly happened. It should have moved to MSME and agriculture, obviously, the small value loans. It did not happen because one is conventionally these sectors were not too formalized, and they had their own issues of credit absorption, which has dramatically changed post digitalization, number one, and post formalization, GST, for example, today. So to come back to your question, that yes, there has been a shift, obviously. If you see the composition of many of the balance sheets on the asset sides of the banks, predominantly retail personnel, home loans and other things. But what we are seeing that the formalization, digitalization has helped us to devise models today to reach out to MSMEs which were not otherwise getting the formal credit. Again, to quote Mr. Bajaj, he was saying, I think a significant part of MSMEs are still not covered. There are three issues other than credit, in my view, what MSMEs require when we want to broad base the credit deployment by everyone. I think the banks and financial institutions seem to be gaining confidence in lending to this sector because of the formalization. But what is more required from the MSME sector, particularly if they're aiming at scaling up, is that credit is important, governance is important, technology, and market linkages. I think these are the four items which are the pillars for MSMEs to grow. We all keep talking about MSMEs requiring credit. I'm not undermining that credit requirement. But credit absorption also is dependent on three other pillars which we keep talking about. I think it is important to work on that. And the financialization, what Mr. Chauhan has been talking about, I think is inevitable as the economy develops and progresses. It has been traditionally a banking-led economy as far as the savings is concerned. Now some of the savers are getting converted to investors. The moot point would be that how do we bring this money, which is going to pension funds, insurance, and the equity markets, into the capital formation. And one suggestion, what Mr. Bajaj has mentioned in terms of the deepening of the corporate bonds. There is only so much the commercial banks can do on the corporate bonds, for the simple reason that if we have an exposure to, say, Bajaj Finserv, our exposure, whichever form it is overall large exposure framework. So it is important that non-bank participants have to come into the corporate bond. If the savings are going to insurance and mutual funds and the pension funds, they have to have products to come into the corporate bond market. I think is very important. That is how the capital will come back. Otherwise, we keep talking about how the deposits not growing in the banking system is going to impact the credit growth. So the credit growth probably would be driven by all the financial sector players, not banks alone.
Fair enough. Mr. Bajaj, I'll come to you on this point about SMEs. We've spoken about this for so many years, and we've heard so many banks, non-banks talk about focusing on lending to SMEs. Firstly, there's no data, so we don't know whether the inclusion on SMEs on that segment has improved or the exclusion has come down. And I really wish there could be some way to analyze data, Dr. Nageshwaran. I'm sure you have more access to that. But to the point of what is driving this exclusion, which we all assume is continuing, it's not lack of will to lend. It is obviously still lack of absorption capacity. We're talking about a new credit model. Is that the answer? Is distribution the answer? I just feel that after many years, we have to now sort of narrow down on where the problem is to try and solve it.
So, Ira, as you mentioned, there are a number of issues that drive this lack of penetration. But the simplest is not enough competition. Look at banks, NBFCs, including ours, including SBI, over the last 6 or 7 years. Look at our balance sheets, look at our P&Ls. Let the one COVID year maybe be put on the side. Everybody has done very well. The selfish answer is, why do we need to do more? Only when MSMEs have 3 banks and NBFCs standing outside to lend to them can we say that there is enough credit available to them. I don't mean enough actual capital being available, but nobody needs to work hard because there is enough other easier ways to lend. Now, the digital stack is making a big difference. ONDC as a marketplace is going to make a big difference. The account aggregator framework released by the government is going to democratize. Actually, other than State Bank of India, everybody else will benefit. They are so big that they may only lose some of their customers there. But by doing these and by encouraging the growth of new banks, new NBFCs, this is how you will see greater credit go into the market. And look at what happened in the retail segment in the last 15 years. Bajaj Finance's success and that of many other NBFCs and the tremendous transformation that an SBI can do on the digital side has only happened because of greater competition and the growth of India's economy, the growth of per capita GDP, so the earning power and the spending power increased, and the digitalization of financial services in India. So what we have seen happening in retail now needs to happen with the SME, MSME sector.
Fair enough. Mr. Chandrajit Banerjee, if I can bring you in as well, would you put that at the top of your list in terms of priorities? I won't call it reform, I'll just call it sort of policy priorities for the government, for the financial sector, this whole SME piece.
Yeah, of course, because, for India's small and mid-sized companies to be a part of the entire success story and to be linked to the supply chain and with the challenges which are coming forward, I think areas like green financing, the transition to on digital transformation to say, and when we really talk about areas of ESG, all of that, the play for the SMEs are becoming critical. And of course, the issue of the absorption capability, that's challenging, but the role of financial institutions also become critical into seeing how we are able to really reach not just the small size, mid-sized companies, but even actually we get the micro to be competitive and to be plugged in well into the supply chain. And I think institution like ours, along with the financial institutions, have a huge role to play in making it happen. And I think there is a lot which has happened as we've seen in the last few years when we have looked at how the financial sector has played a role on through technology and through digitization to reach out. But I think there is a lot more to be done, because that's something which is required. And I'm particularly worried about those two areas which I mentioned in the beginning. That is about the green transition and also technology adoption. I think that these are going to be critical challenges as we go ahead for the SMEs. But I just wanted to, Ira, with your permission, take the advantage of this high-powered panel, and also, one of the things that the Chief Economic Advisor pointed out during the presentation was the capital flows to the emerging markets, which has actually remained pretty healthy, as you have said. And with the US Fed now really looking at, the rate cut over a period of time, how can the emerging markets tackle the challenge of the likelihood of a sharp rise in the capital flows of the economic parameters, including exchange rates and all? Now I'm asking this question to you.
That's yours, Dr. Nageshwaran, to answer. No, that's to you entirely.
No, I think before I answer CB, I have to add one more disclaimer, because in my initial speech I said my remarks were personal in nature. Now he's asking me to go back to wearing the hat that I wore for about 17, 18 years before I stepped out of that role as a capital markets participant. So I think you are right, CB, with the expectation in the market very clearly embedded that the Federal Reserve will be easing, and in fact the market is betting that the easing cycle will be both sharp and aggressive. I don't know about that, but if that is indeed the case, and the good emerging market credits will definitely see capital inflows, which means we have to be very sure about the ability of the economies to absorb that capital productively. Again, I go back to the 2003-8 period. India experienced a massive surge in capital inflows, and some of it couldn't be digested. Of course, now we are a much bigger economy. We can do that better, a lot better than we could do at that point in time. So I don't think the risk of the episode of 2003 to 8, a surge in capital flows leading to unproductive investments, that probability is on the lower side. However, and I mean, as economists are always supposed to speak with two hands, not just one hand. On the other hand, therefore, I have to say, if the Fed rate cuts also end up sort of getting coinciding with the rise in risk, rise in uncertainty because of geopolitical events, then the question is whether the rate cuts in and of themselves will necessarily result in capital flows, because other things are not remaining constant. So the last time when the Federal Reserve had its massive rate cut cycles post 2008 crisis or in 2001 and 3, etc., the global political environment was nowhere near as fraught as it is today. So therefore, it is going to be a big question mark whether this time around the rate cut cycle will lead to a big jump in capital flows as it has happened in the first decade and the second decade. Therefore, I think emerging markets should not be betting on it. And if it does happen, then the question is, we have to make sure not just India. India has done a much better job than other countries. We have to make sure that it doesn't lead to one more cycle of accumulation of hard currency debt, resulting in debt distress down the road.
Okay, I'm sorry. I'm going to go back to my sort of banking question. Dr. Nageshwaran, what is the role of government in this, in ensuring sort of, credit flow to productive sectors? We are talking about SMEs. So there, I think some announcements were made in the budget to try and speed that along. Is it the government's role, or should it be an entirely free market mechanism to see where the credit flows to these segments? Also regulation, right? I mean, for years, for decades, we've had priority sector. We've tried differentiated banking models, not sure they've entirely worked. Do you see a substantial role for the government at this juncture, or government and regulation? Dr. Nageshwaran, that's to you. Yes.
No, I think the role of the government should probably be more limited than what it was earlier, to make sure that the regulatory aspects are well taken care of. Having a well-regulated market is not the same as an over-regulated market. I concede that. I think Mr. Sethi made very interesting points for MSMEs, that they need credit governance technology and market linkages. And Bajaj, Sanjeev also pointed to the fact that what has been happening, the digital stack helping financial inclusion of individuals can actually now diffuse down to the SMEs as well. I think, but the regulatory framework where we apply some of the Basel norms, etc., for SMEs as we do to other normal credits, I think that we can become a little bit more tailored to Indian context. That has not yet happened. And then the other thing that can happen, and this is not necessarily the government's area. The second area, which is also unrelated to government, is the corporate sector, the corporate customers, whether it is public sector or private sector, they must take to the discounting of invoices in a much more massive scale than they have done so far. So if that happens, and if MSMEs working capital cycles improve, actually the access to banking finance also will improve. So there is a sort of a chicken and egg situation here. And in both these matters, I think the role of the government per se is relatively small.
Relatively small. Mr. Chauhan, actually on the equity capital side too, we've seen some positive development with smaller companies get access via the SME platforms, although there's nervousness there because, some of the numbers and examples that you see around could point to risks building up. What's the balance there as you watch that segment? There is genuine activity which is encouraging, but there is some need for sort of either exchange or regulatory intervention to ensure that, boom and bust cycles don't happen, because those bust cycles can do a lot of damage then.
No, I think, it seems to be emerging that the too much of good thing is bad. And so too much of SME sort of framework also, SMEs getting too much funding or their prices going up is also bad. And that's what creates apprehensions across, saying there is a runway growth there and we need to be very aware and take actions against. So somewhere the balance, as Dr. Anant Nageshwaran said, that we need to be somewhere in the middle path. And that's what both exchanges have tried to do. In fact, if you recall, around 94, 95, that is 1994, 95, there several companies came to markets, they took the money, ran away, they were not to be seen, they were known as vanishing companies. So both exchanges stopped taking the prospectus for small companies together. And then in 2007, the industry bodies like CII and others took up with government, saying there is a legitimate need for small companies also to raise funds, because when they go to take funds from the banks, banks also ask for debt equity ratio. And if there is no equity, how do they give debt? And that's where in 2010, government came out with the regulations that you need to have. Small companies also allowed on stock exchange to raise equity funds. And so in 2012, finally the first company started getting listed. Now almost 1,000 companies have got listed in small markets. Many of them, as expected, have not done so well. Some of them have done very well. But overall, there is a perception that currently in a situation where markets are doing very well, many of the fly-by-night or not so good businesses are also coming, and some examples are also being given in newspapers, which are correct, and that's where the exchanges are taking cognizance. SEBI has also over the weekend made a statement that they are going to come out with new regulations on SME, which will be much tougher. But exchanges, at least NSE, has brought the bar up several notches, and will continue to do that going forward as we see that euphoria building up. So for me, we will have to continue to maintain that balance, and it's not easy to maintain, because one side you go, people criticize you, the other side you go, people criticize you. So in some ways we are there to be criticized, and we would of course seek the suggestions and continue to work despite whatever criticism even coming from ERA. So that's how our job is, and we need to continue to do our job.
Balance, it's tougher to get than to speak about. I'm moving to one other issue, and this is to Mr. Bajaj and Mr. Sethi. And this is not specific to MSMEs. This is the question of whether one model will answer all the financing needs of the economy. It could be an SME, it could be green financing, it could be other infrastructure financing. Mr. Sethi, we have experimented with differentiated banking models, some under banks, some under non-banks. Somehow, we come right back and say that all that's going to work is a universal bank. So what is the answer? That banks have to build this capacity in-house, but you need different talent pools, you need different credit appraisal skills. Is that the only answer? Because if we go right back to talking about differentiated banking so soon after the last sort of round has not been wildly successful, I'm not sure we'll get any answers.
I think while we continue to work towards differentiated banking, what is important is how do we develop the skill set within the universal banks to handle. When we talk about the skill set, every activity of financing requires a different set. Absolutely. I consider even giving a home loan is not an easy task now with a highly competitive world what they are. We need to continuously innovate in terms of delivering the products. That is one. But when we come to the complex models of corporate financing, especially in the new emerging areas, battery storage or hydrogen, I think they also require capital going forward. While we expect that much of the capital probably would come from overseas and support the domestic capital formation, the universal banks are also expected, particularly large banks like SBI would have to play an important role in the infrastructure financing. We run the largest project financing department in the country today. And we find that despite our years of expertise in project financing, the skill set required to assess the emerging areas is still lacking. Absolutely. So a couple of ideas what we have is that whether we can set up a center of excellence on emerging areas and collaborate with both MDBs. MDBs also do a lot of work on these areas, and also some of the large MNC banks. We are working on that. Hopefully, I think that creation of specialization within the universal bank is need of the hour. And not necessarily in the large corporate lending, even MSMEs. Yes. MSMEs also, their requirements are going up. As I said, I still believe that a large bank like SBI should not only be looking at financing the MSMEs, whether we can handhold them in the three important other areas which I mentioned, in terms of governance, in terms of technology, what is that we can do? And one more important thing, what we must realize that I think financial sector is the most integrated sector technologically today. Mr. Bajaj mentioned in his opening remarks about cyber security. See, the integrated system which is developing among the large financial players, fintechs, corporates, MSMEs is creating the interconnectedness which is extremely becoming vulnerable. I think it is important that we also have to develop the skills internally across the industry, both in the financial and non-financial, that how do we handle this risk which is emerging on the cyber security. One example I can give, while the government probably may have to play a limited role in financing MSMEs, but there's a great amount of activities which they can take up. I happened to visit Canada recently. In the government of Ontario has floated a special fund to support the cyber security measures among the MSMEs. They first help them to understand what are the gaps, and if need be, they give some grant or something to encourage them to adopt the best cybersecurity practices. I think all the players, including CII, should focus on this critical feature, which is going to create, as we go for more and more digitalization. I think this is one important imminent risk which we need to handle.
Absolutely. And since both of you have brought this up, I'll definitely come to that. But Mr. Bajaj, NBFCs were supposed to do this job of differentiated sort of, models in some ways. Pick one area, focus on it, specialize in it. We've seen that just dissipate. Is it regulations that, NBFCs also being regulated more and more like banks and hence don't have that ability to differentiate? Or is it something else? Is it just, bad experiences that have gotten banks and NBFCs to all look the same in some ways?
So, the past always gives us clues for the future, but the past does not have to be the future. And to your earlier question to Mr. Sethi as well, there are already a variety of bank licenses.
Yeah.
You can be a universal bank, you can be a small finance bank, you can be a regional rural bank, you can be a cooperative bank, you can be an NBFC, a non-bank bank. So you have a variety of models already in place. What we have to ask ourselves is the model wrong or is the construct wrong? We know, unfortunately, most cooperative banks, regional, rural banks have stayed small. None of them have built top world-class success stories. Even a number of the SFBs have not done that well. I don't think the model is wrong. We have to question the construct. Do they have good quality management? Have they implemented good risk processes? Do they have a clear path to how they will raise liabilities? How do they manage asset liability mismatch? Is the senior management's incentives aligned to build a good long-term institution? Do they have the power to do that? We know if you're a cooperative bank, what kind of local influences come in. How do you expect these institutions to build good quality businesses? And we have a few great examples of, again, successful public sector banks. But there are many others that are not. And the same is true in the private sector. Yeah. So it's not that the private sector is doing everything well. So to me, it's a question of governance. It's a question of alignment of incentives with outcomes. And like they say, the old adage, Rome was not built in a day. It has taken us 17, 18 years as Bajaj Finance to build a reasonably good size, capable NBFC, and we still go to work every day as if it was day one, what Bezos says. Because the opportunity is so large that you know that you are going to get there, but you have to make sure you get there with quality, you get there with low cost, and as we are building good businesses, you also have to make sure you're not just creaming the top, but you're trying to do good social or do social good as well. And we have always believed that if we have to take financial services to the masses, this is not social service that we are doing. We're going to make money at the end of the day. We're not doing it as charity. Our CSR work is separate. But we have to find the right ways of doing it. We could very well have concentrated as Bajaj Finance in the top 200 cities and had enough business for the next 10 years. Because we are so small. Even today, we are 2% of India's banking credit. We are today in over 4,000 cities and towns because we believe that as we get, we must give. And I think it's a set of these capabilities that need to be built. Your type of license doesn't matter.
Exactly.
2007 is when I moved to overseeing financial services. By 2009 or 10, we had analysts, investors telling us, "Arey, you guys are getting into multiple business lines. NBFCs are just supposed to be in one. They're supposed to be monoline." And my question to them was, "But why do banks do so many things?" "No, but that is a bank." So I said, "But what is an NBFC? It is just another license." What we have shown is that you can build a robust, diversified lending institution with good quality. And we are nowhere near perfect. We have enough mistakes that we make every day. But we learn from them, we keep improving, because the opportunity has come in tremendous. And without complimenting the government unnecessarily, I must say that the government has been an unintentional to us, to the system, they're intentional, positive ally with all the digital infrastructure that got created, the economic growth. See, today we are feeling bad, first quarter 6.7% growth. Yes, we want growth to be 8, 9, 10% so that 50 million new jobs get created for youth so that they become consumers as well. But in this world, 6.7% is a very good growth rate. Not for us to go back to sleep. But let us also recognize the overall environment and where we are. So I believe there is a lot to be done, but it has to be done in a capable manner.
Dr. Nageswaran, just coming to you on two thoughts, actually, both what Mr. Sethi spoke about, trying to build capabilities in these individual industries. Maybe that's where the government can help, not in the financing, but in trying to build these capabilities. We talked about cooperative banks. Nobody even talks about the fact that we actually have a ready-made network out there if we actually want to go out there and lend to SMEs. We've never managed to do anything about that. Are there some of these sort of, blue sky ideas that we can work on?
I think in terms of the blue sky ideas, CB was telling me some of the initiatives that the Confederation has been undertaking, perhaps that really falls into the definition of what you would call blue sky thinking. Maybe we should hear him out on that.
Mr. Banerjee?
No, thanks. A couple of things where I think we look at beyond banks and NBFCs is where private sector also participates in it. So one of the things that we've started an institution, which is again a pan-India institution where we look at geographical as well as sectoral clusters, around 200 clusters now working, where private sector, large corporates comes into funding, into seeing how you can create efficiency and in many areas, including say exports and all for our small and mid-sized companies. But another initiative that we've just taken, and I was talking about the visit of the global chairman, managing director of Rockwell Automation, to say that companies like them and Indian companies to create clusters and of MSMEs in India, micro enterprises, mind you. We've adopted 5,000 in Tamil Nadu very recently, just about a couple of weeks back, to see how we can help them transform through private sector, sort of providing the full finance of their transformation, both in terms of their appetite and understanding towards not just technology adoption, but also to really be more efficient, because we also see employment generation coming from that sector. So private sector giving. In fact, it's great that Mr. Sethi is sitting here, because one of the models that we were looking at is a big company sort of instead of giving sponsorship to CII to do those 5,000 companies, and in each part of the country we are going to move around, we'll say we'll guarantee to the bank, and we want the MSME to actually borrow, so that they feel that they have borrowed and they have actually so if anything is free, sometimes it's not very good. So when the private sector gives it, it'll give it to us as a complete grant. So we want to be a guarantor, the large company, and the bank then gives it. So that's a model that we have just started working on.
Sounds interesting, Mr. Sethi.
In fact, again, when we come back to the credit absorption capacity, I remember one incident I would like to quote here. When PM Swanidhi was launched, everybody was very skeptical. 10,000 rupees, what is that? It is going to move the needle. And I was part of the scheme, devising the scheme. One problem what we faced is that how do we deliver 10,000 rupees, whether we should make him to sign a document or we just credit to his account, and anyway is identified by the local municipality or somebody, and is given an identification number. But we heard that the Honorable Prime Minister said that it should not be simply given to the credit, it will be seen as a grant. The person who is taking should know that he is being given financing, and he has to utilize the financing, and if he utilizes it and repays, and he should be given additional financing. And how do you bring, and in fact today, while the small value loan of PM Swanidhi, today the third tranche, fourth tranche, people are coming back and taking it. I fully agree with what Mr. Banerjee mentioned in terms of anybody should have a little bit of friction to get a money. I think that friction today is too high. That is the reason they're not able to get we have to reduce the friction, but completely eliminating the friction by getting grants and all is not good for us. But I still would like to say that while we are reaching the bottom of the pyramid, and the scalability is not coming because much of the time the credit also is required to be backed by collateral. This is the usual mindset. If you have to transition from a collateral-based lending to a cash flow-based lending, which is possible now with the data coming in, this transition also, I think the title what Dr. Nageshwaran mentioned, policy and mindset changes in financing, requires a mindset among the lenders. Yes. And before that mindset changes happen, a little bit of support from the guarantee agency is required. And that's the reason I think there's a budget announcement on the guarantee program. This guarantee, I say, will help the people to scale up. Yeah. And CGT MSC kind of guarantee play a very significant role in this. We internally in SBI believe that up to 5 crores, we completely want to move from a collateralized based lending to cash flow based lending backed by the guarantee, which will give enough traction to the growth of the micro enterprises to become small, small to become medium.
These guarantee agencies, I mean, there's been many views on it over the years, right? You have to make sure they're adequately funded. They can become sources of risk in themselves. Do you want to comment, Dr. Nageshwaran, on whether that's one route to take? And also credit enhancement agencies, if you look at infrastructure, we've struggled in setting that up as well.
I agree that there are, at the initial stages, you need to have some backstop mechanisms to catalyze the sector, and afterwards it can take care of itself. So, I mean, whether it is in ensuring that the guarantee schemes function, both in terms of capital infusion and also the mechanisms when you can invoke the guarantee, and therefore what it does to the RBI's treatment of those assets as non-performing or performing. It's all these things have to be consistent and aligned to each other. I mean, so just to quickly respond to your earlier question about I don't think we need more blue sky thinking as much as just making sure that what all we have put in place in the last several years function properly. So whether it is the insolvency and bankruptcy code, having enough insolvency professionals and making sure that we come down to 270 days as we promised earlier at the time of inception. So most of these things is about executing now rather than talking about blue sky thinking.
No, that's fair enough. Let's get what we have in place working. Last question before we sort of wrap up, because no financial sector panel is complete without talking about the lack of a corporate bond market. Or Mr. Ashish Kumar Chauhan, do you want to come in on that? We've seen good traction on the equity side, pretty much none on the corporate bond side. What's going on there?
In a way, corporate bonds are not easy to solve despite our, and it's also includes including the bank loans. The bank loans today, as a total banking system size as a percentage of the GDP is pretty much half or in that range, and much lower in terms of the percent of market cap, right? So why this happens is because if we cannot create a framework for banks or for the lenders via bonds, ability to take over the assets fast and kind of liquidate them in case of defaults. We will have, we'll continue to have many such conferences we'll have many more interesting news articles and papers published by all sorts of professors from across the world. If you cannot solve that, basically the issue of if Abhimanyu goes into Chakravyu by lending, how does he come out with whatever limbs left, So if we don't, for me, the bankruptcy code was a great beginning, but now we have made it reasonably ineffective because we are not able to do it very fast, although there has been good success vis-a-vis the earlier act called the SICA Act, that is Sikh Industrial Companies Act 1985. I used to be one of the users of that as a banker in my early part of my career. And so I know we couldn't collect anything, at least in last 10 years we have collected a lot. But if we can do a personal bankruptcy framework, if we can do a very fast moving corporate bankruptcy framework, and if we can do also a bankruptcy resolution framework for financial institutions. Somehow the financial institutions bankruptcy framework has been put aside because of whatever opposition that came about. But effectively, if we cannot have a good bankruptcy resolution framework, which is extremely fast, quick, and you can say that because only some of the institutions can do it or under certain guidelines. But if we don't resolve, my understanding is, why would person give money when they are not sure that if it doesn't come back, what is their recourse, right? And so we can continue to debate, discuss, and look very sort of intelligent. But if we don't solve basic questions, I have my doubts on this kind of markets coming up further.
That's for a different panel. I'll close off here, but perhaps I can request Mr. Sethi to help us summarize where we are at right now and where we're going. The reason I ask you is that you're taking over the largest bank. So in some ways, your priorities will tell us where the financial sector's priorities lie. So very short sort of summary, and then we can close off. He has taken over, yes.
Yeah, thank you, Ira. There are a lot of things that are happening in the financial services sector. I think there's never been a dull moment in financial services sector, for good or for bad. I think I'm entering, took the charge of SBI with a twin balance sheet advantage. I think while we keep talking about it, it's really is evident when we look from the top that today the corporates are stronger. In fact, a lot of corporates, when we talk about why the private capex is not picking up, I said that corporates have so much cash. They are actually first spending their cash. And then only if you are measuring your capex by way of corporate credit, it is not evident because they're borrowing. So I think the twin balance sheet advantage of banks being stronger now, financial service sector stronger, corporates are stronger, and the whole ecosystem in terms of financialization, digitalization, provides an ample opportunity for all of us. And the new age players can collaborate with the conventional, I don't call them old age players, conventional players, universal banks. I think this collaboration is going to be transformative. And the ecosystem like account aggregators, and many of them, how do we combine all of them in a very holistic manner, in a kind of self-regulated manner wherever regulations are not there? This will sum up the future of the financial services sector. In my view, it's a good time to be in the financial service sector. And how do we align the financial sector objectives to the larger objective of Viksit Bharat is something what we have to work quickly and with clarity. I think that would help the country as well as the financial service sector.
And how to avoid the mistakes of our past and others' past, as Dr. Nageshwaran themed his discussion. Thank you all so much for sitting through this. I hope it was useful. I'll hand back to Mr. Banerjee.
Thank you all for the engaging deliberation and enlightening insights. I request all of you to please come together for a group picture. Ma'am, please. Thank you all. With that, ladies and gentlemen, we conclude this session. Kindly allow us some time for a quick changeover. Check. Yes, thank you. So, ladies and gentlemen, we are not breaking. All those who have moved outside the ballroom requested to please come back and settle in your places. We will be beginning the special plenary session with SEBI, that is the Securities and Exchange Board of India, on regulatory landscape, what is needed for Viksit Bharat immediately. So all those who have moved out requested to please come back and settle in your seats. So ladies and gentlemen, we will have Madam Madhavi Puri Buch, Chairperson of the Securities and Exchange Board of India, as also Mr. Sanjeev Bajaj, past President CII and Chairman and Managing Director, Bajaj Finserv Limited, and Mr. Chandrajit Banerjee, Director General CII, joining us in this special plenary session, which will begin almost in the next couple of moments. So all those who have moved out of the ballroom, I once again request you to please return to your seats. Thank you. Ladies and gentlemen, I announce the arrival of Srimati Madhavi Puri Buch, Chairperson SEBI, the Securities and Exchange Board of India. I welcome you, Madam, onto the stage, along with Mr. Sanjeev Bajaj, past President, CII and Chairman and Managing Director, Bajaj Finserv Limited, along with Mr. Chandrajit Banerjee, Director General, CII. Welcome, everybody. Ladies and gentlemen, I urge you in earnest to please return to your seats. We are beginning the special plenary session with Securities and Exchange Board of India, SEBI, on regulatory landscape, what is needed for Viksit Bharat. Ladies and gentlemen, as India strides towards becoming a developed nation by 2047, a fortified and robust regulatory landscape will play a pivotal role in fructifying this goal. This session will take stock of the current regulatory architecture along with deliberating on the supportive regulatory frameworks further required towards bolstering the financial sector. With those words, I request Mr. Chandrajit Banerjee, Director General, CII, for the welcome address of the session and also to moderate the session thereafter. Mr. Chandrajit Banerjee.
Welcome back, ladies and gentlemen, and a great privilege and honor to welcome is very specially and warmly the chairperson of SEBI, Mrs. Madhavi Puri Buch. Chairpersons, welcome back to a forum with the industry once again, and we really value your time, leadership to spend time with this very, very strong and a very high quality audience where we are talking about the role of the financial sector and Viksit Bharat as we look at it. We have the chairs of the summit, so to say, the financial summit chair, the chief economic advisor, Dr. V. Ananthanageshwaran sitting here, and of course Sanjeev Bajaj, who have been chairing this summit for and preparing for it for the last many years. And Madam Chairperson, the subject that we have kept for your session is the regulatory landscape and what is needed for Viksit Bharat. Chairperson, I just wanted to mention that so a few things that we have been able to do since we have met in another public gathering with our institution and yourself, both in Delhi as well as here, has been some of the things that we have seen which has moved so very effectively. Just wanted to recap them, and it's been you who have actually made things to work in a very different manner. I think one of the highlights was, of course, the Industry Standards Forum, which you constituted, and that's worked so very well, and that collaboration has been of great value. The second, I just wanted to also talk amongst ourselves and really laud in terms of the landmark achievement of SEBI in the recent past. It has to catalyze the transition from T+2 to T+1 settlement cycle and making the stock market the fastest growing in the world, as we have seen. And further, the T+0 settlement cycle has also been rolled out. I mean, briefly capturing this just for a recall. The third, of course, which has been, again, where we have seen the expert committee for facilitating ease of doing business. And that's been, again, something which we strongly appreciate from our institution, the determination to streamline the corporate regulatory framework. And that's been of great value. And the expert committee, which came out with those recommendations for facilitating ease of doing business and also harmonization of the provisions of the ICDR and LODR regulations. So that's, again, Madam, was of very, very important and great value. The next, of course, was the formation of 16 working groups to simplify the SEBI regulations. And again, saw a phenomenal collaborative work. It's been seen and very encouraging to learn that SEBI has accepted. We have seen 70% odd of the proposals of these working groups being accepted by SEBI. Another one, again, which we have been really talking about within the industry has been about BRSR, and wanted to really congratulate and thank the SEBI for developing the BRSR and the BRSR core initiatives. And they really go a long way in ensuring that we are in line with the global standards. And we look forward, this is something which is going to really help our companies, our members. So great to have some of these achievements in a very short period of time, if I may. And today we really look once again turn to the SEBI chairperson for her thoughts on how the regulatory environment can foster market growth and stability, and to prepare for the financing of this growth in a rapid way towards the Viksit Bharat. I just wanted to recap just to say that we have done a lot and we still wish to do a lot in this partnership approach, Madam Chairperson, and welcome you once again, and thank you very much for being here with us for this summit. Thank you. Sanjeev, before we request the Chairperson, a few remarks from the summit chair.
Good afternoon, friends, and it's a pleasure to have with us Chairperson SEBI to deliberate upon what should be the evolving regulatory framework as we lay the foundations for a Viksit Bharat by 2047. Now, we know that a robust regulatory environment of our capital markets is required not only for investor protection, but it is also required to pursue innovation, to ensure greater market efficiency, and to ensure greater inclusion. As India moves forward and is poised to become the third largest economy globally, we know that the scale of financing in the country has to improve dramatically. And to do this, we have to first ensure that we are building greater resilience, because scale without resilience can lead to disaster. One of the ways to do this is to encourage the shift of our savings from traditional assets, whether it's cash, whether it's gold, whether it's real estate, towards financial assets, which are more productive. And money, as they say, has value only when it changes hands. If it's sitting at one place, it has very little value. Further, whether it is simplifying the investment process, saturation of products and services, reducing transaction costs, each of this will further enable a larger set of people to invest in financial products. We also know, and for those of you who were here in the first section, we discussed the fact that while we have a very large and strong equity market, we need to build the bond market, and perhaps we will hear a little bit about that. Currently, whether it's REITs or InvITs, these are classified as hybrid securities, and we believe that there is some ambiguity amongst investors about their asset class. We believe that these should be allowed as asset classes, whether for ETFs or index funds, of creating a framework for mutual funds to also launch REIT or InvIT specific schemes would further bring in liquidity into these asset classes. CB just talked about the BRSR report. We know that the world is increasingly moving towards adapting ESG principles. I was recently, a few weeks ago, at a meeting of the World Economic Forum in Switzerland, and the top financial companies were together discussing how the roadmap is evolving towards the transition towards a greener planet and the obligations on green financing. And this is where India both can play a very significant role, because we are part of that transformation journey, and unlike many other countries, we have proactively said that we will move towards a developed nation, but we will also do it with our responsibility towards the climate. But here, one of the things that is required is a harmonization of regulations, not only between international, which is mostly European regulations, and Indian regulations, but also that harmonization doesn't mean that we have to just follow their regulations. The regulations have to be suitable even for countries like ourselves. And I hope that we will see some of that happening. Another requirement to ease compliance for listed equities that are there across multiple exchanges is if we can create a common disclosure platform that could be established where a single submission meets the reporting requirements of all exchanges. An important area as we move over the next 2 decades is retirement planning. Now, if you look at our current pension fund of India, it's only 2% of GDP, far lower than what we have seen in the West and what we've seen as required as our elderly population grows in size. In addition, when you look at the penetration of pension products in India, amongst the elderly, it is less than 25% versus 70 to 80% in, again, the developed markets of the world. And this is where driving awareness, fostering innovation, reducing transaction costs, improving distribution will go a long way to ensure that in our sunset years, we have adequate protection. As India navigates the path towards becoming a developed nation, hopefully even before 2047, a forward-looking and resilient regulatory landscape will be instrumental in ensuring that our financial services sector establishes 3.0, 4.0, and thereon. As CII, we are very much committed, as we've always been, to work with SEBI in helping simplify regulations and thereby unlocking the true potential of India and Indian industry towards a Viksit Bharat. Thank you.
Thank you. Thank you very much, Sanjeev. And ladies and gentlemen, it's now my pleasure and honor to request and invite the Chairperson SEBI, Mrs. Madhavi Puri Buch, to give her keynote address.
A very good afternoon. It's a pleasure to be here. I must say that as we think about Viksit Bharat, there has been one photograph that I've been using as my understanding, not my understanding, but my hope and my aspiration of what Viksit Bharat will actually look like. So I'm going to use that again. This is my hope and aspiration for a Viksit Bharat, where in every part of our country, including in rural India, the girl child is educated, she is healthy, she is tech-enabled, and she is smiling. That would be the Viksit Bharat that I would hope for. How will this Viksit Bharat come about? To me, there are some building blocks towards this aspiration. So, the first thing is that for Viksit Bharat, there has to be economic prosperity. That's a no-brainer. In order to facilitate that economic prosperity, there has to be growth. And for that growth, national resources have to be there. When I say national resources, I mean not just the capital that is there in the country and which comes from outside the country, but also to facilitate the generation of profits, reserves, taxes, and all of the resources that India has, both monetarily and in terms of the huge capability that we have as a nation in terms of people, our capability, our technology. So all of that national resource will really drive the growth and the economic prosperity. At the same time, national resources also need to be utilized for building social infrastructure and sustainability, because that is what will also drive inclusion and participation. Because just economic prosperity without inclusion and participation, active participation of every citizen of the country, without that side of it, we cannot expect that we will achieve a Viksit Bharat. Now, on this path and on this wonderful virtuous circle that we can see before us, The good news is that we are no longer just talking about we can get there or that we have the potential to get there. I think the beauty is we are already on this path. For the last many years now, this bringing together of national resources, both monetary and capability and technology, has already started driving the growth and economic prosperity. It has already started driving social infrastructure and inclusion. So even today, when you open the newspaper and you see GST collections are 10% up. You know, when a lot of foreign investors come to see me and they ask me my views on the economy, and I say to them, look, I'm not an economist, so please take what I say with a pinch of salt, but I'm a markets person. I find it hard to think in terms of models. I like to look at simple data. And to me, there are two important sets of data that I look at when I need to figure out on what kind of trajectory India is from an economic perspective. The first set of metrics I like to look at is taxes. Because taxes are a reality. There is no assumption, there is no model, and nobody pays taxes unless they have to. So, with the growth in taxes, whether it is the GST collections, month on month on month, the way the chart looks, quarter on quarter, if you look at the advanced tax, and many of our investors from overseas are not very familiar with the fact that we have a concept of advanced tax. So when I share with them that really what is happening every time an advanced tax date comes is that the entire corporate sector and every individual is making a projection for the entire year, and this is the forward-looking statement that they are making through their payment of taxes. So when the tax collections are so robust, it is a conclusion for me without needing any other models that our economy is already on that trajectory. We are not just waiting anymore, it's already happening. The second set of metrics that I like to look at is energy consumption, power consumption, because that is to me a reflection of the real economy. Because while profits and taxes sometimes, particularly with the domination of the financial sector, can look somewhat different from what is happening at the ground level. But energy consumption, power consumption, when you look at that and you see that month on month on month, of course, adjusted for the cyclicality, we all know that in our country we have a cyclicality of power consumption, the trend line is again hugely positive. So to me, we are already well on our path towards this Viksit Bharat. And that, in fact, puts even more responsibility on each one of us who are part of the financial sector, particularly the sector where capital formation has to take place. From our side in SEBI, we think of capital formation as having two sides of the coin. One is creating the capital for industry to fuel growth. The second is wealth creation in the hands of the citizens of the country. So it's very important to us from an inclusion point of view that this growth which is happening in the country, the next decade which is going to be so wonderful for us, and the wealth that is going to get created, it also needs to go into the hands of the common person in the country, every citizen of the country. So the inclusion agenda is very, very important to us. And therefore, when there are large parts of the industry in our ecosystem, for instance, the mutual funds. Just the other day, I think the Birla Mutual Fund launched the 250 rupee SIP. Now, we've been working very closely with industry to make sure that that is something which is viable for them. It can be offered, but if it isn't viable, it will not get the traction. So I think the industry, AMFI, has really come forward. The leaders in the industry have come forward. And we are well on our way to making a 250 rupee SIP a reality in our country so that every person, no matter where and in which village, the cost of onboarding is low, the cost of servicing is low, technology is leveraged, and so that with that small amount of money, and people are really shocked globally when I say, roughly about $3 a month. And they're like, you can't even buy a Starbucks coffee with that. And I say, yes. So imagine with less than $3 a month, people will be able to participate in the wealth creation of our nation. And that is something we really look forward to on our path towards a Viksit Bharat. So if we were to look forward and say, what will the market ecosystem look like going forward? And therefore, what is it that the regulation must look like going forward? And what should be the process by which the regulator operates going forward? So the first and most important piece is tomorrow is going to be about a larger and larger scale, because that's the strength of our country, and that is what we want to leverage, that's what we want to drive, and that's what's going to become a reality. So in response to, and not just in response, in order to fuel this scale as well, the response and the expectation that the regulator will have, both from itself and from industry, is the deployment of technology. It has already started happening. Very, very large parts of our market ecosystem are now absolutely pioneering and leading edge in terms of technology globally. There is no other place on this globe where a lot of the technology that we have today in our country is actually present anywhere else. So whether it is the market ecosystem or whether it is SEBI itself, the adoption of technology in order to be able to manage effectively the scale that we are going to reach is a no-brainer. The second aspect or second dimension that is going to drive the market ecosystem is complexity. Already we are seeing the variety of asset classes, the variety of products, the variety of participants. You know, I often laugh that the number of different and distinct stakeholders that SEBI deals with is just growing and growing and growing. So as was referred that, you know, we constituted this ease of doing business working groups, and we found that to actually address our stakeholders, we needed 16 of them. I'm sure by next year we'll need some 20 of them. So the complexity of what is happening in the market ecosystem is being driven by one important factor which we strongly endorse, which is the right product for the right person. So gone are the days where we say, boss, we have only these 2 or 3 asset classes, now you pick what you like. No, when we have the needs of such a vast variety and varied set of stakeholders, at that time it is incumbent upon us as a regulator to facilitate completely new products and new asset classes all the time to serve those needs, not in a simplistic one-size-fits-all manner, but because we have technology on our side, to be able to create a very large number of products and services which suit the needs of each segment in its own suitable way. So complexity is going to happen. Now the question is, how do we as a regulator expect to deal with it? And we expect to deal with it with co-creation with industry. Because we are very clear that with this increasing complexity, there is no way that the regulator sitting in its own little ivory tower can ever imagine, forget about, appreciate, and respond to all the complexity in the market. So there is no other way of doing the regulatory business other than to co-create. So this is not out of any magnanimity of the regulator. This is out of sheer necessity, because there is no way that without adequate consultation and co-creation, the regulator can come up with sensible rules, regulations, products, and services which will actually serve the market. So this concept of co-creation will only go further. You know, as has been discussed, apart from our advisory committees, the Industry Standards Forum has been a very important initiative, which we are now in the process of formalizing as a part of the regulatory architecture in SEBI. We found it extremely effective. And I can assure you that, you know, many, many new steps will be taken. You know, single filing with the exchanges is going to become a reality very soon, if Ashish is here, but it's happening. It's work in progress. If you file your filings, your disclosures with one exchange, it will automatically go and populate on the websites of the other exchanges. So this is all simple stuff that technology will enable. Of course, there was a mention of REITs, but Ajkal, if I utter the word REITs, I am accused of conflict of interest. So perhaps it would be better for me to abstain. But indeed, these are the emerging asset classes in our country. Globally, they are large, strong. They monetize a lot of the build out of the infrastructure of the country. They have a huge multiplier effect in terms of the growth of the country. So all of this is very much on our agenda, and it will be done in a manner of co-creation, because that's the only sensible way to do it. The third thing that we believe is going to characterize our markets is speed. And the reason is not that it will characterize only our markets, it's because that's how the world is moving today. Today, even an overnight delivery of something you order online feels far too late, right? You want it in 15 minutes, right? And it happens. And then your expectation is, now why not 5 minutes? And now why not 2 minutes? And that is with physical goods. So you can imagine in the digital world, where is the expectation of people in terms of with what speed things should happen? So there is a certain speed which is all prevailing in the entire, not just market ecosystem, but the overall, I would say, the planet. And therefore, we too need to be able to, as a regulator, respond to that. So we believe that the way in which to deal with that is really to have focus. And what do I mean by focus? In order to have speed, you need to have clarity of thinking, right? Decisions are made quickly if you are clear on your objective, what you're trying to achieve, what you're trying to protect the investor from. And that clarity comes from a very sharp focus on what is it that is the fundamental requirement of the regulator to do. So within SEBI, we have restructured ourselves. We undertook a reorganization where we restructured ourselves in order to bring focus to certain specific activities, so that it is not a question of everybody trying to do everything and then it taking a long time, but a very focused and clear set of policies, processes, protocols, etc., in order to bring that focus, in order to bring that clarity, and therefore to facilitate speed. The next important thing is this whole question of inclusion, which I referred to earlier, that a Viksit Bharat with economic prosperity is still not a Viksit Bharat unless you have inclusion and participation. And this inclusion is not just about gender inclusion, not just about socio-economic inclusion, it is also about language inclusion and on so many other dimensions. We're very fortunate that we are on that cusp where, with the help of AI, language barriers should be a thing of the past. So as we think about how our regulations will evolve in the future, we will need to move well past saying simply, let's simplify the English in our regulation. We will need to move past that and say, why do we not have regulation? Why do we not have documents? Why do we not have IPO summaries in 15 languages or 27 languages? So a part of that inclusion agenda is to make sure that there is no barrier to people being informed investors and therefore being able to participate in the entire market ecosystem. Because without a sense of familiarity, the fear is far too much. The other day I met a person who runs an NGO in rural India, and it's a women's organization, and the only thing they do for women empowerment is to take a mock ATM, village to village to village to village, and teach the women how to operate the ATM so that they're not frightened of it, so that they take charge of their own Jan Dhan account and are not reliant on the men in the family, and they have control over their own resources. It's as simple as that. And you cannot imagine, when she spoke, the power of that, of just eliminating the fear that a woman has to go to an ATM and operate it, and how that fear stops her from participating and losing control over her own money. So to us, the inclusion agenda is very large, and it starts from saying that in what language, in what medium, through what channel are we being able to communicate everything that a person needs in order to be able to participate in the growth of the country. So this is going to be an important driver for us going forward. Of course, equally, from an inclusion agenda point of view, unless the cost comes down, inclusion cannot be a reality, because we cannot force the market ecosystem to sell a product that is fundamentally unviable, which is why we have taken so much of time and trouble to actually make the 250 rupee SIP viable, because if it's not viable, it simply won't fly, and we need it to just fly off the shelves. So the focus on cost, the focus on ensuring that economies of scale are passed on to the investors is an essential part of driving the inclusion agenda. With all of this put together, the final goal that we have, all of us sitting in this room, is the same, which is that for that Viksit Bharat, what is it that we as a country bring together to the table in order to facilitate that capital formation and wealth creation happens in a seamless, efficient, low cost, and highly inclusive way. Thank you.
Thank you, Madhaviji. As always, instead of talking at 30,000 feet, you are at the ground level telling us what's a particular roadmap. Starting with, if we have to move towards Viksit Bharat, it's a question of not only how do we get more prosperous, but how do we spread that prosperity through participation, through inclusion. You've talked about ensuring the right social infrastructure, focusing on sustainability, and very interestingly, the sachetization on products, talking about the 250 rupee SIP as well. Also, the importance of capital formation, which is both about, as SEBI, making sure that there is access to capital, but it also results in wealth creation, and wealth creation for all, so that we can involve everybody in our growth in the coming decades. You also very clearly put a responsibility and an opportunity for growth, talking about right product for the right customer and the importance of that, as also the importance of speed, which has become a bit of a drug really for all of us from the Amazons and Flipkarts of the world. But yes, speed creates efficiency, it creates availability, it has its own benefit as long as it's not done in a rash manner. And finally, the importance of inclusion. And very interestingly, you touched upon the fact that today one language can create multiple languages, and we are already seeing examples of Gen AI that many of us are using that's enabling us to do that, which means that if we have to create wealth, we have to ensure that the greater financial literacy awareness that exists for the common man, each of whom, man and woman, are investors. How do they become informed investors? And interestingly, access to them through multiple mediums, multiple channels, multiple languages, really with technology becomes really using one language, one medium, one channel. So one is becoming many and many is becoming one, because that's what technology is enabling us to do. And I thought that was a very interesting and powerful thought. All in all, very clear pathways on, at least from your point of view, how you think the opportunity needs to be harnessed, the opportunity for India as we move towards Viksit Bharat by 2047, if not earlier. So let me just take the opportunity to thank you once again for taking us through your thoughts on this.
Thank you all for the enriching experience, inspiring us to surge ahead. Request you to please come together for a group picture that will stay with us for times to come. So, ladies and gentlemen, with that, we break for lunch that has been arranged in the adjoining foyer. I have a few announcements to make before you part. So we will reassemble at 2 o'clock for the next session. I want to apprise you that there will be a changeover in the room. I repeat, there will be a changeover in the room. So you are requested to please carry your belongings along with you when you move out of this room for lunch. Please carry your belongings along with you when you move out for lunch. Also note that the day will end with high tea, wherein you can network with your peers from the sector and counterparts from other organizations. We begin tomorrow with a networking breakfast in the morning from 8:30 to 9:15. The first session tomorrow begins at 9:30 sharp. Please be in your seats a little before that. Tomorrow we have the chairperson of IFSCA, Deputy Governor of RBI, Member IRDAI, Chairman PFRDA, whole-time member SEBI, and finally Secretary DEA will be joining for the valedictory. So we promise you a full day of new and significant learnings as we will get to hear directly from senior government officials and regulators themselves. We have a lot of ground to cover today and tomorrow. So tomorrow will be an early start and today we begin the post-lunch session exactly as per schedule. So please be in your seats by 2 o'clock, which will enable us to have sufficient time for all the sessions. I remind you again, as you move out for lunch, please carry your belongings along with you as we will be having a changeover of the seating arrangement in this ballroom. Thank you.
वाह, ओपनिंग अ बिजनेस करंट अकाउंट।
ये क्या वाह, पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
एसबीआई। एसबीआई देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैंकिंग।
We've come a long way to get to where we are today. From what started as a single dream to enabling millions of dreams. From a handful of experts to thousands in our team. From two-wheeler to becoming a financing leader, we cover the length and breadth of our nation. As India moves forward, we move forward. With resilience, resolve and determination. With a focus on digital and innovation. We are relentless in our drive as we strive to meet and exceed the evolving needs of being Bharat ka digital lender. In a market filled with increasing choice, we needed to find our unique brand voice. As part of our journey to tell our growth story, we spoke to people across the country, covering all our stakeholders from customers, channel partners and employees. We sought inspiration in their values and aspirations. We breathe new life in our brand identity, framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान एमएसएमई लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge.
Upskill. Opportunity.
Experience. Empathy.
Change.
Exciting future.
India. Young, vibrant, aspiring. A country of 1 billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling and tripling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On completion of the CPBFI program, students undergo an assessment process followed by workshops by human resource professionals. This is extremely important as these mock interviews are simulated by Bajaj Finserv recruiters, providing students insights into industry expectations from them.
Before the course began, our students were in dilemma whether we should take up this course or not. But once they started the course, they developed the confidence. This confidence, which is the need of the hour.
One finance professional at a time, the CPBFI program is making a telling impact on society and the financial services industry. 70% of students are young women, while a sizable 66% of students have parents who are not graduates. The CPBFI program is enabling these families to grow their income multiple times, leading to their financial well-being.
I'm on first postgraduate in my family. I'm currently doing MBA in marketing. This program inspires me to enter this sector. So the whole trainers are so inspirational.
What started out as a training program to meet the talent gap is now providing youth with opportunities, catalyzing social change and enabling a young India to take wings into a limitless sky. And we hope to go a long way, scale up to skill up.
Exciting future!
Creating finance professionals for the future.
वाह, ओपनिंग अ बिजनेस करंट अकाउंट।
ये क्या वाह, पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
एसबीआई। एसबीआई देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैंकिंग।
We've come a long way to get to where we are today. From what started as a single dream to enabling millions of dreams. From a handful of experts to thousands in our team. From two-wheeler to becoming a financing leader. We cover the length and breadth of our nation. As India moves forward, we move forward. With resilience, resolve and determination. With a focus on digital and innovation. We are relentless in our drive as we strive to meet and exceed the evolving needs of being Bharat ka digital lender. In a market filled with increasing choice, we needed to find our unique brand voice. As part of our journey to tell our growth story, we spoke to people across the country, covering all our stakeholders from customers, channel partners and employees. We sought inspiration in their values and aspirations. We breathe new life in our brand identity, framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़े रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान MSME लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge.
Upskill.
Opportunity.
Experience.
Empathy.
Change.
Exciting future.
India. Young, vibrant, aspiring. A country of a billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On completion of the CPBFI program, students undergo an assessment process followed by workshops by human resource professionals. This is extremely important as these mock interviews are simulated by Bajaj Finserv recruiters, providing students insights into industry expectations from them.
Before the course began, our students were in dilemma whether we should take up this course or not. But once they started the course, they developed the confidence. This confidence, which is the need of the hour.
One finance professional at a time, the CPBFI program is making a telling impact on society and the financial services industry. 70% of students are young women, while a sizable 66% of students have parents who are not graduates. The CPBFI program is enabling these families to grow their income multiple times, leading to their financial well-being.
I'm on first postgraduate in my family. I'm currently doing MBA in marketing. This program inspires me to enter this sector. So the whole trainers are so inspirational.
What started out as a training program to meet the talent gap is now providing youth with opportunities, catalyzing social change and enabling a young India to take wings into a limitless sky. And we hope to go a long way. Scale up to skill up.
Exciting future!
Creating finance professionals for the future.
वाह, ओपनिंग अ बिजनेस करंट अकाउंट।
ये क्या वाह, पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
एसबीआई। एसबीआई देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैंकिंग।
We've come a long way to get to where we are today. From what started as a single dream to enabling millions of dreams. From a handful of experts to thousands in our team. From two-wheeler to becoming a financing leader, we cover the length and breadth of our nation. As India moves forward, we move forward. With resilience, resolve and determination. With a focus on digital and innovation. We are relentless in our drive as we strive to meet and exceed the evolving needs of being Bharat ka digital lender. In a market filled with increasing choice, we needed to find our unique brand voice. As part of our journey to tell our growth story, we spoke to people across the country, covering all our stakeholders from customers, channel partners and employees. We sought inspiration in their values and aspirations. We breathe new life in our brand identity, framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान एमएसएमई लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge.
Upskill.
Opportunity.
Experience.
Empathy.
change.
Exciting future.
India. Young, vibrant, aspiring. A country of 1 billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling and tripling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On completion of the CPBFI program, students undergo an assessment process followed by workshops by human resource professionals. This is extremely important as these mock interviews are simulated by Bajaj Finserv recruiters, providing students insights into industry expectations from them.
Before the course began, our students were in dilemma whether we should take up this course or not. But once they started the course, they developed the confidence. This confidence, which is the need of the hour.
One finance professional at a time, the CPBFI program is making a telling impact on society and the financial services industry. 70% of students are young women, while a sizable 66% of students have parents who are not graduates. The CPBFI program is enabling these families to grow their income multiple times, leading to their financial well-being.
I'm a first postgraduate in my family. I'm currently doing MBA in marketing. This program inspires me to enter this sector. So the whole trainers are so inspirational.
What started out as a training program to meet the talent gap is now providing youth with opportunities, catalyzing social change and enabling a young India to take wings into a limitless sky. And we hope to go a long way. Scale up to skill up.
Exciting future!
Creating finance professionals for the future.
वाह, ओपनिंग अ बिजनेस करंट अकाउंट।
ये क्या वाह, पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
एसबीआई। एसबीआई देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैंकिंग।
We've come a long way to get to where we are today. From what started as a single dream to enabling millions of dreams. From a handful of experts to thousands in our team. From two-wheeler to becoming a financing leader. We cover the length and breadth of our nation. As India moves forward, we move forward. With resilience, resolve and determination. With a focus on digital and innovation. We are relentless in our drive as we strive to meet and exceed the evolving needs of being Bharat ka digital lender. In a market filled with increasing choice, we needed to find our unique brand voice. As part of our journey to tell our growth story, we spoke to people across the country, covering all our stakeholders from customers, channel partners and employees. We sought inspiration in their values and aspirations. We breathe new life in our brand identity, framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान एमएसएमई लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge.
Upskill.
Opportunity.
Experience. Empathy.
Change.
Exciting future.
India. Young, vibrant, aspiring. A country of a billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling and tripling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On completion of the CPBFI program, students undergo an assessment process followed by workshops by human resource professionals. This is extremely important as these mock interviews are simulated by Bajaj Finserv recruiters, providing students insights into industry expectations from them.
Before the course began, our students were in dilemma whether we should take up this course or not. But once they started the course, they developed the confidence. This confidence, which is the need of the hour.
One finance professional at a time, the CPBFI program is making a telling impact on society and the financial services industry. 70% of students are young women, while a sizable 66% of students have parents who are not graduates. The CPBFI program is enabling these families to grow their income multiple times, leading to their financial well-being.
I'm on first postgraduate in my family. I'm currently doing MBA in marketing. This program inspires me to enter this sector. So the whole trainers are so inspirational.
What started out as a training program to meet the talent gap is now providing youth with opportunities, catalyzing social change and enabling a young India to take wings into a limitless sky. And we hope to go a long way. Scale up to skill up.
Exciting future!
Creating finance professionals for the future.
वाह, ओपनिंग अ बिजनेस करंट अकाउंट।
ये क्या वाह, पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
एसबीआई। एसबीआई देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैंकिंग।
We've come a long way to get to where we are today. From what started as a single dream to enabling millions of dreams. From a handful of experts to thousands in our team. From two-wheeler to becoming a financing leader, we cover the length and breadth of our nation. As India moves forward, we move forward. With resilience, resolve and determination. With a focus on digital and innovation. We are relentless in our drive as we strive to meet and exceed the evolving needs of being Bharat ka digital lender. In a market filled with increasing choice, we needed to find our unique brand voice. As part of our journey to tell our growth story, we spoke to people across the country, covering all our stakeholders from customers, channel partners and employees. We sought inspiration in their values and aspirations. We breathe new life in our brand identity, framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Aha. Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान एमएसएमई लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge.
Upskill.
Opportunity.
Experience.
Empathy.
change.
Exciting future.
India. Young, vibrant, aspiring. A country of a billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling and tripling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On completion of the CPBFI program, students undergo an assessment process followed by workshops by human resource professionals. This is extremely important as these mock interviews are simulated by Bajaj Finserv recruiters, providing students insights into industry expectations from them.
Before the course began, our students were in dilemma whether we should take up this course or not. But once they started the course, they developed the confidence. This confidence, which is the need of the hour.
One finance professional at a time, the CPBFI program is making a telling impact on society and the financial services industry. 70% of students are young women, while a sizable 66% of students have parents who are not graduates. The CPBFI program is enabling these families to grow their income multiple times, leading to their financial well-being.
I'm on first postgraduate in my family. I'm currently doing MBA in marketing. This program inspires me to enter this sector. So the whole trainers are so inspirational.
What started out as a training program to meet the talent gap is now providing youth with opportunities, catalyzing social change and enabling a young India to take wings into a limitless sky. And we hope to go a long way. Scale up to skill up.
Exciting future!
Creating finance professionals for the future.
वाह, ओपनिंग अ बिजनेस करंट अकाउंट।
ये क्या वाह, पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है?
कौन है?
एसबीआई। एसबीआई देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैंकिंग।
We've come a long way to get to where we are today. From what started as a single dream to enabling millions of dreams. From a handful of experts to thousands in our team. From two-wheeler to becoming a financing leader. We cover the length and breadth of our nation. As India moves forward, we move forward. With resilience, resolve and determination. With a focus on digital and innovation. We are relentless in our drive as we strive to meet and exceed the evolving needs of being Bharat ka digital lender. In a market filled with increasing choice, we needed to find our unique brand voice. As part of our journey to tell our growth story, we spoke to people across the country, covering all our stakeholders from customers, channel partners and employees. We sought inspiration in their values and aspirations. We breathe new life in our brand identity, framing human stories through windows of opportunity, reflecting our vision to empower upward mobility, broadening horizons through financial accessibility. Our loans symbolize a dose of confidence, the confidence to make it happen, the confidence to take action, to form collaborations, to go further than we have ever before, to become an inspiration and hero to all. Hero FinCorp, the confidence to make it happen.
Come on.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, सोच से सच तक चले हम, सोच से सच तक, सोच से सच तक बढ़े हम, सोच से सच तक. देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, आगे बढ़े बढ़ते रहे, रोशन होंगे उम्मीदों के दीपक.
यूनियन बैंक ऑफ इंडिया, सोच से सच तक. यूनियन बैंक ऑफ इंडिया के आसान एमएसएमई लोन्स के साथ हर ख्वाहिश सोच से सच तक.
Knowledge.
Upskill. Opportunity.
Experience.
Empathy.
Change.
Exciting future.
India. Young, vibrant, aspiring. A country of a billion dreams. Realizing these dreams is possible and is already underway. At Bajaj Finserv, we are part of India's journey to making the dreams of Rohit, Diksha, Sejal and many more come true. The reins of our future are in the hands of our youth. Skilling our youth can catapult India into a global economic powerhouse. Knowing this, we launched our CPBFI program in 2016 to upskill young students and prepare them for employment in the banking and finance industry. Today, our CPBFI program has given wings to the dreams of 53,000 young people, enabling them to evolve as banking or finance professionals.
Through our CPBFI program, we have seen family incomes doubling and tripling when a student gets a job after graduation. And we are excited to be a part of India's journey to becoming a global knowledge superpower.
In this course, I came to know in depth what is actually banking. I didn't had any idea about insurance. I am ready to switch from teaching sector to banking sector.
Nobody from my family is in this sector. Everybody is engaged with agriculture. I am the only person who came out of that sector. Finance can help me to do my agriculture better.
The intensive 100-hour CPBFI program has been created by top industry experts.
It's an employability skills program which helps students to get entry in banking, insurance and finance industry. I really feel that students are really making most out of this program because the technical knowledge that they get here is not available anywhere.
Along with banking and insurance classes, we also have quarterly communication classes in which we have improved both our written and speaking abilities. It helped us boost confidence. At the same time, the classes were so engaging.
The deep reach of CPBFI across states in India ensures that students from smaller towns and cities are ready to meet the specific local needs of financial services businesses in their own regions.
Really able to understand the banking, like their transactions, their loans, and the most important thing, the honesty of a manager.
The program is aimed at aspirants in Tier 2 and 3 cities. On
I seek your attention, ladies and gentlemen. All those outside the ballroom, if you can hear me, please proceed inside. We are beginning the post-lunch session in a very short while from now. So all those inside, a very good afternoon to you. Good afternoon. So welcome back. And as I mentioned before we broke for lunch, I will repeat those announcements. At the end of the day today, in the evening, as we close all the sessions, we have arranged for high tea. Tomorrow, we will begin with a networking breakfast in the morning from 8:30 to 9:15. And both during today's networking high tea and the morning breakfast, you can interact, having ample time to have conversations with your peers from the sector as well as other counterparts from various organizations. Let me give you a brief of tomorrow. The first session begins at 9:30 sharp. Yes, the way we have been conducting all our sessions today, exactly on time, we intend to do the same even tomorrow. So I request you, all those attending the day 2, to be in your seats a little before 9:30. We have the chairperson of IFSCA, the deputy governor of RBI, member IRDAI, chairperson of PFRDA, whole-time member of SEBI, and finally the secretary of DEA, joining us for the valedictory tomorrow. So we promise you a day full of new and significant learnings, as we will get to hear directly from government officials and regulators themselves. Same like today, even tomorrow, we have a lot of ground to cover. And as you saw already in your schedules and listening to me announce that it will be an early start tomorrow. So I see most of you have gathered inside the ballroom. A good time to begin our post-lunch session. And this will be on green financing, climate risks, and sustainable taxonomy, the way forward. So the unanimous efforts to tackle the ill effects of climate change globally has prompted individuals, governments and companies to shift from traditional financial investments and activities towards a more sustainable and environment-friendly economy. Its green financing requirement is expected to increase as India transitions towards a sustainable and environment-friendly economy, with an estimate from RBI putting it at around 2.5% of GDP annually till 2030. So this, ladies and gentlemen, will necessitate the financial institutions to develop a wide array of green finance products and services to support the transition towards a more sustainable economy. Ladies and gentlemen, this session will discuss the way forward to secure India's rising green financing requirements with an active partake by all relevant stakeholders. So this session will be chaired by Mr. R. Mukundan, Vice President CII, Managing Director and CEO, Tata Chemicals Limited. And the panel speakers are Mr. Prashant Kumar, Managing Director and CEO, Yes Bank, Mr. Pradeep Kumar Das, Chairman and MD, Indian Renewable Energy Development Agency, the IREDA, Mr. Manish Chaurasia, Chief Operating Officer, Corporate and Clean Tech Finance, Tata Capital, and Mr. Sandeep Parekh, Managing Partner, Fintech Law Advisors. So could I request the session moderator and the speakers to please take their seats on the dais. Let us welcome them with a round of applause, ladies and gentlemen. Mr. R. Mukundan, Mr. Prashant Kumar, Mr. Pradeep Kumar Das, Mr. Manish Chaurasia, and Mr. Sandeep Parekh. Welcome, gentlemen. I request our chair, Mr. R. Mukundan, to please take charge of the panel discussion. Mr. Mukundan.
Good afternoon. Am I audible now? Great. Thank you. I would like a great response from all of you. Good afternoon. That's great. I think this is a graveyard shift, as they call it, just after lunch. But it'll make it very interesting. We've got a great panel, and the subject also is very, very topical and very important as we move forward. Broadly, I would just highlight that, we are all living in the midst of a big challenge, as we call. And this challenge is going to run for a long time, or it can be seen as an opportunity. The other one, which is a big opportunity, is the whole point about digital and new economy, which is going to come because of the digital movement. I think climate change represents an opportunity for all of us if we make the change. If you don't make the change, it is obviously a big challenge. And green finance is a very important tool of this whole element, and countries have committed. But the transition costs are going to be very high. The transition also needs to happen in a just manner, especially for a developing country like India. We've got to figure out a way to do it. And clearly, industry needs to work hand in hand with the finance, with the capital providers, but also with the community, so that we can make that shift in a possible manner, the right possible manner. So in this regard, I think Indian financial institutions have been in the forefront of coming out with a range of green products. We'll hear a bit about it. Also, there's been a big role of regulatory authorities like RBI, which need to create a right environment for green finance. This should possibly encourage the investment in sustainable investments and provide incentives for green projects. And clearly, I think financial institutions certainly face a challenge in this whole space. Least of which is lack of standardized definitions, which I think many regulatory bodies are coming through. And there is this issue, need to make the frameworks with which they judge also more robust. Also, in this regard, I think the climate risk are also a big element of other financial institutions, especially with respect to not just credit risk, insurance risk, all those elements. And clearly, even those who are not giving green finance need to take climate risk into their financing decisions, because it can clearly lead to big risk in terms of the portfolio which they will have. The other element which we need to think through is, the taxonomy of what is labeled as green and sustainable. EU has been pioneering in this regard, and this will help us guide more investments going forward. And we need to broadly scale up this green finance and for the rising demand through, and this should include issuance of green bonds, public-private partnerships, encouraging investments in renewable energy. Sustainable agriculture will be a key part of it, and a broad collaborative approach, which I have highlighted. Of course, we can also add an element of tax incentives for this whole shift as we move forward. There's also need for, as I said, we have to work also with the community. There's also need at the company level and at the institutional level, policy level, a need for capacity building, and at the community level, and awareness, increasing the awareness. And while I spoke about other horizontal change which is happening, which is digital, I think digital can play a very big role in this whole green transition. So clearly, I think this shift is going to run for many years. It's a multi-year, multi-decadal shift, as we call it. And I think this is something which companies have time, but yet we need to accelerate. I think both are true. And hence, I think we'll look forward to a very interesting set of remarks and engagement in this session. I'd first like to introduce my panelist, Mr. Prashant Kumar. He's the Managing Director and CEO of S Bank. And this has been a bank which has undergone a big transformation. And Prashant, I want to tell you that despite difficult times, I sit on the CDP board worldwide, and I think your bank supported us in your most difficult time. So I think I must acknowledge that fact that you've been internally very positive on terms of the green transition, and it is also a real turnaround, I think, in terms of the way they've come through, engaged with customers. And prior to that, of course, he was with India's largest bank, State Bank of India, and in various roles. So thank you, Prashant, for being with us today. I'll introduce everybody rather than introduce them at the time of speaking, so that we then can go uninterrupted in our. We have from the IREDA, Mr. Pradeep Kumar Das. He's a fellow of Indian Cost Accountants and also associate of Indian Company Secretaries. He holds a diploma in postgraduate management and from Xavier Institute of Management. I was there at the Xavier Institute of Management in Bhubaneswar just last month, and terrific new institution promoted by XLRI. And under his leadership, IREDA has completely changed its strategic operational turnaround, and there's been an IPO which has been wonderfully done, and it now has a Navaratna status. So thank you for joining us here today. Then I've got my colleague from Tata Group, from Tata Capital, heading the Clean Tech Finance, Manish. Manish heads the financial services has been a professional in this area for many years and worked across Asia Pacific region, and he has experience in broad spectrum of financial products. Under his leadership, TCCL successfully syndicated and funded over 350 projects in clean tech sector. That's a lot of number. And broadly, disbursements which I spoke about in green financing, over 3 billion. So really a large experience in terms of green finance amongst us. And whenever we speak about any green transition, as I said, we need rules, regulations, and the whole architecture around it. And Sandeep provides us that support from FinSec law advisors. He's worked as ED at SEBI, India's largest security, and also he headed the Legal Affairs Enforcement Department, and has been a faculty at Indian Institute of Management and works with several law firms across India and United States. So welcome, Sandeep, to be part of this, and thank you for being with us. So kick this off, I'd first open with, I'll request Prashant to sort of give his opening remarks. We'll first go around through opening remarks of each of the speakers and then go through a Q&A at the end of it. Over to you, Prashant.
Thank you, Mr. Mukundan, and very good afternoon to all of you. As he was speaking about Yes Bank, today Yes Bank is the highest rated bank in the country on the ESG, and all the three things on the environmental, social, and governance. And why we as a bank are continuing on this journey despite bank was facing different issues sometimes in 2020, because we firmly believe that this is the responsibility of all of us, and especially the responsibility of a financial institution in terms of contribution, not only on the global stage, but also in terms of what India has to play a role. And when our government has taken steps in terms of making it is a zero carbon impact by 2070. So how each one of us can contribute in that journey. Our bank is having a very small but very specialized team, and there has been a focus from the bank both in terms of board as well as management, that a bank who is playing such a critical role, how we can also continue to have this journey and play a very collaborative role in terms of finding out or framing the policies along with government and the various regulators. And I think bank has been able to do quite well in that direction. But definitely this is something which is evolving, and we can't just wait for when the 2070 will come, what is going to happen. I think each individual institution has to set a benchmark in a near term and constantly monitor how we are achieving that. As a bank, we have taken a target, internal target, that climate risk for scope 1 and scope 2, we would be achieving at a zero target by 2030. And I'm happy to share with all of you that every year we monitor in terms of are we moving in the right direction. And I think we are quite confident that by 2030, we would be achieving that target. So I think I would leave it here and then we can continue. Thank you.
Thank you, Prashant. Yeah, you can clap. I mean, Mr. Pradeep, over to you for your opening remarks.
Very good afternoon to all, and thanks CII for giving the opportunity to come here. About IREDA, probably post IPO of November, whoever is sitting here, they are knowing much better than me. So I'll talk about prior to IPO what it was, and already the various speakers have spoken about what is the importance of climate transition and climate financing. IREDA as an organization is working in this space since last 37 years. And the topic today we are talking about green financing and transition towards green taxonomy and all. We have submitted a draft green taxonomy paper to our ministry more than 1.5 years back. That is in quite advanced stage and shared with the different stakeholders in the different departments of government and others. Honorable FM has already touched upon this point in the last budget. So we hope that very soon that green taxonomy coming into place in India. Coming back to 4 years already in the introductory remark, it has been told that 4 years we have completely changed the organizations. In fact, one of the program, one of our borrower, we don't call them borrower actually, we call them business partner. We have built that culture of restructuring our organization, realigning with the business partners in the ecosystem, be it regulator, policymaker, business developers, and as a lender. And these 4 years, in one forum, some of our developers said the DNA of IREDA has changed. So reaching to that kind of stage in just 4 years in a 37-year-old organization who worked very silently for 33 years, and in last 4 years, in the earlier session, the speaker said that in last 4 years, if you take out COVID years, I'll request you don't take out for IREDA when you assess IREDA. In COVID year also, we did the best business during that period, what we did in the normal years prior to that. So that speaks the volume of our competence and capability to do the best in the worst time. So that has given us a lot of confidence that if we can do best in worst time, then definitely we have the competence and capability to do better in better times and best in best times. So that is the way we have transitioned, be it capacity building, be it inclusive ecosystem in the industry. Today, we are the largest pure play green finance company in the country, having a loan book size of last audited June quarter, 63,000 crores. And 4 years back, if you look at our book size, it was 22,000 crore, 22.5, 22,000. We have brought 3 times of book size. You'll be surprised to know we had 179 manpower, now we have 169 manpower. How digitization, ease of doing business, transparency and accountability and commitment, all these things can transform the effective efficiency in an organization. Many times people debate, is it a public sector? We proudly say, yes, it is a public sector. It was a 100% government of India undertaking just 9 months back. Now it is a 75% owned by government and 22%, 20, 21, 22% still with individual retail investors. Unlike other listed companies, post listing of a government company, normally you will find institutional investors to be there. We are not. And how we have achieved? Many unique things we brought in our picture, because when the organization normally expected, be it government or private, having a kind of sort of monopoly for almost 2.5 decades, you built up a lot of legacy process and legacy system. So during COVID, we had ample opportunity to revisit all those things. We went for fair amount of process redundancy. I brought in those changes which is required exactly in line up with the industry requirement and the sectoral requirement. Perhaps we are one of the only agency or maybe only agency in the country in banking, non-banking space who does quarterly all borrower meets. And we are the only company perhaps in India who is doing every quarter full audited accounts. We are the company who is fastest in reporting the audited results in the country in banking and non-banking space. And if you look at regulators compliance, RBI, we are the most compliant organization as far as RBI policy and governance is concerned. So it is not important whether we have enhanced a business. If I tell you some numbers, enhanced the loan book from 22 to 63,000. In March 20, we had net NPA of 7.18. Last June, we had 0.95. So this net NPA reduction is not just enhancing the loan book, but by reducing the NPA, by recovering. Now, normally if you see project finance companies, when you settle your accounts, fairly you go for haircut. More than 95% of accounts we had settled without compromising, mostly by getting our principal and simple interest, or mostly getting the principal and average cost of funds. Till June, we had sanctioned cumulatively more than around 2 lakh crores and financed more than 1,31,000 crore. If you see our cumulative write-off is 202 crore till June, which confirms that renewable is not that risky what it is perceived. So what are the perception issues? We can arrest those things by having continuous dialogue with the developers and sectoral issues. See, our ministry's name is New and Renewable. When you talk about new, and new project means new technology, new policies, new process, new practice. As a project lender, whoever may be, they'll have apprehension. And being in government, in the morning, I think Mr. Banerjee spoke about 3C principle. And especially if we are in government, we have to be cautious about 3C. That is CAG, CBC and CBI. To address those, we have a principle of 3C in our organization: clarity, commitment, and conviction. This principle of 3C has enabled us to change our DNA of what the stakeholders are giving the narrative today. And I'm sure in the time to come, if you see our loan book profile also, out of total 100% loan book, 58% coming from vanilla RE. What I say vanilla RE means wind, solar, hydro. There is no asymmetry in information as far as that sector and industry is concerned in that today in our country, because that has been matured. Those were emerging 20 years back, 25 years back. We are doing that. We had taken all risks. We have developed that. And today, our loan book profile is having 18% emerging and new technologies. We are taking again the risk, be it compressed biogas, ethanol, e-mobility, storage. You name anything. Green hydrogen, we started funding. Battery storage, we started funding. Pump storage, we started funding. Charging infra, we started funding. Battery swapping, we have started funding. If you see today, the loan book profile of the country, 50% of is coming from renewable, I'm talking only, coming from bond market. 35% is coming from NBFCs. Around 15% is coming from banks and others. And be it large bank, if you look at their balance sheet size, the green profile, even if you look at SBI, it is less than 1%. And we need at least 31 to 32 lakh crore by 2030 to reach the 500 gigawatt target. We have crossed 200 now, almost 203 we have achieved. Roughly 300 additional capacity addition is going to happen. And we are quite confident our country is going to achieve. And we'll be happy if it can happen before 2030 also. This is not a statement, it is a commitment at global level. And if you look at the history of last 10 years of renewable, solar has grown at 30 times. Probably no sector in the world, no country in the world has achieved that kind of growth. And last 10 years I'm talking about. If you see last 10 years, what are the solar per unit? What is now? Drastically the price has been reduced. How? Technological intervention and scale of economy, size of projects. Today in the new and emerging, we are talking about green hydrogen and its derivatives. That is going to take up in a big way. So those are challenging and emerging today. Those are not economically viable. Be it India or any developed country, at least still it is in a pilot stage. We have the advantage. Earlier we used to copy others. Today we are at par with them as far as this is concerned. And we in India have tremendous talents. If IREDA can do, 10 IREDA can be built. If one PSU can do, 10 PSU can come. You look at bigger PSU, NBFC like NBF, REC, PFC, they were not doing earlier renewable. They have started doing aggressively. If you see last audited result of PFC and REC is having 6% loan book size in renewable. PFC is having 10% of their size in renewable, which they were not having. Since future is renewable, and we need fair amount of energy to have, and if you see the kind of capital requirement, it is roughly 2.5% of GDP requirement. That is a fair amount of capital for this sector. And when I said that in future, we have to cater again in the similar manner the way we did. But since the scale and size was very small earlier, IREDA alone could do. But since the scale and size is going to be very huge now, we need at least 10 IREDA. And if you look at the balance sheet size of REC PFC, almost 10 times of IREDA. I'm talking of standalone. And they have to realign. IREDA has already built up a ecosystem which has been tried, tested, and trusted. That 3T has already been passed. Time has come. We have to work cohesively to see how the sector can further push the way we have done solar, that can be done to the new and emerging one. And I'm sure the developers who are associated with IREDA, they have already had their experience of last 20-25 years. I think tomorrow is the listing of one of our borrower who is there with us since more than 25 years. And post IREDA IPO, the mindset of the investor towards the renewable has also undergone change. The mindset of investor in the energy space has already gone. I can share with you openly one thing. When we went our IPO, because our IPO was talked upon, in the roadside I was finding difficult to convince them what kind of potential the sector is having. Because we never had a benchmark. Because nobody is there like us in the country which can be compared. Because we are the benchmark. But since nothing was there, they used to consider near peer like REC, PFC or others. I used to tell the prospective investors, it will be a mistake if you compare with them. When we are 100% renewable, their loan book is not significant in this space. Not only that, unlike fossil fuel, in non-fossil fuel, 80% of the developers are private sector. But if you see fossil fuel, 80% of our developers are government sector. So there is a completely different here. And if you see those other NBFCs, the larger book size is from government space. Out of our total 63,000 crore, 76% is coming from private sector. And NPA happens in private sector, not in government. Despite that, we could ensure 0.95 NPA. Despite that, we could ensure cumulative write-off 202 crore. So therefore, I am confident in the time to come in the green transition, financing, because we require fair amount of capital investment. And whatever FDI route the funds are coming, those are mostly coming in equity, not much debt. We need to have a defined bond market for that. The green taxonomy is going to play a key role. I can just broadly tell, because ultimately government is going to announce that. We have given a list of industry which can be considered as green. The crux of our advice or suggestion is, government can mandate to the retirement funds, be it gratuity, pension and others, up to 5% of their AUM earmarking for bond market. That will enable at least 3.5 lakh crores of bond market investment in the country. That can be the initiative. The moment defined bond market is there, we can expect the ESG funds and other green funds from the overseas for coming to this sector. I'll add one input because I'm talking, I think, longer. Being the largest pure play green finance company in the country, I'm much more responsible for this to tell you. And our theme also of IREDA, responsible for renewable. Before I forget and jump, MNR is organizing an event, International Green Hydrogen Conference in Bharat Mandapam in Delhi, 11, 12, 13. On behalf of MNR, I am requesting you to please come and attend. CII is organizing and IREDA is the fund manager for the program in Gandhinagar, RE Invest Meet 16, 17, 18. I am formally, informally inviting you. Please come and participate there. Honorable Prime Minister is going to open that, and we are having a fair amount of big size of stalls. Probably you might not have seen. Being the largest pure play green finance company, we have the responsibility to have the largest stall also. And Honorable Prime Minister is expected to come to our stall. This event is going to give you fair amount of idea how the renewable industry is going to behave in the time to come, what the global player, domestic player, and local player are going to play a key role. See, when we talk about inclusive growth, in IREDA, we had enabled that. We have fund-based developers who are setting up the project. We have small-time players like 2 megawatt solar project to some ethanol, compressed biogas, some 30, 40 crore project also. In IREDA, we give equal importance to all. Because unless we bring in our Indian developer into this system, country will not achieve that kind of success what is expected from renewable. I'll take a pause here and I'm open for any kind of questions. What I said, if I have not said anything to the sector, I'll try to reply. If I cannot reply, send me an email, you will get a reply. Thank you.
Thank you. I think that was very comprehensive, and your point about having 10 IREDAs is very, very important. I think there's a huge opportunity, but also I think there's a huge funding gap which you highlighted. I think if we don't work hard together in it, we won't be able to fulfill the greening or evolution of India into a sustainable economy. So again, Manish, then over to you, the private sector IREDA, how you see the world, how you see it changing.
Thank you, Mukundan. Thanks, CII, for this opportunity. Very good afternoon, esteemed audience. So, Tata Group and IFC started a climate finance company 10 years back. And as Mukundan said that since then we have funded over 350 projects for aggregate disbursement of over $3 billion US. So the experience which we have gained through that, I want to give certain insights, especially related to the funding needs which Mukundan was speaking about. So, this funding needs was broadly about $20 billion in the last 2-3 years, the actual funding which came into this segment. And if you take last 6-7 years, it was about 80 billion. But if you take the next 7-8 years, then it's going to increase by 10 times. So we are talking about requirement of about 700 to 800 billion across various sectors, which is huge, which is almost 50% of the current credit book of banks, which is about 1.6 trillions. Now, this funding need can be, divided into 3 buckets. The first bucket is where we have technology in place and where we also have business models in place. The second bucket is where technology is definitely there, but the business models are evolving. And third is where neither technology is there, and of course, business models are not there. The good news is that while we are talking about almost 100 billion per year, going from 20 to 100 billion per year, but at least 60% of the funding requirement is what is in the money. In the money means that we have technology in place, we have business models in place. What we need to do here is essentially reduce friction in the system. Obviously, I'm talking about solar energy, wind energy, which is a huge requirement. Now here, if we can solve the problem of connectivity, land acquisition, the health of the public institutions who purchase the final output, who are the off-takers, then we can enhance the execution from what we are doing today, which is about 15 gigawatts, to at least 30 to 35 gigawatts without any problems. Now let's come to the second bucket. Second bucket is that bucket where we have the technology in place and business models are improving. Still, not 100% there, which is essentially electric mobility, which is, I would say, waste to energy, which is sector like, say, biofuels, bioenergy. Now here, country has made a lot of progress, but then still there are concerns around the health of the institutions who are the off-takers. Like if you take electric buses, it is state transport undertakings. So government is coming out with the payment security mechanism. But what we have to appreciate is that while we can come out with a payment security mechanism, but ultimately we have to look at the health of these institutions. Otherwise, the model will not be scalable. Here again, I expect that very soon, the investments will pick up significantly. It is the third bucket, which is really an issue in terms of financing. Second bucket also, I do believe that today they are where, say, solar and wind was in 2015. And in the next few years, we should see significant progress, hockey stick progress. The third bucket is where we really need to think very, very innovatively. Now here, I think these are the segments like, say, green hydrogen, or say carbon capture, utilization and storage, or say hard to abate sectors, or say, sectors where adaptation is important, like water storage and water recycling, sustainable agriculture, or maybe cooling in the large scale. Cooling today is a luxury, but tomorrow it will become a necessity. So in these kind of segments, I think again, startups are doing a good job. What we need to see is that how we can create a better incubator system. How can DFIs and how can corporates really collaborate with the startups and with the tech service providers and see how the basic technology itself can improve. Ultimately, the contribution of corporates will be very important because they will have to be the flag bearer. Somewhere I was reading a very important statistics that today, if you take the 100 biggest entities by revenue or GDP, 40 are actually corporates. So corporates have to play a very, very important role in this segment. Of course, regulations have to play a very important role because unless you force people to calculate something, to disclose something, it's never monitored. So that's going to play an important role. And then will come the question of financing. One has to be very clear that if financing is based on subsidies, it is not scalable. So I think what we need to really see is that how we can create an incubator system, how we can create a startup system, how we can create an angel financing system with the help of international climate investors who are development financial institutions, with the help of corporate, and solve this problem. So that is my initial remarks, and I'm happy to maybe take these discussions forward.
Thank you, Manish. I couldn't agree with you more, mainly because I think many of the new technologies where the risk is higher, I think it needs some kind of a initial push, not a push forever. It's not a subsidy, it's not the solution, but also the whole point about de-risking it from many other formats will be very, very critical. Otherwise, scaling up those new areas will not happen, and they are critical for future in the long run. I mean, if you have to make clearly the transition. So finally, Sandeep, it boils down to all the I's and dots which we have to put on the document with what Manish has said and what Pradeep has said and what Prashant has said, because financing is one part, but actually getting this up and running and making sure everything works to the T is the most important thing. And your opening remarks.
Thank you. So actually sitting with Pradeep Bhai in the lounge outside, and he said he has a completely paperless office. So I quickly hid the notepad I was scribbling on. My view on...
Actually, our business center is paperless. My office, other offices are still having paper. To reach that stage, we may take some time. But what paper we require, almost 99% paper has already been reduced because business is paperless now. So and not only that, we are near to zero visitor also.
So I can use this today. Okay, great. So, in terms of regulation, I think some mention has been made about, some of the taxonomies which are coming, which is essentially, how you phrase your green ventures, etc., how you do the accounting, how you disclose it. And, that's a really important part of, and again, globally, many global entities have done this. India, I think, there is a task force which is set up, so probably a couple of months we'll have that. We've had, we're one of the first and few countries which have the CSR requirement, which is translated into very significant work. I think it had a lot of skeptics initially, but I think, I sit on the board of HDFC Bank, and, the passion with which people kind of conduct the ESG and CSR activity is quite admirable. There are kind of lots of other things which have occurred in the past, few years. SEBI came out with something known as a social stock exchange, which is not yet fully taken off, but I mean, the platform is available, which again enables people to raise money without benefit. So, you could invest in a company which doesn't give you any dividend. It doesn't even give you back your capital. But what you get in return is you get complete transparency of a listed company. So you'll have the annual reports, you'll have, financial statements coming from it, how the money has been deployed, etc. Exactly identical, nearly identical to that of a regular listed company. We've had the BRSR code, which came from SEBI, and it was pretty long and detailed. So SEBI has now cut it down to a more digestible document, which can be followed more easily. We've had significant regulations coming in from RBI, SEBI, and IRDA on disclosures, what needs to be disclosed, and how can you raise funds, etc. And of course, the global bit in terms of sustainable developmental goals, which I think we've done a fair job. I think more than fair job in solar, for instance, and several other segments we are way ahead of our goals. And essentially, it's not just the disclosures. It's, I think, these regulations aim to kind of percolate ESG norms deep inside the strategy of a company and not just kind of be a tick box, whether it's corporate operations, whether it's strategic decisions, or whether it's investment decisions. And unfortunately, I think we still have a long way to go when we look at, because the topic today is financing. I think the last green bond was at 3 or 4 basis points. So I mean, that's really not a great story to tell, really, in terms of are people like you and me kind of very enthusiastic about these bonds? The answer is no. But I think all of these 7, 8 things put together would, it's a bit like a metro network, right? If you're, those of you who were in Delhi when the metro started, people had written it off because nobody was using it, because only one line was open that time. And people couldn't go from point A to point B. And that's true of all metros networks. Till the time the entire network is set up, metros really don't take off. And similarly, I think all these things, the CSR norms, social stock exchange, BRSR, disclosure, taxonomy, I think those are all kind of parts of the puzzle which are now coming together. And I'm very optimistic in terms of where we're going to go with this. I think we're going to be way ahead of the 2070 deadline that we've put on ourselves. And frankly, I see regulations in this area as an enabler. It's, normally regulations come in because people kind of go off track and do funny stuff. But here, I think I would think of it more in terms of a railway track. If you don't have tracks, the train's not going to go at all or very fast. So I think I see regulation in this space to be, the railway tracks that we're laying down.
Thank you, Sandeep. I think fundamentally, most of us look at regulation as one of the guardrails, because I think you need guardrails in any case while you would want the market forces to operate. So, Prashant, I'm going to start with you in terms of questions. If traditional banks, if they have to sort of do more green financing and support the projects, do you think time has come for us to start green accounting principles, so that we take into account the full issues of benefits and risks, and the P&L starts to reflect it? Would that push the banking institutions to sort of see the benefit of going in that direction? Or do you have any other thoughts in terms of how do we sort of push forward this whole point also? Because I think specialized institutions are very important, but also the general institutions, the share has to increase, as he has highlighted, 6%, 10%. Can it go to 30, 40%? You have any thoughts on that?
Well, I think as a traditional bank, it is very important to see both the sides. One, in terms of how you finance on the green, but at the same time, you also need to see that there is no leaking bucket. Because what we can do, we can continue to finance the green side, but as a traditional bank, we also finance those industries which are actually adding to the climate risk. So I think that would be very critical. And I think the point which you are talking about in terms of green accounting would be critical not only in terms of the real impact on the financial side. Because maybe some years back, it was only a discussion in the drawing rooms that climate is changing and what are the risks around it. Now, I think day in and day out, we are facing that. Uncertainties about the climate is not only has increased the risk of the uncertainties, but also now risk is actually moving into the deep financial impact of the traditional business. So earlier, like if you are financing a very simple construction activities, and you were taking into account maybe 365 days out of the year, you see the manpower which is being used, say, for 325 days. But today, because of the uncertainties of the climate, like if you see the first quarter of this financial year, there has been a huge impact because of the severe heat wave. Every business has been impacted. Okay? Similarly, what we are seeing in terms of rains, flooding, it means when you work out the economics of any business, you can't take the manpower or man hours equivalent to those number of days. They would be seriously coming down. Similarly, there is an impact in terms of even the output for the individual person. So I think in terms of the green accounting for the green finance as well as for the non-green activities, just to stop that there is no, we as a, I think as a country or as a globe should not reach to a point of no return. So I think we need to stop this, and the green accounting can definitely take care of the real impact when you finance any kind of activities. But I think it is still like, first we need to work in terms of the taxonomies, the clear-cut articulation, the understanding of the financial impact. But I would completely agree with you. I think this is the need of the hour.
Thank you, Prashant. Coming to you, Pradeep, I think you, of course, spoke a lot about the lending you've done, but I think the growth ambition which you have, where are the sources of funding and how are you going to raise capital to support the future growth? I mean, is those sources of capital available, and what we need to do as an institution and as a country to sort of attract that capital a lot more?
Thank you. You have asked perfect question that will make me at ease, comfortable. If you look at our balance sheet of March 20, when we had 22,500 crore roughly, if you see our net worth was stagnant for 4 years. In NBFC, if your net worth is stagnant, how you can grow? Number one. Then number two, quality of management. We heard a lot about quality of management and other things, because you have to ensure the best quality corporate governance standards, and that will emerge from the quality of management. And we are AA. We reduced from AAA to AA in March 20. And in 2 years, we are upgraded to AAA stable. One agency took 4 years to upgrade AAA stable. So we have in India, the rating agencies, looking at one benchmarking organization, still they had the concern. And I'm happy to share, just a couple of days back, we got international rating, none other than from S&P. Normally, any entity will not dare to go to S&P directly. They'll prefer other agencies. I'm not discounting other agencies, let me be very clear. And they also given in the report that we are considering one notch up IRIDA and giving the sovereign category rating. Our team was anxious to have even 1+ notch up. They said that we have never given to anybody in first round sovereign rating also. You know, many agency in our kind of organization. And see, if you look at, as I said, our qualitative corporate governance is benchmark in the country today in this industry. So that was very much required. I'll talk about a couple of points, how this funding, peculiarly in this industry, during the construction period, 75% is your hard cost and 25% is your interest cost. The moment project is commissioned and COD is over, 1 year of trial testing is run, that means you have all gone through that season, because renewable more towards seasons, then it becomes a completely zero symmetry of information. There is no asymmetry in information. Then the developer looks for only interest arbitrage. That was the reason, because our interest matrix was not aligned with the industry requirement. What was happening, we sanctioned, we developed, commissioned, and we used to continue the traditional mindset of the interest rate. We brought in that kind of dynamism into the system. During construction, X rate. Post construction, completion of construction, X minus Y. Post COD of 1 year or 6 months, X minus Y minus Z, automatically in the system. Then the developer need not look at here and there. That enabled us to retain our account. See, we have done the effort. We have done the promoters assessment and all. And mind it, these are the RE players who are going on adding to the capacity what they are having. So we have the borrower profile and other things with us. So we have to only add the mathematics of the additional project what they are going to do. So with a minimum effort, maximum result we could bring in. So that is one. And they always look at as low as possible interest. And if you look at prior to 10 years, 15 years, the developing economies, all the multilateral and bilateral agencies, they used to come forward and support us. They used to consider us for a concessional lending. But their concessional lending as on date is becoming theory. As a result, in last 4 years, in our resource mix, we used to have 57% forex and 43% domestic. If you see our June result, we have 84% domestic and 16% forex. It is a true Atmanirbhar Bharat as far as debt raising is concerned by the IREDA. We are happy that in our economy we are having that kind of debt support. But the kind and size of financing what it is required in the time to come and the kind of interest rate what they are expecting. See, today we are having 3+ NIM. Since we are having a kind of super expertise in this field, we considered as the most preferred lender. A choice is given. Because our turnaround time from application to sanction and disbursement is quickest. At times people question why you are doing so fast. So earlier when we were not doing, they used to question why you are delaying. And if you are doing first, then a question. If you are delaying, then there is a question. But we have a fair mechanism and system in place. So in the time to come, we'll focus on turnaround time by which the construction period is going to reduce so that the IDs will be less. And post-construction, we have to ensure most competitive bid to them. And in the emerging space, we need to again take the support of those agencies who handholded us earlier when the industry was in infancy stage. As far as new and emerging, we are at infancy. 3 I can name, be it pump storage, battery storage, be it green hydrogen and its derivative, be it offshore wind. And those are today not viable. That viability gap is there. But what happens in India typically, when we start getting this subsidy, incentives and supports, we continue to carry the inertia of handholding by the regulator as well as by the policy makers, by the government to continue forever. Connect with your natural life. When infancy, parental handholding is required. When you are grown up, matured, handholding should be stopped. Same thing to be adopted in this space also. And supporting through subsidy, as already been said, it is not sustainable in the long run. And that is not correct approach to develop a sector also. Kind and size of capital required, we can in-house fairly meet once we have a defined green taxonomy and an organized bond market in the country. But today, you look at, we are 100% green finance company. We do not have any single concessional benefit. Even 54 EC benefit is not there with us. Our so-called peers, they are having that benefit. And straight away the difference between my borrowing cost and 54 EC vis-a-vis and others, 1.25 to 1.5. That makes a hell of difference. If I'm having that, today which projects are not becoming bankable, those can become bankable. So we have requested Government of India, we have to reduce our borrowing cost to give us a permission so that we can raise. See, they have nothing to give, only they have to enlist us in that category as one entity so that we can also get. There is a bucket and you prove your competency, connect with the investors. And I think we have very lucky to have fair amount of connectivity with the investor as on date post our IPO. And we have fair amount of credibility in the market as far as corporate governance is concerned. That is one area. Second, since I said Forex is going down, since the landed cost is becoming costlier vis-a-vis the domestic cost, we have opened an office in Gift City, which is going to be operational very soon. What we are going to do there, we'll channelize this overseas funding. Today, when we are converting, that hedging cost is becoming significant, 3.5 to 4.5 is hedging cost. Then Government of India guarantee fees, commitment charges, though sigma of that is 7.5 to 8. And in domestic market, we are getting less than 7.5. So now the Indian developer who are setting the project overseas or setting up a project in India having Forex inflow in their revenue, so they can go for natural hedging. So we'll borrow in Forex and lend them in Forex. So at least 5 to 5.5 almost we can save. And as a responsible NBFC of Government of India and extended arm of MNRE, we are not focusing on improvising on NIM. We are focusing on speedy RE development and ensuring quality governance so that the developer gets the true benefit of the cost saving what we are going to do it. I can tell you here, we have never focused on improvising our NIM. What is fair? RBI talks two things. If you are having a risk, you should have fairly risk premium. Vanillary, risk free, we do not have any risk premium. Most competitive. We are competing with our competitors because we are borrowing from bank. Bank is also lending that space. We are also lending that space. So it is very difficult to compete there. But in emerging one, we are not competing with anybody. We have fair amount of chance to have fair amount of BA, but we do not want that. If you look at our name is between 3 to 3.5. Most of the programs, the media ask me, what is your name likely to be? And about our roadmap, we have already, see, 2024 is a happening year in the history of IRIDA. I don't think that kind of history can happen in the future because from AA to AAA stable by all four agencies, then Mini Ratna to Navaratna, getting infrastructures, opening of Gift City office. Not only that, getting listed and sustaining the listing price. Last, we have already submitted a roadmap for Maharatna to Navaratna by 2030. Our goal and object is with a purpose. And if your intent is clear and purpose is well defined, you can easily achieve the success. We have aligned with 2030, 500 gigawatt, what kind of capital requirement, what kind of key role we have played and we can play in future. We'll try to ensure that minimum borrowing cost by us and we'll pass on the fair amount of share to the developers. We'll definitely keep with us because today we are a listed company. We have to give fair amount return to our investor also. So therefore, we'll definitely keep some pie of that. But our focus will not be just to keep on improvising NIM. Our focus will be to ensure healthy ecosystem and cohesive development of the sector and to reach that 500 gigawatt in a jet speed by 2030. Thank you.
Thank you. Thank you, Pratik. They're very comprehensive. Manish, do you want to add anything to that in terms of the capital gap? How you think, what steps we need to do further?
Yeah, so I think the key step we need to take is clearly remove the friction in the system. And when it comes to renewables, there are certain frictions. One is clearly that in India, we have a connectivity approval, which takes a long time. Plus our network itself needs a significant upgrade. And transmission network takes about 3-4 years to come, while the solar project comes in 1.5 years. So I think that's one thing we have to address. The other is that when it comes to land, today the land records in India are not digitized. And land acquisition takes a long time. Secondly, what we have seen is that quite a few developers, they are actually acquiring agricultural land and then converting it into industrial. But India has a huge wasteland. And I think that is what needs to be used for renewable projects. Because ultimately, we don't want agriculture land to compete with the land required for solar. I think that's the issue country needs to solve. Apart from that, if we are really talking about taking into account green accounting, then we need to think in terms of solar waste as well. Today we are thinking in terms of solar installation, but we don't have proper processes in place to ensure that once these modules are no longer usable after 25 years, then what will be done with those modules? I think for that we need to have a model in place. In a lot of other countries, they have found a solution. There is a fund which is created, and ultimately these modules are disposed of. So I think this is what is in terms of that sector, which is fairly mainstreamed and in the money. Apart from that, when it comes to segments like energy storage or in terms of electric mobility, I think clearly we need to sharpen our business model. There's a huge concern on the payment security mechanism. And government is taking a lot of steps to address it. I think once those are addressed, then this segment will significantly go up. And then we come to the third segment, which is where we have a basic issue on viability, which is segments like green hydrogen, and which is segment like say CCUS. And these technologies are very important for hard to abate sectors. When we talk about steel or cement, whatever we have got right now, we can only solve 30% of the problem. For 70%, we need CCUS to be in place. We need green hydrogen to be in place. So there, I think, government will have to do what was done for solar and wind, where we used to have a renewable purchase obligation. I think we need to have a hydrogen purchase obligation so that scale comes into the sector. Once scale comes, then cost of electrolyzers will come down. And at the same time, what is happening is that the cost of storage and cost of and the efficiency of solar panels is anyway going up. So that would mean that the cost of green hydrogen will come down. Lastly, we spoke about green accounting. There I think a lot of work has happened. But then it has three aspects. And we can't just look at one. One is clearly the climate risk. So today banks, when they do enterprise risk management, they don't take into account climate risk. I think RBI is working on it and probably will have guidelines soon. The second aspect is the disclosure, where again, SEBI has done a very good job in terms of BRSR. And once the disclosures improve, I think, the monitoring will also be much better. And there's a third aspect which is very important, which is on the carbon pricing, where, we have an emission trading system in Europe and China. We need to have the same kind of a system in India. And there again, a lot of work is happening. The laws have been enacted, and I think the platform is under development. So I guess this all is in work in progress, but things are moving in the right direction. That's what I have to say.
Thank you, Manish. I think we are really, I would have wanted to open this up, but I think we are running way behind schedule, and I think we just have to wrap up by 3. So I'm pretty sure that all the panelists will be here for you to sort of engage with them. And their teams are here in any case. I think you could talk to them. But before we finish, I think Pradeep wanted to highlight one piece about democratizing this green, because one of the things about it is that you can talk about big developers, big companies, but how do you make even a common man connect to this whole thing, which government is trying to push? You wanted to speak about that specific passionate point of the government and how you are going to play a role in it.
Yeah, thank you. Before that, I'll tell about one uniqueness of our company that SEBI chairperson talk about women empowerment to Viksit Bharat. What has been discussed today morning, I was so thrilled that most of the things we have practiced last 4 years. Our organization is having highest percentage of women representation in public sector space in any kind. 27% of our women workforce is here. Incidentally, one of the officer is sitting in the first row. Our director of finance also had some other schedule. He changed that and came here. See, apart from that, we talk about ESG and BSRS. We have been having ESG practice for World Bank and other funded projects since 97. And BSRS compliant we have done in last year. And fresh equity we are going to add around 4,500. That final figure will be determined most likely in January, February, going to hit the market again. That government approval for natural dilution of their will be there. Talking about 2 points, because all developers, big projects, everybody is coming. Bankers are also coming in vanilla area space. When it is new and emerging and retail, SME, we are still struggling. See, IREDA is not designed to take up the retail activity. I can openly say, our new minister, Honorable Mr. Prahlad Joshi, had a review meeting just 3 days back. He pointed one point that छोटा डेवलपर को कैसे मिलेगा आप उसके लिए बताओ मेरे को. So I'm going to submit a roadmap for that with them. Is it doable by IREDA? First of all, is it doable? Why banks are not coming forward? Because any lending agency, until unless they are comfortable with security and bankability of that, whatever we say, nobody will come forward. Because we are all responsible for our job at the end of the day. And particularly if it is a government bank and government NBFC. So also private. In lending, I don't find RBI allows anything to government or private separately. They are so hard. They are also giving monetary penalty to PSU and VFCs. So therefore, we have to take note of that. 2 programs of Government of India. One is Kusum, which is solarizing the agriculture sector. There are A, B, C schemes. We felt that, our ministry felt, the parliament committee felt that nobody is coming forward, nothing is happening. Since 2019, the policy came. But nothing has happened. 6 months back, we started. We created a retail division, focused in. We have started lending fairly in B and C scheme space. That means which are coming to us in aggregator mode, we are doing that. And in rooftop solar, which was announced by Honorable Prime Minister for 1 crore household, that is a hardcore retail activity. We have 169 employees now, which we had 179 4 years back. We have gone 3 times our book size. We have gone fair amount of automation, but certainly this kind of hardcore retail pan-India, we cannot. But we are coming forward as a mechanism. We have requested to Government of India, allow us to create a separate retail subsidiary. Because retail financing is completely a different ballgame. You have to have completely tech enabled platform, different kind of mindset in your team for working. The person who is doing ethanol, 500, 400 crore project appraisal or 4,000 crores of solar or wind appraisal, if you give him doing this kusum or rooftop retail, probably the person may not find it comfortable to do that. That is the practical and hard reality. So we have to create a separate ecosystem for that. And government is very particular in that. We'll come out with a mechanism and we'll find out what are the hindrance and deterrent. And we have 5-6 MOUs with different banks. We'll take the input from them. We'll submit a roadmap, how we can make it bankable. Ultimately, see, Kusum was not picking up. Lot of policy and other intervention by the government has happened and already started picking up. Similarly, SME space, why it is not coming? Because SME is in a small segment. Corporate governance issues are there. Whatever corporate governance improvement we make, we will get borrowing cost down. But we cannot give you the lending rate down until unless you improvise your corporate governance. Therefore, this SME space and retail space, where governance is an issue, as a lender, that will be a challenge. But we have to work together and in a cohesive manner to build up that ecosystem, how to cater that need. Probably the time has come. IREDA has to take that responsibility also to address the challenges in this sector. Thank you.
Thank you, Pradeep. I think, firstly, a big round of applause to all our panelists. I think this is an unfinished agenda, a long journey. But to Pradeep, I want to say maybe you should shake hands with Prashant and he's got a big retail network. That may be the solution. That's what this panel can do to connect you both to sort of move forward in the direction. And certainly, I think while you do the big project, the retail projects can be done by the retail banks. Thank you all and thank you for your kind participation. And they are here to address your questions. So please do engage with them. Thank you.
I thank you all, gentlemen. Could I request you to step ahead for a group picture, please? Yes. So, ladies and gentlemen, please remain seated. We are not breaking. We will begin the next session in a couple of moments. Just allow us a little time for changeover. The next session will be on India's financial services in the era of new age technologies. The chair of the session and the panel speakers are here already, but it will take us a few seconds for changeover. In the meanwhile, ladies and gentlemen, as we are aware, India has been at the forefront of innovation in the fintech space that has significantly transformed the financial sector landscape in the country. New age technologies like artificial intelligence, quantum computing, machine learning are making a significant shift in how financial services providers and customers interact and transact. Early adopters of these technologies are better positioned to respond to market dynamics, meet customer demands, and drive growth. The session will delve into the current financial sector landscape and prospects of leveraging new age technologies in India, along with highlighting the key challenges and opportunities presented by these technologies and devising strategies for enhancing adoption of these technologies. So we are almost set to begin the next session, which will be chaired by Dr. Janmejaya Sinha, Chairman, BCG India, and the panelists are Mr. Rajiv Anand, Deputy Managing Director, Axis Bank, Ms. Ispita Das Gupta, Managing Director, HP India Market, Mr. Rishi Gupta, Managing Director and CEO, Fino Payments Bank, Mr. Nishant Singh, Founder and Global CEO, Business Next, and Mr. Ashish Papadia, Partner, Bloom Ventures. So all those who have moved away from the seats, requested to please settle down. Let me remind you of the high tea that has been arranged at the end of the day, wherein you will be able to network with your peers from the sector and counterparts from other organizations. So yes, we are all ready to begin the next session, India's financial services in the new era of new age technologies. Could I request the session chairperson and the panel speakers to please take their seats on the dais? Session Chair Dr. Janmejaya Sinha, Mr. Rajiv Anand, Ms. Ispita Das Gupta, Mr. Rishi Gupta, Mr. Nishant Singh and Mr. Ashish Papadia. Let us put our hands together for Dr. Janmejaya Sinha, Chairman BCG India, and the panel speakers, Mr. Rajiv Anand, Deputy Managing Director, Axis Bank, Ms. Ispita Das Gupta, Managing Director, HP India Market, Mr. Rishi Gupta, Managing Director and CEO, Fino Payments Bank, Mr. Nishant Singh, Founder and Global CEO, Business Next, and Mr. Ashish Papadia, Partner, Bloom Ventures. Yes, we are all good to go. I will request Dr. Sinha to please take charge of the session.
Thank you so much. It's a pleasure to be here and to talk on a subject which is actually quite interesting, financial services in the era of new technologies. Now, if you think about it, financial services are different from other services and different from other companies, because in financial services, your product can be delivered digitally. There is no real product that you have to give. And so in a sense, technology can totally transform it, because you could have an entire industry, literally speaking, in the cloud. So it's a very, very different image to think of, because if you just spend time thinking about a bank, what did you see? A big building, with strong, deep walls and big doors, and your money was kept safe inside. Now this whole thing is undergoing a huge transformation. In fact, if you see the panel today, it will reflect it. The panel is fascinating. It has a bank, it has a technology company, it has a payments company, it has technology providers, and it has a venture capitalist. So somebody giving the money to build the technologies, somebody building the technologies, somebody creating a payment structure, somebody using it, and somebody selling their computers to these guys who are using it. So it's really a fascinating panel. And I can assure you, even 5 years ago, a discussion of this nature would not have had this panel. So it is a really, really interesting time to have this discussion. And as the chief economic advisor was saying in the morning, one of the biggest, most binding constraints towards any image of a Viksit Bharat is dependent on financial services. All the major challenges that India will face on this journey of going green, everything or many of these elements will be determined or enabled by financial services, right? So this is the context. The other thing that this panel will do, which no other panel has done, and so you will all applaud me for it, is that we will get participation from the audience. Yeah, exactly. Come on. Everyone till now has just been speaking and no one's been getting the audience in. This time we are going to get the audience in. So think of your questions and we will ask the panelist who's misbehaving the most, so that we can all be in good humor. So to begin with, I'd like to go to Rajiv, because after looking at everyone else, he's the closest to me in age. So I think it's most appropriate that I begin with Rajiv. And Rajiv, you are running Axis Bank. What is the difference in your spend on technology over the last 20 years? How much did you spend 20 years ago, 10 years ago, and today? And how much of your time are you worried about technology risks, cyber risks compared to credit risks and market risks?
Thank you, Dr. Sinha. I'm not sure what the numbers were, between 20 years and today. But what I can tell you is that at the board level, there is so much more conversation around technology, the use of technology, and the risks associated with it. There is about 5, 7, 8 years ago, there was a creation of an IT committee at the board level. And then we expanded the scope of that committee to include digital, because much of the conversation at the IT committee was around what are the kind of spends we had on hardware and software and the kind of stuff that Ipshita would sell to us, but not so much in terms of the front end and what we were actually doing with that, and whether there was a difference that we were making to our consumers. And so therefore, there is a lot more conversation that is happening at the highest levels. Ultimately, I mean, we can all talk about whether we are a fintech company or tech fin company, and whether banks need to exist with or without technology, etc. I think all those have become cliches. But at the end of the day, all banks run on technology, and therefore, if organizations are not spending enough time, energy thinking about the technology that's available today and what is going to be available day after tomorrow, I think it's a question of survival, because two things are happening. Technology is changing very rapidly and customer expectations are changing very rapidly. And so therefore, if you're not able to keep up with that, to my mind, boards are doing a disservice to their shareholders, to their consumers, and therefore then it becomes a question of survival on whether you will survive over the next 5 to 10 years.
Wonderful. So, Ipsita, and I'm pronouncing your name correctly after Rajiv called you some other name, So, but the question that I'm asking you is somewhat similar. 10 years ago and today, what is the difference in the computer or the printer that you would want to get Axis Bank to use? All these new terms of artificial intelligence and other terms, how does it, to a layman, explain what is changing? What is changing in your offering to a bank? And why is it that it is important for banks to understand the change in the offerings that are now on offer?
So that's a great question. I'm not going to talk about the technology, but I'm going to talk about the impact the technology has on two stakeholders: the customers for the banking sector and the employees in the banking sector. I was thinking about your question to Rajiv, and one of your own studies says that Indian banks spend 40% less on technology, a BCG study, than foreign banks. And I was thinking about what the evolution has been with technology, and what it's done from a customer perspective is it's removed the face of the banker. It has made it much more efficient, much more effective, but also less personalized. The opportunity now with the kind of technologies in play and this whole concept of AI, which is evolving every single day, is the ability to actually bring empathy and bring personalized customization back to the customer. But I want to just step back and talk a little bit about the other side of the equation, which is workers. If you think about workers, there are two aspects that I think technology plays a very big role in, and specifically, again, AI. And we see it in generative AI in general, but even today, as you were asking, on the PC, the AI PC as well. I can talk about specific examples if it makes sense later. There are two things you need workers to have. They need to be productive, but you also need to think about their well-being. And one of the things that technology does today, and technology will do even more in the future as we get more and more used to having AI at our endpoints, our endpoint technologies, is to remove the grind, is to remove the detail-oriented, mundane tasks, which allows for more creation, which allows for the worker to be more empathetic and to spend more time thinking about the customer. So I think those are ways in which technology is evolving, and we're going to see this rapid evolution every 30, 60, 90 days on what AI can do and what technology can do.
Nishant, I'll come to you. You are creating technologies that companies are using, right? The same question to you. What has changed over the last 5 years? 10 years is, I think, eternity in technology, so I won't take you 10 years back, but 5 years. What were the types of offerings you had 5 years ago, and how have they changed? And what is the benefit that is accruing by this change?
To answer that, let me answer that in context of India. Because what happens is as you go around the globe, you see that financial service is taking to technology at different pace. What's different with India is we're starting to have this compounding impact of disruption that the government started. So one of the best things about India is one of the most exciting places to be here, because the government wants to disrupt banks and financial institutions. So you saw UPI, and what it really showed us was this three-layer construct for innovation. It was technology, a governance, and then the allowing players to play on the top. So what that really means is that as more and more tech starts to come in the same format, whether it's the ULI, which has been announced last 1 year, has been piloting, a lot of fundamental stack that the bank had is kind of transforming outside in, right? And one of the things we see banks is they're kind of starting to open up the entire bank's core to the world. So they're trying to be more invisible. So if they want to skin this cat, they can't do it alone. So you're seeing open banking initiatives. You're seeing BaaS, where you're trying to see a lot of stuff going into embedded financing. And so the complete disruption and how you play, those stacks have changed. Earlier, you used to think in terms of LOS. You used to think in terms of CRM. You used to think in these kind of very well-sorted categories of software. Today, you're thinking in terms of continuous channel. You're thinking of hyper SaaS. You're looking at cloud, AI, at very different constructs. And then, of course, also such an interconnected world gives its own threats on security and the perception of control. So I think, in short, these are really the macro trends. But above all, I can tell you today, 5 years, if you took a survey of the CEOs 5 years ago, growth was their highest concern. I think over in this year, almost all the 3 surveys that went out from Gartner's and others, every CEO, tech transformation is the largest concern above growth. So that tells you how much banks have changed and how things are formatively changing.
That's great. That's an interesting point. I'll come back to that. Rishi, how are you helping MSME? You've heard about technology. You have come into this space with a mixed origin of technology and payments. But every day I'm told that the MSME continue to struggle and continue to have challenges in accessing financial services. What are you doing to make their lives easier?
Before coming to that question, I probably would like to maybe delve a little bit on the entire technology piece, because when we started in 2016-17, I think the India stack was coming up at that point of time. We had all the new technologies which we talk about now were coming up at that. We didn't have any legacy systems, so to say. So we were one of the biggest beneficiaries of the entire ecosystem around technology, so to say. But having in 7 years, we are now completely rechanging our entire technology stack again. So that's the pace at which the entire ecosystem is moving. As you rightly said, the core banking is becoming invisible in a form. So we are also working on a project where we are hauling the core. We are moving out most of the core banking activities outside the core because of the transaction flow which is happening. The entire, if you look at the UPI stack and the UPI volumes, if everything starts hitting core, it's going to slow down the core a lot more. So from that point of view, the entire banking ecosystem technology has become one of the biggest drivers for growth as well as for discussions. I think there is no longer a time the CIOs and CTOs are sitting somewhere in one side of the room. They are in the center of every conversation. And I think that is going to become even more relevant and prevalent as we go forward. Coming to the Fino model of MSME and how we are engaging with the mic. See, Fino started with an ecosystem while we are a phygital bank. We have a large ecosystem of merchants, somewhere around 18 lakh merchants. These are your mom and pop shops all across the country who are our banking points, and through them we actually connect with the customer and enable banking for our customers. So these are people who are there in every district, every village, every town, every neighborhood, so to say. So somewhere we are engaging with them on the technology. The entire ecosystem of engagement between our Fino ecosystem backend as well as with the merchants is completely on a technology framework, whether it's on a laptop or a mobile or their own desktop. The entire ecosystem works on a very seamlessly, paperless, frictionless digital platform in which the transaction, whether it's cash transactions or opening an account, solving a query, resolutions, everything happening on the technology. On top of it, what we are trying to do is we are trying to build up a QR mechanism for our merchants. Through the QR mechanism, the merchant can actually build up a profile of his transactions, which can help him to build credit profile, and that will help them to take credit at some point of time. So the entire ecosystem of engagement with the merchants or through them with a lot of MSMEs who are there in the geography is happening through the technology stack, which is largely being built in-house, whereas the backend and everything else is a very stock standard core banking platform, so to say.
So with that data, would an Axis Bank give your guys a loan, or would you give a loan, or how would you facilitate?
So as a payments bank, we cannot offer loan, as you know. So we tie up with Axis Bank, some other NBFCs who want to give loans to that merchant. Basis the data of the transaction as well as balances with
So
us in the
Rajiv, would
account.
you give on that basis of that data loans?
I believe that MSME lending over the next decade will be what retail has been over the last decade, because we are seeing a lot more data about the MSME. We're getting GST data. Transactions are getting more digital. Tax arbitrages are going away, and therefore the ability to lend to reasonably large MSMEs has always been there. But now we are able to lend to the merchant based on the transactions that are going through the QR code or the POS terminal. So therefore, that's the sort of the long tail that we are now able to lend to, and so therefore, and I can speak for Axis, this part of the business is a little over 3 lakh crores now, and almost 20% of the book. We love this business because of the fact that it is granular.
You know, Sanjeev is not here, otherwise that's it. Almost the size of his finance company, yeah? But anyways.
And growing, 20-25% a year. The books, touchwood, are relatively clean, and I do believe that the runway for growth here is tremendous. And we certainly do work with multiple partners to be able to expand our reach as well.
Okay. Ashish, do you mind if I call you the money man? So where are you putting your money? In which technologies are you putting your money, and in which segments do you see the greatest growth and greatest opportunity?
Thank you, Dr. Sinha. I'll just spend about 30 seconds sharing the first part of the question in terms of where we typically allocate money. So we are an early stage tech VC. We typically like to be the first institutions coming into a company with capital, with check sizes ranging from about $1 million to about 3, so about 8 crores to 25 crores. And we are a horizontal firm where we don't have a sector priority per se at the firm level, but at individual partners who lead, we get pretty deep on sector specialization. So coming to the theme of the event in terms of the financial technologies and financial services per se. So within that, we do like to come in where 8 to 25 crore ticket sizes can make a difference. So we would not typically come in and look at businesses that are going to start becoming an insurance company. No matter how great the opportunity is, we believe strongly enough that we have published a full-fledged report last month, but that is not something where our capital can make a difference to the life of the founder. So we will like to come in and support the insurance agents as an example, who are threatened to be disintermediated. The way the business has grown over the last...
Tell us more. How would you support the insurance agent? What would you do?
Yeah. So typically, when we look at how tech works, there is going to be a massive opportunity for centralization. What was earlier going to be operating to 20, 30,000 premises, the banks, are typically today lying in the pockets of every individual through our phones, which is nothing less than a supercomputer. So people can directly reach out and would want to build business networks directly. However, financial services, the view we took is it is going to be heavy area where a massive amount of support infrastructure will be needed. So tech will become a supporting cast and an enabler rather than just try and keep intermediaries out of the business. So an insurance agent typically will now use a platform and say that I will offer multiple policies, which he would otherwise have to struggle because the person cannot cope up with what's happening across maybe a few dozens of insurers, few dozens of policies within every single insurer. And now he has everything available on his app, and he can get a better satiation for his clients who are across needs across various verticals. They can form partnerships amongst themselves and operate as a smaller group, which hitherto would probably be possible, but in the last few years could have been easily disintermediated. Similarly, you look at possibilities of supporting solopreneurs with card services. Thanks to the Jam DJ, what I'm referring to is a massive amount of Jan-Dhan operations have meant simpler bank account operations. We have Aadhaar, which acts as an identity verification. Mobile networks have been world-class. And then the geofication, since that happened over the last 8-10 years. We have seen the massive surge where people would not have otherwise got access to payment mechanisms, and credit becomes easy through distribution of cards. And today, whether it is a bank, whether it is people powered by banks, you are going to make sure that SMEs on the ground level have better services and faster access on the back of these infrastructure, which enables them to be much more relevant. We are not a country which is a small country where few tens of corporates can dominate virtually everything. While perceptionally we talk about it, but 45% of the economy still is going to be SMBs. It's a very large population and a population base of 140 crore. And it becomes crucial for them to have the power of tech and services embedded into their phones. So that's broadly a brief.
You were going to tell some nice anecdotes. Where will you sit and tell them nicely so that we could enjoy it?
Actually, I think the MSME conversation is an interesting one. Because if you actually look at where the biggest digital divide can occur, it's in the usage or adoption of AI. Large enterprises have the ability to experiment, use AI, and address all the concerns that we have today, which are things like cybersecurity, things like the validity of the data that we're getting through AI, because you can have large teams of lawyers, large teams of data analysts verifying the work that you're trying to do through AI. But what we're finding as we spend time with the SME market is that they're being further and further left behind. Where small, we were talking about loans to SMEs. 64 million MSMEs today are not digitized. They come in and talk about acquiring their first computer. Or if they have one, a 40-person chartered accountancy firm in a small town talks about getting 10 computers. They're still not talking about having AI on those computers. And the thing with AI or technology as we see it today is we have to experiment with it. And India is very good at this, right? We adopt technology the way we want to use it. We never adopt technology the way it's delivered. And I think some of the comments that were just made about the fact that we have really gone much further in the way we've approached banking shows that. So if we actually don't start to close that divide, and if we don't start to find ways to give loans, actually there's not that big a price distinction in, for example, buying a PC and buying an AI PC. It's almost negligible. But people don't have a sense of how they can use those PCs for AI and for sort of their capabilities as they need them today. So I think as we think about MSME loans and as we think about how we use technology, the idea of allowing smaller companies, smaller enterprises to experiment with technology to come is going to be really important.
Okay. So I'm going to come to the audience. We'll take 3 questions, one from this side, from the middle, and one from this side. So whoever raises their arm, yes, ma'am. No, you take my mic. Hey, can you get some? There, he's got your mic.
Lovely. My question is for all the folks on the panel, actually. It was interesting to hear
But
about...
we'll only get one of them to answer, otherwise they'll have a good time.
I'll ask Ipsita. So you had mentioned that AI is going to replace a lot of the monotonous tasks so that companies like yours are then able to, say, have more creativity-driven paths. How is, say, HP or similar companies reskilling their employees to actually be able to then have that capacity to be more creative, a little bit away from the usual form of education that doesn't really account for that?
Yeah, it's a great question. So I think there's 2 starting points. One is the one you correctly asked about, which is employees in an organization. And again, the best way to do that is just put the technology in people's hands. We are so early on. When I'm speaking to people today and they ask me about use cases for AI, I say there are just a few that people are very comfortable with today, but in 90 days, a completely different conversation is going to be happening because everybody's experimenting in so many ways. But the other way to think about this is the way all other technology that we're used to has actually gotten itself into the hands of employees, and that is through education. When children, high school, college, and a little bit younger, start to get comfortable with adapting AI for what they need it for, it automatically will come into the workplace. And it's interesting that when you think about mundane tasks going away, it becomes additive. So, I won't give you a financial services example, but I'll give you a simple example. If you are sitting across from a journalist who's interviewing you, and you have a 45-minute conversation, at the end of that conversation, they have to walk away with their transcription, and they have to put a first draft together. Now, if your PC was able to put that first draft together, both in your voice and in the voice of the person who did the interview, to take the best out of anything that they had done in the past, then you're working from the first draft. It allows you to research more. It allows you to be more nuanced. It gives you more time to come back to do something else. So I think those are the kind of things that we're going to be seeing happen more and more. But what we're doing is we've deployed the use of AI like Copilot, like our own AI capabilities on our PC, across our employee base to see how people use it to generate things across different functions.
Let me give you another example of a problem that we're actually grappling with. So far, we've got people in our branches across the country. There are various sort of banking problems that the customer comes with. The earlier model that we used to have was that if you don't know what to do, please ask somebody, your supervisor or somebody. Now we have a AI generated tool where you can sort of punch in a statement saying how do I close an account of a deceased, and you'll get the 4 steps. But actually that adoption has not been as much as we'd like it to be. So we are using AI and to help the employees, but there needs to be a mindset change as well that I can actually. So we are actually now saying to our employees. Earlier we used to say go and seek out help. Now we are saying help yourself, and that needs a mindset change as well. And so therefore that's a journey that organizations will perhaps need to go through as well.
Yes.
Good afternoon. I am KK Gupta here from Research in India. Sir, my point is you are talking about the artificial intelligence and machine learning. About 95% of our SME sector in macro. So how this technology can reach to the SME sector who are living in a village There's no electricity, no other. How you can technology can be transferred to this SME sector?
Rishi, why don't you take this?
So, sir, your question is very relevant and valid. In fact, if you look at some of these new technologies are still at a very high corporate level, and some of the new banks and companies are trying to learn and understand that. I think the government is also trying to build a lot of platforms through which such kind of learnings can be given to the MSME sector. But if we expect that the MSME sector is going to learn very fast and quickly and things can be rolled out, I don't think so that is going to happen. I think what is more importantly happening in the entire ecosystem is becoming more technology driven. So if the ecosystem becomes more technology driven, like I'll give you an example, like if you are doing GST, earlier you were doing everything manually and all the bills, watches, everything was done manually. Now with GST happening, everything is done on technology. So you have to put the entire GST system, you have to generate the bill from that system, you have to print an invoice, and everything is moving in that direction. So over a longer period of time, you will see some of these things will become very natural, and all the MSMEs, or at least the top end of the MSMEs, will be the first enablers for this entire ecosystem on technology. Plus, the government is also putting a lot of effort in terms of how technology upgradations can happen for the MSME sector. They have put a plan. They have, in fact, there are a lot of money which is also going in through equity in the entire MSME sector for technology upgradation. So it's going to be long drawn process. But I think the ecosystem around the MSME, and if you are working in that ecosystem, you will have to at some point of time start to become part of it, and you'll have to learn from that ecosystem rather than being away from it. If you are away from it, it will mean that you will lose some business and opportunities. If you're part of it, then probably you will be able to grow faster and maybe have an edge over everybody else. But there is no simple answer to your question. It's going to take time. And AI and all this AI models will definitely take some time for the MSME sector to adopt.
So both Ipsita and Nishant want to add to this. Maybe they disagree. Let's hope.
So I agree with everything that Rishi said, but Rishi kept referring to it as technology, and I want to get a little more specific than technology. Because as we think about how government helps with this, as we think about microfinance, people are selling phones into the sector that you are talking about. But people are not thinking about the devices that are necessary to create or to be productive. Almost any Kirana store you go to has a Google Pay or a UPI payment capability and has a phone. Most of them don't have a computer. And the issue with that, if we keep sort of giving out tablets and phones, is that we aren't going to create a very productive workforce with MSMEs. So what we really need to think about is what is the most productive form of devices when we think about technology. And the fact that creation will come from something that you can work into rather than consume from.
Nishant?
Yeah, thank you. Let me disagree with the question. I think there's a lot of anxiety of how do I use AI. I think the best way you're going to use AI is when you don't know you're using it. So let me go back to your example as SME. Today we're writing AI agents which can kind of form a mock balance sheet for you, who can take your balance sheet and give you very good perspectives, which would otherwise have been an expert. So in the age of AI, domain and expertise will become free, and it'll be available to you through your phone. So really, you don't have to really worry about the anxiety of having to learn AI, because the best AI is going to be so invisible, it's going to be like a buddy. You look at what's happening with UPI. As we hit the ceiling of how much we can expand, what do you think is happening next? You can't make people literate. You're going to go to like a voice-enabled transfer my money in 22 languages, and that's again AI for you. The problem we have is the approach we take to AI today is a very cottage industry approach. You see a bank, you'll see 40 people trying to do AI, and of course that'll get you some traction, but that'll not give you adoption. When you look at guys like us, last 4 years, we went off the grid. We wrote our entire stack again, because we are working already on something we call as autonomous banking. Look at cars. You always had very smart LED lights and good. I mean, that just means you have better tech. Autonomous means that it'll start to see, it'll start to take decisions on its own. And that's going to happen in banking. So like one of the questions Jay asked me was, last 5 years, if you ask me what happens in the next 5 years, you're going to see a lot more autonomous businesses coming up. And therefore, what I talked about, the fluidity of everything you see. So I would just sit back and enjoy, because the amount of AI you're going to be used and you are already using today, and in the next 5 years, it's going to explode. Everything, your washing machine, your bulbs, everything is going to be AI enabled. Now, I could be wrong by a couple of years, but believe me, that's least of your problem on how to use AI, because somebody will figure it out and they'll bring it to you.
Yes. सर हमारे प्राइम मिनिस्टर ने जस्ट ग्लोबल फाइनेंशियल फोरम में ही हैज मेंशन कि बेस्ट टू कम सो माय क्वेश्चन इज अबाउट टू न्यू फाइनेंशियल इंक्लूजन फॉर द रूरल स्टार्टअप एंड अर्ली स्टार्टअप एक्चुअली as you know so my question, my name is Vishal Sangvi, I'm serial innovators and running my R&D company in Mumbai last 25 years. My question is that there are a lot of startups emerging. Is it possible, like many influencers, they get a like, because I want to know about regulation, whether any startup go on media, social, like in international market, Kickstarter platforms are there, whether they can collect the money like small amount like 50 rupees, 100 rupees, but they got like a likes, they got like may possible they can collect 1 CR or 10 CR also, which is because they don't have a something systemizing work to go for the full grade financial system. So such kind of financial inclusion possible for such kind of startup to do the activities to collecting such fund? That my question is there.
Ashish.
So I guess what you're referring to is whether startups can do crowdfunding. Is that broadly what you are referring, right? So I would just split this into two parts. First of all, I would like to tell you with a decent amount of examples that whether it is in India or it is outside, crowdfunding is a concept that happens. However, I don't want to make it sound like, oh, everybody here is going to find it very easy and very convenient to pull that off. It has not been as easy. And there are a variety of reasons for that. Now, to your question, you took a specific denomination. I'm not going to pick on 50 rupees and 100 rupees, but I'm going to take it a little tougher on myself and say 50,000 also. It is a little bit of a tough one, for a simple reason that we are a part of a system where the regulator just last week, where the Reserve Bank came in with very clear guidelines that when there are P2P startups which are taking and soliciting capital by way of debt, have to make sure that the people participating on that platform are doing it on their own. So the government wants to make sure that the system is robust. So if we make it as democratic as for the masses to participate in the highest degree of risk, which is equity, it has its own pitfalls. Today, I don't know how many in this room or how many of my fellow panelists agree. There are worries about how SME exchange itself is encouraging certain level of companies, and the government is worried themselves and they're trying to figure out the solution to it. So democratization to that extent is not the answer for sure. But yes, a very simple answer. It has been happening for enough networks which are there online or offline. Crowdfunding is a reality of the current world. It is not impossible to pull some of these things off. There are companies which have threatened to die down because they were running out of money, and they have gotten small bridge round and then they have continued their journey. We are yet to see mega success stories out of it, because unfortunately or fortunately, we operate with a little bit of a class system, even in funding for startups. What I mean by that is that today when you are trying to go around and say that I am doing a great startup sitting somewhere in the corner of the country, it is hard for you. So the onus is clearly on the founder of the startup to reach out to the investor. And the investor is going to be happy taking references from people who he has funded or she has funded in the past, or who has funded them in the past. It is a tough job, but ये सिफारिश का मामला नहीं है. This is about trust building and what will work for everybody. So that's where the ground reality is today.
Okay, so now I'm coming back to the panel, and I'm going to ask each of you to take a minute to think. Don't react, think. What is the greatest opportunity you see in your business with technology, and which is the biggest threat you see technology is posing to your business. Okay. And Ashish, because you are just the money man, you can be the first one to go. How do you see this?
There are bigger money men here with Raj. Someone like Rajiv on the stage, I dare not take that title. So I'll go for the answer. In terms of the biggest opportunity, right? In financial services, I do strongly feel that because of the way technology has shaped up, personalization to me is a massive theme and a massive opportunity. It's a generic horizontal phrase. What I mean by that is just leaving with 2, 3 examples rather than get into a verbose explanation. Today, when a bank tries to create a financial product or an insurance company tries to do it, hitherto they would try and see how many people this is going to be relevant to. We are in an era where even a fraction of that constituency is going to be now relevant to create products. Financially, also you can create products. There can be medical products or medicines that become relevant. So I do feel personalization is a massive opportunity across the board, no matter what stream you operate. Financial services and medical will be the biggest beneficiaries, but even most other streams can benefit. You asked me to talk about one, I'll talk about one, but there are many more that excite me.
Also talk about one risk.
Yeah, I'm coming to that. In terms of risk, I'll talk about the fact that security is a massive challenge. As we have gone down the whole path of integrating everything, today, sitting in one part of the world, you can go and make a nuisance for exactly the other part of the world. So it is not something which is unreal. Those things are happening literally every passing year. You hear about a bigger challenge on cyber than what you had heard so far. So risk on and cyber risk and security are the is a big challenge. Apart from the fact that we are trying to seek employment and tech is trying to seek into jobs. So the getting a balance right for governments of the future over the next 30, 40 years is the other significant challenge that we need to be worried about. Thanks.
Rishi.
I think when I look at the opportunity, the business which Fino is doing itself is a big opportunity. We are looking at the next 500 million people. I think 30 years, 20 years, even 10 years back, or we are nearly 20 years old company now, technology was not even there, and we didn't have the entire ecosystem where technology could actually make it possible, the data, the networks and everything which was not available. Now with everything being there, systems being there, the willingness of the regulator being there, the technology, the networks being available, I think this is one of its kind, I think, in the history of the mankind, where you can actually bring 500 million people of the country to actual banking. When I say actual banking, it's not about opening an account and then leaving at that stage. It's opening an account, doing transactions, building up the data, bringing the customer to a digital platform, using the data and the digital to actually lend him for his businesses, to make him do insurance, to buy investments. So I think this is one of its kind, I think, at the stage at which we are. And I've talked about in the past that 1990 to 2020 was an era of globalization. 2020 to 2050 will be era of localization. I think the entire demographic dividend which we have, the large population, our Prime Minister also talked about the new middle class. I think this is the new middle class which is coming up. I think it's on us, on the banks and the ecosystem to make use of this new opportunity which is in front of us. And I think technology can really make it happen. Technology doesn't differentiate. It will be available to everybody at the cheapest price at all the time. I think that's where I feel is the biggest opportunity. And I think on the threat and the challenges, when we become more digital and the economy becomes more technology driven, everything becoming more digital, I think it has its own challenges. The systems have to run. You can't have even a millisecond where the system doesn't run. There cannot be glitches. I think the cyber security and the risk associated with this entire cyber security, and we have seen the Prime Minister also talk about the fact that we have to ensure that cyber attacks and everything is well contained. I think that is one big challenge which is there in everybody's mind at the topmost level, at the regulators level. I think that is the biggest challenge, to make the system run efficiently and away from all cyber attacks in a manner that we are able to deliver services to the consumer at his convenience, at his price, and at his location. I think that's where we need to build our ecosystem.
Great. Rajiv?
I agree with Rishi. I think over the last 10 to 15 years, thanks to mobile and thanks to the fact that we on the liability side, we've opened a bank account for pretty much everybody. I think the next 10, 15 years is really being able to underwrite every Indian profitably through the use of data, technology, mobile, etc. I think that's a massive opportunity because data will also ensure that you have the ability to price for risk. Obviously, the lower that you go, the risk is higher, but you should be in a position to be able to price for that risk as well. And I think models and AI that we spoke about will hopefully make that better and better as we go forward. And so therefore, you should be able to underwrite pretty much everybody at a price. And the second is cybersecurity of both natures. One is attack to the financial system or large players within the financial system, and we are already seeing that there are state level players across the world who are looking to destabilize financial markets, etc. Certainly that we should be worried about. For example, we work very closely with the government as well around this. There is cognizance of this issue with the government, with regulators, with large banks like us. But it's a constant battle. But I think as important is financial fraud, the phishing that we are seeing, particularly of the more vulnerable, the elderly, because I think unless we are able to contain that, through the use of technology on the bank side and through use of financial literacy as far as consumers are concerned, one of the things that you could potentially lose out is the fact that this big shift that we've seen in the use of digital payments, for example, that could fall off quite sharply if customers begin to lose trust. And so therefore, being focused on that part of financial frauds is super critical as well.
Yeah, you're right. My own sister, her savings account was cleaned out by somebody talking to her. I had to tell her she's an idiot, but still the fact that she would give away her, was just completely remarkable, because she said the guy was really earnest and told her her account had been blocked and he needed to unblock it. So it's all over. It's really quite frightening in some ways. What about you?
I think the opportunity for inclusion of the underrepresented is a huge one. And let me just give a couple of examples quickly of what that means. We have 4 million STEM graduates that graduate in India every single year. A fraction of them are useful for productive work in any capacity. We don't have the education and the skilling systems to create the productive workforce that we need for the growth that we need to have. Technology can play a huge role because by the time we actually build all the skilling programs and make a big effort across K through 12 and above, decades will go by. But while we continue to have that gap in productivity, technology can really play a role for anyone who has the intention to work. The second example I want to give just piggybacks off this one really well. If you took out of the equation the need to be able to speak and read and write in English to work for Rajiv's bank, imagine the ability that provides for so many people across the country that are underrepresented today. And on the flip side of it, the biggest risk I see is being the future workforce of the world, having the demographics that we do, if we choose to not take the right measures and continue to be or choose to be a population of consumers rather than creators. If we don't use technology to create the future, I think that's a huge risk, both for the country and for us.
Okay. Nishant?
There's so much opportunity everywhere, but I'm going to just focus on financing, and I'm going to encourage my fellow entrepreneur who asked that question. The future, one of the biggest opportunities is what we call as the banker one. A bank which understands you, tailors you. And the lowest denomination in that is the 100 rupee. If you can collect 100 rupee, if you can loan 100 rupee for 10 hours in a profitable way, that's the world. you want to live in, right? Because everything is a multiple fraction of that or a compounding of that. And the advantage you have now, you have RBIH, which is the RBI's innovation hub. You're seeing amazing government programs focused on just making that happen. So I think you're onto something very big. The problem is, how do you connect that innovation with people in the city who have the skills? And I'll give you a little bit of that. We actually went to Jharkhand, Palamu, in a place called Daltonganj, and we actually built up a leadership center. Because a lot of my engineers who are rock stars in AI, they don't understand there's no bank branch 20 kilometers dur tak. There is, they've never seen those challenges. So to innovate for that, you have to first take people who can innovate there. So I think that's just from an opportunity perspective. The Banker one is the biggest opportunity, and across different countries, this will be delivered on a sliding scale model of compliance, right? Threat, quantum computer, and the security paradigm. It completely shifts it overnight. Because what you're saying is, if I start storing all the URL calls today, I can untangle and kind of get your IDs in minutes, which is why people are starting to store the internet to get to your ID. So I think the biggest threat is security, and us not seeing that. I would add to that, and let me find the right word to say this. The problem we have is this management by magazine mentality, right? Where we kind of see good stuff happening and we say, hey, this is what we should be doing, without understanding the context and the why of it. So I think that's your biggest threat to the entire industry. But again, what keeps us honest is competition. And what keeps competition alive is the way the government is disrupting. For sure, in 10 years from now, in the next decade, you will see almost no cash. Just imagine the world with that. And I think you'll start to get your answers, right?
Okay, I'm now going to come to the audience and ask a question before I conclude. Think about yourself and then think, how many people do you think are really intelligent? And, I'm going to give some numbers. Raise your hand if you think that's the number of people you feel are really intelligent. Do you think 5% of the world is really intelligent? Please raise your hand. Okay, one person thinks. Do you think 10% of the world is really intelligent? Hey guys, how many people do you think are intelligent? Do you think 100% of the world is really intelligent? There are 2-3 people. No. So what do you see? This is a really deep question, and I can't allow you to just sit quietly and think. Do you think 20% of the people you meet are really intelligent? Okay, so just because very few people raise their hand, 20% wins. Okay. Now, supposing I was to say that in 5 years, 95% of the people you meet will be really intelligent. What do I mean? What is intelligence? Intelligence is memory, as Ipsita said, language, and connections. Those are 3 things intelligence is. What is intelligence? Whether you have a bank of memory and experiences, right? The second thing is the barriers of language. You can't express yourself. And the third thing is connections. You see something and you connect something and you are seen as intelligent. Now think about what's going on. Already, language is dead. I was in Russia, I was in Moscow, and I'd gone to the wrong airport. And I got into the taxi and I was trying to get to the other airport. And I communicated through with my taxi driver through my iPhone. Okay, he was speaking Russian, I was speaking English. Think when language is killed at national scale. Already, if you are older, you will learn you can't say anything to your children because they will Google check you. They'll say, no, Dad, you're wrong. Google says something different. So memory is now on the fingertips. And connections, what is AI doing? If they can tell you what is a cat and what is a dog, that's unbelievable. Think of what you need to do to be able to actually draw that connection. So in a sense, the enormity of having 95% of Indians being intelligent, can you fathom it? See, Roy Amara back in 1965 had said the impact of technology is always overestimated in the short term and underestimated in the long term. And the magnitude of the change that is coming, forget financial services, as a society is of such enormity that our minds cannot currently fathom it. Right? So on one level, in my mind, that is the opportunity ahead of us. The whole country is intelligent. And, whatever you may say, since 2014, one thing that has happened, I used to chair CII's Financial Inclusion Committee for the longest time. And we used to move from 50% to 51%. Then in 6 months, it became 100%. Every Indian household had an account. Every Indian household has a phone. And every Indian has an Aadhaar number. So you provided identity, you provided connectivity, and you provided the ability for people to participate in the banking system. This happened in 6 months. It happened in 6 months. It took about 5-7 years thereafter for it to get embedded. Today our financial system in some ways is the most advanced in the world. It is embedded. Okay, it is truly embedded. So the amount of cost, in India is much less than in most other places. You look at how much are MDR fees, etc. So I'm just giving you a sense of the opportunity. What is the level of threat? The level of threat is of equal size. The wars in the future are unlikely to be nuclear. They are likely to be cyber. At last count, I was told there are about 30,000 people in China who are cyber specialists at war. It's a similar number for the US. It's a similar number for Israel, for Iran, for Russia. How big is our number? We need to get beyond hackers. We need to have a military unit which can actually both defend and attack. When we are looking at mega scale, it is the whole country is overnight intelligent, not overnight, in the next 5-7 years. And there is a war which is such that all your power grid is over, all your bank accounts are frozen. So this is a non-trivial issue. And that is why a summit like this, talking about the role of technology, is important and powerful. And I will congratulate CII for having done this. And with that food for thought, I will leave you all to get a good cup of tea. Thank you.
Could I request all of you to kindly step ahead and come together for a group picture? So, ladies and gentlemen, we are not breaking. Please remain in your seats. We will begin the next session in a couple of moments. Just give us some time for changeover. The next session is unlocking the true potential of MSMEs with respect to financing options. Before we proceed, I have a small announcement to make. A delegate has misplaced her charger and a few notes. If any one of you happens to find a charger and those notes, please hand them over at the registration desk. I repeat, a delegate has misplaced her charger and some notes. If you happen to find them, please hand them over at the registration desk. Thank you. Ladies and gentlemen, I request your support. The chairperson and the speakers of the next session are already here. May I request one and all to not leave your seats. Please remain seated. We will begin as soon as we set up the dais for the next session. I also take this opportunity to mention that we have high tea arranged at the end of the day, wherein you will be able to network with your peers from the sector and counterparts from the other organizations. Also, we begin with breakfast in the morning at 8:30. We are almost ready. Please take your seats, ladies and gentlemen. The next session, Unlocking the True Potential of MSMEs, relating to the financing options. So, ladies and gentlemen, we will have a special address by Shri Ashwani Bhatia, whole-time member, Securities and Exchange Board of India, that is SEBI, in this session. The panel will be moderated by Shri Yashraj Erande, Global Leader, Fintech and Indian Leader, Financial Institutions, BCG. The panel of speakers, Shri Atish Singh, Joint Secretary, Ministry of Micro, Small and Medium Enterprises, the MSME Government of India, Shri Rajneesh Kumar, Chairman, Mastercard India, Shri Sandeep Verma, Chief Executive Officer, Credit Guarantee Fund Trust for Micro and Small Enterprises, the CGT MSE, Shri Ketan Gaikwad, Managing Director and CEO, Receivables Exchange of India Limited, the RXIL, and Mr. Parag Bhise, CEO and Executive Director, Nucleus Software. So as I already said, the chairperson, the panel speakers are here already. All those standing, all those who can hear me outside, requested to proceed inside. All those inside requested to please be seated. As you can see, all our experts are here already. So as we are aware, the MSMEs play a pivotal role in India's economic landscape, serving as engines of innovation, employment generation, and regional development. However, their potential remains largely untapped due to the challenges in accessing timely and adequate finance. Addressing this issue is a strategic imperative for steering MSMEs towards sustained growth and competitiveness. The session will discuss the ways to navigate through the gamut of challenges currently being faced by the MSMEs in meeting their financing requirements. Specific issues such as tailoring the innovative financing solutions to meet the credit needs of MSMEs, along with addressing the problem of delayed payments to the sector and examining the role of data and analytics in assessing the credit worthiness of an MSME will be discussed in this session too. So, ladies and gentlemen, without any further ado, let me invite Shri Ashwani Bhatia. Oh. We'll just wait for a couple of
Waiting.
Oh, just half a minute away. He is just here. He has entered the premise and he will be with us any moment. Yeah. Yes, there he is. So let us welcome Shri Ashwani Bhatia, whole-time member, Securities and Exchange Board of India, SEBI, with a round of applause, ladies and gentlemen. And could I right away request you, sir, for your special address? Shri Ashwani Bhatia. Sorry for that.
A very good afternoon to all of you. My apologies for the delay, but just got stuck in the traffic. So, good afternoon and good evening. A warm welcome to all of you here. I'd like to thank the CII for giving me this opportunity to address the Financing 3.0 Summit, preparing for Viksit Bharat. The topic, unlocking the true potential of MSMEs. Financing options is quintessentially very important in India's economic landscape as MSMEs contribute to economic diversification by operating in various sectors, manufacturing, services, agriculture, technology. They reduce the reliance on one single industry, thereby enhancing the resilience of the economy. I'm happy to share my thoughts in this regard. MSMEs are pivotal contributors to economic growth, particularly in developing nations, where they play an important role in creating employment opportunities and contribute to industrial production. MSME's role in India's economic growth is significant. The MSME sector in India contribute 62% of employment and make a contribution of around 30% to the nation's GDP. With this, I must say the role of MSMEs is vital to India's vision of Viksit Bharat. Let me start my talk with equity infusion in SMEs and the SME platforms of stock exchanges. A lot has been written in the press over the last 1 week. The SME platform of stock exchanges was operationalized in 2012 to serve as an alternate source of raising funds for emerging businesses. Ever since, there has been an increase in the number of SME issues as also investor participation. During the last decade, more than 14,000 crores has been raised through this platform, of which around 6,000 was raised during the last financial year. In recent years, listing on SME platforms has seen increased traction. Annual listings on SME platform through IPOs have increased fourfold over the last 5 years, from 46 in 1920 to 196 in the last financial year. The amount of fund raised through IPOs has increased 12-fold over 5 years, from 495 crores to 6,096 crores. While many SME companies have migrated to the main board, at present there are 600 listed on BSE and NSE. Market capitalization of SME companies has shown wonderful growth. The market cap is currently about 2 lakh crores. A word of caution, of course, will not be out of place. I'm a banker, and we were told that we should learn to say no. Perhaps this is one thing that is not being done. And here let me talk about the ecosystem. And the ecosystem includes chartered accountants, it includes merchant bankers, and it includes exchanges. And very often, and what we have seen in the recent past, is the fact that the checks and balances are simply not there. Nobody is actually saying no to the applicants. When we were bankers, we actually many times said no to a customer. Maybe the diligence that is required of the chartered accountants, merchant bankers, and exchanges is possibly missing, and they need to do some hard work over there. And analogy can be drawn with a doctor. Please be good doctors to these companies. Don't give them steroids when they can survive on paracetamol. Growth is very much there. We are growing very, very fast. And I mean, my old customers, I remember my days in the bank. A guy who was a transport operator is today a fleet operator. But if you try to take shortcuts, try to inflate balance sheets, I think the relationship between the intermediaries and the companies will be a very short one. Obviously, some orders have also been passed by us recently, and we do hope that all the intermediaries help to fostering the SME system in the country. The support provided by the government to the Indian startup ecosystem has positioned the country as the third largest startup ecosystem in the world after the US and China. The startup ecosystem in India is expected to witness a consistent annual growth of 12 to 15%. India now has 5 decacorns and more than 110 unicorns with a combined valuation of more than $350 billion. We would welcome these listings on the exchanges. Initiatives such as Fund of Funds scheme, Self-Reliant India Fund, Startup India Seed Fund, Credit Guarantee Scheme for Startups have led to an awesome startup ecosystem. The Indian government has taken various measures such as financial aid to promote MSMEs and help them grow and improve their businesses. This helps the entrepreneurs, which positively affects country's economy. The credit facilities potential pave the way for small businesses to grow and turn into successful ones. Here, I must mention the role that UPI, digital payments, are making. And obviously, once you move to ULI, as the governor mentioned a few days back, I think the credit flow there will increase significantly. Beyond the traditional bank loans and equity financing, various alternative sources of funding are available for MSMEs. These options include crowdfunding, angel investors, venture capitalists, peer-to-peer lending, microfinance, amongst others. The alternative funding space, the SEBI Alternative Investment Fund regulations introduced in 2012 govern the formation and operation of AIFs in India. Among the three main categories of AIFs under the regulation, under Category 1, which includes funds that invest in socially or economically beneficial sectors. One of the subcategories is Category 1 AIF SME Fund. In this category, as of 31st of March 2024, the commitments amount to 1,169. So instead of coming straight to an IPO, perhaps a better route would be to go to an angel fund or a venture fund, grow there for a while, and then perhaps come to the markets. The digital revolution in financial sector and government policies are key to improve access to finance for MSMEs. Conventional credit mechanisms involving credit history, income approach, collateral may not be the correct way to assess credit worthiness of MSMEs. Role of data and analytics in assessing the credit worthiness of an MSME will be key to bridge the gap in financing. With the advent of data analytics, new opportunities are opening up for credit access for small businesses, and financial institutions can now develop personalized credit models to provide tailored solutions unique to MSMEs. The RBI has also initiated a comprehensive program focused on evaluating the feasibility of a public tech platform for frictionless credit. The primary goal of this public tech platform is to simplify the overall credit process, make it more accessible and efficient for both lenders and borrowers. Fintech companies can also emerge as partners for banks, microfinance institutions by delivering data-centric solutions for MSMEs. For MSMEs to thrive, they need financial backing and access to credit. MSMEs require credit or funding to establish the business or the expansion of the business. The challenges faced by MSMEs in India include difficulty to secure formal finance from banks and other regulated intermediaries, lack of collateral, high interest rates, limited awareness about government schemes, lack of financial literacy, and management skills. To conclude, MSME sector financing depends on various financial sources ranging from traditional banking and equity financing to alternative credit mechanisms. Therefore, the entire financial sector needs a detailed and joint approach to tackle obstacles such as high interest rates, the need for collateral, and difficulties in assessing credit for development of MSMEs. The environment should help MSMEs address their financial needs more efficiently. Thank you very much.
Thank you, Mr. Bhatia, for addressing this August gathering on this significant occasion. And now I request Mr. Yashraj Erande, Global Leader, Fintech and Indian Leader, Financial Institutions, BCG, to please take charge of this panel discussion. Mr.
Thank you.
Erande.
Good afternoon, everyone. And welcome to my fellow panelists on the dais. This is a very critical topic, and unlocking the full potential of MSME through financing options is, as Sir you called out, really the need of the hour as well. May I kick this discussion off by opening this panel to talk about your perspective on where we are in terms of meeting the needs of MSME financing. And to start the discussion, Atishji, if I may request you, from the perspective of the government, where are we in our journey and what are the big opportunities that we are looking at?
Yeah, thank you. So let me begin by first saying, the government has clearly identified, what are the Viksit Bharat goals, as well as the goals with respect to the export, and there are, several international commitments we've made with respect to the green goals. So having said that, the engine of this, of this train to get there is going to be finance. And we also add, along with finance, we will have technology as the second engine. So we'll have a double engine of, strategy to, to get there. So At the same time, we need to look at the entire situation in the context of what is the MSME ecosystem. The present, if you look at the numbers today, the current data on Udyam tells us there are about 4.97 crore MSMEs, and out of that, 2.89 are the 2.08 are in the Udyam Assist side. So also one more fact which I need to add to this is that 99% of this is the micro sector. So whatever strategies, whatever policies, whatever initiatives or whatever frameworks and structures we need to develop have to be looked at from the prism of this whatever I've just stated. And in terms of if you want to go through look at the financing side of the entire situation, so the mantra clearly is going to be timely finance, adequate finance, and affordable finance for the MSME. And in this mantra, we need to apply the lens of the challenges. The challenges which may be traditional, in the form of formalization or let's say credit worthiness. Then came the COVID, the pandemic, created a major disruption into the MSME ecosystem. So that, brought out new challenges. And then of course, now we live in the era of disruptions, there are, disruptions happening all around us. There is, 5G technology, there is internet, protrusion, there is e-commerce, there is, disruptions are happening around us all the time. And so those are bringing in new challenges for the MSME ecosystem. So all the solutions which we build, whether it is the government or it is through the private initiative, or it is through the lending agencies or the academia, all these solutions need to be looked at, from the stack of these challenges. So just to briefly go through the, the demand side and the supply side. So my personal thought is that we need to look at the credit gap. We have a credit gap analysis of 2017-18 vintage, and there are some other formulations which have come through, but we really need to get into, what exactly is the credit gap, and not just, telling us what is the amount of financing which is required, but we also need to look at the entire gap by making analysis with respect to the clusters. We need to look at what is the supply chain gap, what is the gap in the gender, what is the gap across sectors, what's happening in the export space, and then there is also probably we might need to look at it by overlaying it what's the internet map of India, and since technology is going to play a critical role in this, so and in finding the solutions, so the credit gap needs to be analyzed thoroughly in a 360 degree kind of a way. Also, we need to find solutions, and I urge the organization of this summit to help us find answers and debate and discuss about how do we find new solutions to traditional challenges. The MSME is presently, even today, face problems with respect to the turnaround time. The rejection rates are very high for the loan applications, and prepayment penalty still continues to stay there. Then there is a stigma around the stressed assets. These are, and the credit process itself. So how do we get around there in a new kind of a way? Then, like I said, the new challenges, of course, there is sustainable and green elements which have come through. How do we develop policies? What are the risk assessment criteria? There has been conversation in the previous sessions about green taxonomy, and how do we deal with, how does the MSME deal with digitalization? There are things happening all around us through the fintech. There is embedded finance, which is a big player today. And the last but not the least on the demand side is the NTC, the new to credit. The present credit process is intrinsically against the NTC. So because it relies upon credit history and past performance, how do we look at NTC? How do we develop strategies and policies around NTC? Also, on the demand side, I would want to tell the House that the government is seriously contemplating on bringing in statutory and institutional force to deal with the demand side problems by making amendments or coming up with new legal laws such as the MSME Act, which is of 2006 vintage.
There is the Khadi and Village Industries, Act, which is also a very old vintage. Of course, Khadi is a very important sector in the MSME ecosystem. There is this Small Industry Development Bank, which is the primary agency for promotion, development, and finance. It is also a statutory body. So these are some of the acts which certainly need to be looked at. How can we bring in greater force with respect to the through the legislation. On the supply side, one of the key concerns is the KYC. The cost of KYC continues to remain very high. How do we deal with this? There are things which you are working on the central KYC system or the eKYC, of course. Then there is the government recently announced in the budget the new models for risk assessment. We just don't need to look at the old system of collateral or turnover-based credit. The government is hoping to develop a new assessment model, which brings in data from the financial and non-financial side. And one more thing I just wanted to add was with respect to the various, the lending agencies. There is the NBFC, which are a big player. The MFIs are a big player. And so, how do we help the NBFCs, the small finance banks, and the microfinance institutions to bring in greater inclusivity and participation? So I'll just stop here. So maybe we can build further. Thank you.
So Atishji, you spoke about demand side problems, supply side problems, and we have around, by different measures, around 60 million MSMEs, give or take. Most of them have a current account, but the lending penetration, depending on which vintage analysis you look at, is between 14, maybe 20% if you're generous, but in that range. So the gap between how many current accounts are opened in the MSMEs versus how much formal credit is available is quite stark. And Sandeep, we were having this conversation before that. What is causing this? I mean, you run one of potentially largest funds in the world from a credit guarantee perspective, but still there is such a huge gap.
Yes. Thanks for the question. The problem that you raised, it's a real problem, and the gap is stark. I mean, even the UK Sena committee, this mentioned about 25 to 30 lakh crore. That is the credit gap that is available or that is existing for the micro and small. The World Bank has about 30 to 35 lakh. The McKinsey report says could be in the range of 40 to 45 lakh. So be that as it may, the fact remains that the gap is substantial. The credit requirement and what is being pushed into the system, there is a huge gap. And there comes the requirement or need of an agency like CGTMSE, which is which is a government agency, provides guarantee to facilitate collateral-free lending. As you said, the number of people who are doing banking is quite substantial vis-a-vis the number of entrepreneurs who are able to secure credit. And one of the biggest problems that they face is the availability of credit, availability of collateral security. And this problem, let's also be clear, it's not unique only to India. This problem exists the world over. And the solution is an agency like CGTMSE, and the solution also exists world over. I mean, today, more than 100 countries are having such agencies, and more than 140 institutions are there which are running such schemes. So the basic problem, as you know, when we started our banking career, we were told that any person who comes to seek loan from you, you should assess two things. One is the ability to repay, and the second was to intention to repay. So these two things, if you are able to assess properly, then you would be a good banker. So now in the old ancient days when the credit guarantee was not there and all, so the collateral used to be one instrument which was in some way taking care of both the requirements, because if the loan goes bad, then it becomes a good instrument to recover your loan. And on the other hand, it was also an indication that the borrower will behave properly if the collateral is there, because as they say in Hindi that uski gardan hamare haathon mein hai, to fir he'll behave properly. Now, the system is inherently against somebody who does not have a collateral, and this invariably happens more in the cases of micro and small enterprises, because these guys would have this problem. And the problem is it's a twin problem, because as you rightly said, they do not have any credit footprints also. So on one hand, the bankers will not be able to assess them properly in the absence of any credit footprint. On the other hand, to compensate or to increase the comfort of the bankers, they do not have any collateral also. We all know that beyond a certain point, you cannot cover your risk by increasing the cost of lending. I mean, if you go on increasing the cost, ultimately what will happen, the good borrowers will leave you and you'll be left only with the bad one. And, you create the problem which you sought to solve, in fact. So there comes the credit guarantee scheme, and there lies the solution for those people who are coming without any collateral. And the point is well taken. There is a huge gap, because the KV Kamath committee recommendation had come way back in 2016 or 2017, and they had recommended that at least 25% of the lending which goes to MSME, that should be covered by a credit guarantee scheme, because that would also signify that this many people are able to get loans without any collateral. Right now, CGTMSE is on a surge. Very happy to share with you, we are in existence for the last 24 years. This happens to be our 25th year. And what we have been able to do in last 3 years, that is more than what we have done in the last 22 years.
Wow.
So we have done about 2/3 of our business in the recent 3 years, and almost half the business of what we have done in 25 years. But despite that, our share in the lending to MSME, which is going to the MSME, it is at 10 to 12%, which was of course at 6-7%. So we have a long way to go. So just to come back to on
10 to 12, you need to get to 25.
25. This is ideally what was, because see, we all should appreciate the point that the data only reveal what is there. What is not there, it is not revealed. So once we say that the private sector lending, this much has been done, or this is outstanding and all, so this data does not actually reveal how much or how many cases have not been done by the banks, because there is no data to cater to that. So indirectly, if 25% of the credit is going to that, then that is a close approximation that, okay, the banking sector is taking care of, the ones who do not have a collateral. And just in a lighter vein, I'll just respond to what Mr. Bhatia said. He said the bankers very easily say yes. This is a perception. The other perception, if you talk to the micro and small enterprises, they will say the bankers seldom say no. He said the bankers very easily say yes, and they will say that the bankers very seldom say yes. So Rudyard Kipling had said long back that the East is East and the West is West, and that twins shall never meet. But we have to try that the twin meets at some point in time.
So Sandeep, can I probe a little bit, and then Rajnish, I'll come to you. You said something which really caught my attention. You said that you can innovate on designing the right schemes as CGTMSE, depending on what you're trying to target. Can you tell us a little bit more about
Yeah. This is just to take forward what Atish ji was telling, that everything has got a demand side and a supply side. I, being a student of economics, we were told that if you teach a parrot to say demand and supply in response to every question, he'll become a good economist. So every aspect has a demand and a supply. So for credit also, there is a demand and supply. So for the demand side, and I have two components of the guarantee scheme. One would be the coverage, how much coverage I give, and the second would be at what price it comes. So if I reduce the price, it increases the demand of the credit. And if I increase the coverage, it helps the banker, and in a sense, it creates the supply. So responding to your question, suppose there is some area where we want to, or where the government wants us to do something, for example, in aspirational district or RBI identified credit deficit areas. So there we have
climate.
Or yes, climate. Atish ji is here. We have done that actually for those who are units who are having JED certification. We give them 10% higher coverage as applicable to normal ones, and we charge the lower fee also, 10% lower fee. Likewise, for women entrepreneurs, the same thing. We give them higher coverage and charge lower fee. than the units which are coming in the aspirational or credit deficit areas. There also the same thing is given. So what I'm trying to say that if you want to give emphasis, or if the government wants to push a certain kind of, it could be geographical, it could be industry specific, it could be cluster specific. If the government wants us to, like in this budget, you have seen there is a lot of emphasis on the clusters, how the cluster should be developed and all. So one way of helping this could be that we design a cluster specific schemes where I provide higher coverage vis-a-vis what is available to, the normal scheme, so as to make the bankers more enthusiastic or more interested. See, ultimately we have to keep in mind that the guarantee does not.
Can I ask? So this is if certainly if a government requests something, but if the industry requests, can you design schemes specifically?
Yeah, this can be done. If the industry comes out, the only thing there will have to be some guardrails.
Of course.
Because the gating has to be done. We'll have to ensure that those who are the real beneficiaries or the intention of the modification, the end use should be there. If such kind of guardrails are there, definitely it can be done.
I'm just.
Please.
All government schemes are designed in consultation with all stakeholders. It is not as if the government prescribes everything. It talks to the industry, it talks to the lenders, it talks to the regulators, it talks to all stakeholders.
Fantastic.
Only then you come out with a scheme.
Fantastic. Rajneesh, if I could come to you, you have been the doyen of banking industry. I think most of the SME lending, if I may say, has happened through your balance sheet or a dominant part of it. But the glass is still half full, half empty. In your experience, why does the glass still remain half empty? What is the financial innovation we need to do? What do we need to do to get there?
Yeah, good question. So, if we look from the banker's point of view and the SME point of view, one is that lot has changed. And what are the changes which have happened? One is technology enablement and the data availability. Today, for a business which is running, which has, say, GST registration, which has cash flows, getting credit is not as difficult as it was. Second question comes about the risk aversion or risk-based pricing. So credit cannot happen if the vulnerability of the sector is very high. Even if there is a guarantee scheme, and if the default is huge, that guarantee scheme will also fail. So ultimately, it boils down to the underwriting skills. And there is a tremendous improvement as far as the models are concerned, which the lenders have built, NBFCs have built, now fintechs have built. I chair the board of Bharat Pay, and we are into merchant acquisition and as well as facilitating lending to them. And what is the business model? Because we have control over the cash flow and coupled with the data, it's possible to give loans and recover in daily installments, which is an innovation. For a small business,
That's an amazing innovation.
That is an amazing
Daily
innovation.
recovery, absolutely.
So
amazing.
if from somebody you give 80,000, 1 lakh rupees loan and you recover in daily installment in 100 rupees or 200 rupees, very easy.
Correct.
If the payment is monthly, very difficult. If you make it quarterly, becomes very difficult. So when you talk about the glass half empty and half full, you can look at both. But today is still, suppose there is an entrepreneur and who wants to establish a new unit, no past start. Then getting loan from the banking system is extremely difficult. Even for the established businesses who have track record, and if they want to expand and take a term loan, they face a lot of difficulties. That is the reality. And because bankers' mindset works differently. So in this country, not only we need credit, but we need lot of equity support. Even your role as a guarantor, it's more of a sort of a, you're covering the credit risk. Indirectly, you can treat it, you're providing some sort of equity. Not directly providing equity, but by way of guarantee, you are covering the risk. So we need lot of venture capital in the country. And relying solely on the bank lending, where the banker's ability to price the risk, it is very difficult. If today bank says that your risk demand that I charge you 30%, you see what will be the reaction. But if the cost of funding for, let us say NBFC, banks is still, they have access to cheap funds and they get a lot of liabilities. But supposing a NBFC, where their cost of fund is 12%, if default ratio is 5% or 6%, so they can't lend less than 25%. And 25%, which business can afford that kind of? So there are so many issues around lending to MSMEs. And one is about like high risk, perceived or actual, then the risk-based pricing, and the banking system by nature, and even because regulators breathe on their neck day in, day out. So you can't afford that there are higher NPAs in your book. So the system also, in a way, does not encourage too much of risk taking by the banking system. That is the reality today. We talk about like there should not be insistence on collateral. But if the unsecured book of the banks, it shows a little bit of a spike, there is a concern amongst the regulator when it comes to unsecured lending. So there is a contradiction. On the one hand, don't ask collateral, don't ask security. On the other hand, if you do unsecured lending, where cash flow, data, everything is available. But when we look at macro level unsecured lending, we become uncomfortable. So we cannot deny all this reality, but the effort has been huge, both on the part of the government, where many schemes are there, and there was even an effort, and I'm sure that would have succeeded, where all the government sponsored scheme, they all were to come on one platform, where from borrower's perspective, they know that you apply on that platform and banks can lend. Banks started that 2 minutes lending, or what was that? That there was an effort. Again, that was based on data analytics and cash. 59 minutes. So 59 minutes lending. Yeah. So, and then the guarantee schemes of the government. So it's not that there has not been an effort. And Reserve Bank of India, I think they had n number of committees. Last one was UK CII committee recommendations. And as a result of that, now RBI governor has made a statement about ULI, which is still in sort of pilot stage. But once we have ULI, I think it has the potential to make a huge difference. But still, I believe that for the existing venture, existing data, existing GST data, income tax data, cash flow, it is easier. Starting a new business, getting a loan which is term loan in the nature, it will still continue to be difficult. And the nature of the capital will have to be different, and reliance on the bank capital, which is by nature is risk averse. So there will still be issues. And when we hear about complaints, I think many complaints relate to that I want to buy machinery, I want to buy land, and banks are not willing to give me money.
I think a lot of critical points, and one of the points you made was that for a new entrant, it's hard to get access to debt from conventional sources, banks, etc. And I mean, that's where Ashwini you made the point that maybe there is a path to first go through AIFs before you enter the.
Yeah, so if you were in Europe, typically a SME would go to an angel fund or to a venture fund, right? And the point that I was trying to make was that number one, the expectations of some of the SMEs are very, very high. and you
Can you tell
simply
us a bit
cannot
more? What kind of expectations?
expectation essentially on to get rich quick here.
Get rich quick.
That's
On
the
someone
first thing,
else's
right?
money.
And essentially, look, you can't have a parabolic growth, right? So I'm reminded of the song of Simon and Garfunkel, and just tell them that slow down, you're moving too fast, right? And my telling you that CAs and others should learn to say no is to temper these expectations, right? So there is a big opportunity. There are people who are willing to fund, but just go slow, So many times we are seeing this pattern where they are willing to pay a fee of as high as 25% on their IPOs. Now just imagine if a bank were to ask you ki 25% fee de do, would you have done it? And the answer is no, right? So then you know the direction in which the issue is proceeding.
And I completely subscribe to the point that at early stage, the nature of his risk is different. You need to enter a different color of capital into the mix. Rajnish, you also made a few very important points. The data availability has allowed us to get a much tighter handle on predicting probability of default. But loss given default is a completely separate game altogether. I think everyday collections is one way to perhaps manage some of it. But without collateral, you are fully exposed in the loss given default scenario.
Yeah. So there is the question of pricing that.
There's a question of pricing that.
Yeah. And realizing upon collateral in this country is extremely difficult. All of us know.
Yeah.
So collateral is just, I'm talking from at least a public sector bank's mindset. It is to save your skin.
Yeah.
That is the only comfort which a collateral can give. Otherwise, it will take 5-7 years before DRT, even if you can realize any money from your collateral. And when you calculate the NPV of that collateral, so you virtually get nothing. So collateral is, in my view, I have always viewed it as a false comfort.
Okay.
Collateral to me is not a comfort, but yes, for calculation purposes, your LGD definitely comes down.
Yeah.
So your provisioning requirement comes down.
Yeah.
But realizing upon collateral in our legal system is not that easy.
If I may just add to what Rajnish sir is telling. Sir, I fully agree with you when he says that collateral is something which gives the false promise. And jokingly, I say that collateral is like a moon. Looks very good, but its size and value keeps changing. So अगर आप कभी कृष्ण पक्ष में आ गए, so by the time account becomes NPA और अमावस्या के दिन अगर हो गया, then nothing is there. And whereas the collateral, whereas the guarantee, since it is coming from the government, it's like a sun. It remains as it is the value. If I am giving guarantee of 75% to 85%, it remains as it is. I mean, whatever be the condition.
That's a good one. I'm going to pull in Ketan and then our other colleague Parag after that. Ketan, the reason I want to pull you in is that there has been a whole lot of discussion about collateral and so on, but you really look at trades, and in that you look at anchor-backed invoice discounting, shorter tenures, quicker devolving products. How has that sector developed over the last few years, and what do you think is the potential of that business to address this MSME requirements?
See, look, Trades has developed over the last 6-7 years very significantly. In fact, Mr. Rajnish Kumar only inaugurated the first Trades transaction in India. So the Trades platform is completely all about anchor-based discounting. It's completely without recourse. So, and why people should know about Trades is that it's making a lot of strides now. In the last 6 years, the platforms have almost done a financing of around 3,70,000 crores. 3,70,000 crores. Wow. So that's the whole financing which has been done. And it's growing year on year. 100% is the growth over there. So last year we did financing of around 1,37,000 crores. This year we are saying that we should be doing around 2,50,000 crores, something like that. So why Trades is important? Because when you have an MSME, we are talking about MSMEs, supplying to the large corporate, there is always a power asymmetry. And then you always have the issue of the delayed payments. The large corporate takes the MSME as a to the detriment of many people over here. But, takes the MSME as a bank. They don't pay on time, even after realization of their proceeds. So that's where the government thought about it, and the platform came into being 5 years, 6 years back, wherein you have the MSME coming on the platform, discounting the invoices, and this is completely a without recourse program. And what we have seen over the last 6-7 years is that the corporates are increasingly adopting to the trust platform. Why? Because it's a marketplace. See, the corporates will be having a supply chain program wherein they will be doing financing at a very market determined, between the banks that will decide the rate, a bilateral rate. But here you have a platform where you have almost 60, 70 financiers who are looking at the invoice, and the risk is completely predicated on the buyer's risk. So then the risk for the MSME is completely zero because the bankers don't take the risk on the MSME. It's completely post-shipment when the invoices when the goods have been supplied. It's post-shipment invoicing, financing, which has happened over there. And just to talk about the LGD and it's a very interesting conversation which I had with the IFC guys, that when I told him about the program which we're running in India, he said, what is the LGD? What is the loss given? What is the default which has happened on the platform? In 3,70,000 crores which you have done, the default is around 550 crores. 550 crores.
Wow.
Unimaginable. And of that 550 crores, 320 crores pertain to one large corporate who's got engrossed and embroiled into a tripartite controversy between a very large retailer, large corporate, and the particular, I don't want to name that. It's a retail giant. So 320 crores gone over there. So 170 crores is something which has got defaulted.
And that's just written off. That there's no recourse, no recovery.
Yeah, the procedures is going on to recover the money, but that's it. But when you look at it in the larger picture, it's not even 0.05 or 0.1%, something like that. And why it is important is because the corporates are realizing that when they come on the platform, the prices are going down. Because see, when you have an MSME supplying to you, MSME knows he is also doing a dhanda, right? I mean, he will obviously load this delayed interest over there, and he supplies it to you. But when the corporates now starts negotiating with the MSMEs, saying that, okay, fine, you will get the payment of the third day or the fourth day. Can you give a discount? Can you come on the platform and can you do this? I can give you the payment of the next 3 days. So we are seeing an increasing adaptability of the, on the platform over there. And now with looking at the way the platforms have been, evolving, government RBI is allowing insurance also to come on the platform. So insurance has been allowed, where the insurance companies can take a risk on the corporate, and then the MSME, the financiers can take the financing on the corporate which is insured for the credit default. Government, again, in the budget announcement, the government has reduced the corporates to come on the platform. The threshold, first the threshold was 500 crores. I mean, government made it mandatory that all the corporates above 500 crores turnover have to come on the platform and do the transactions. But now the threshold has come down to 250 crores. So we are expecting that more and more corporates will get enrolled, and we can see a lot of traction over there.
That's amazing. So you are also, Sandeep, is CGTMSE also funding?
No, we are trying to prepare a scheme for them, but the only issue is that, as Ketan said, that RBI has allowed insurance companies. So it has been taken up with them that they should also allow the guarantee institutions. And once we are there, the beauty of guarantee would be that it would allow the lenders to take exposure on, not only to AAA and all. I mean, they can just lower their guard a bit where the PD could be high. Yeah.
This certainly, this is a CII forum. This perhaps is something we can take on board as a recommendation.
Again, I tend to agree with RBI because, when the insurance was there earlier, 10 years back, which IRDAI stopped it. But the aspect from the RBI's point is very clear that we do not want the financiers to take undue risk. Just ensuring that there is a credit guarantee or there is a insurance behind. I don't want to do I don't want the financiers to take blind risk. So they are saying that let it become popular, and then we can introduce CGTMSE also.
Yeah.
But I think
CGTMSE the pricing of the insurance should take care of that
payment risk.
Yeah.
Since you mentioned CI, I would like to take up what I would recommend to the CI to take up on the trades issue is to increase the number of participants from the lending side. Presently, there are banks, and it has also been opened up to the NBFCs by the new Factoring Act. But the traction over there certainly needs to come in. What is it? What is that thing which is coming in the way? for the lenders to come on board. Of course, there are the government is pushing the MSME and the large corporates and the CPSUs and state PSUs to come on board. But I feel strongly that the NBFCs also need to be strongly present over there to make the e-marketplace even stronger. And so look at the size of the problem. This some estimate is like 15 lakh crores. That's also of an old vintage. So this is the kind of money which is locked into the delayed payments.
I completely agree, and we must take it up because if you have 3.5 lakh crore volume at hardly 170 crore loss, we must have more lenders on the platform doing that business and talking about it. So makes sense. Now, underlying all of this, Parag, I'll come to you, is the prowess of technology. Without the right LOS, LMS, workflows, none of this works. So first of all, you talk about how this is getting powered by technology, but I want to then leave a very specific question with you. Look, I think we spoke about risk and cost of funds leading to a certain price. What sits in between is also OpEx. And if we can get technology right, productivity up, we can compress that as much as possible. And particularly if it is not collateralized, then we should really be able to compress it significantly. So where do you think we are at in terms of technology? Do you think we are near what is required to meet the industry's asks, or we are still far from it? And then I'll also get the reaction to that question from other members on the panel.
Okay, thanks for those questions. But I'd first like to make a couple of points, on the overall aspect of MSME financing. I think one of the key things is, everyone is talking about the lack of collateral, not so much lack of data nowadays, because now there is the transaction history is available and the GST filings are available. But are these getting exploited to really do a proper credit assessment? And I do believe, and I think technology players do believe, that by bringing in by developing certain AI ML models, the credit assessment is now possible based on this large, vast amount of data that has got created by UPI and the GST data banks. The second aspect, I just want to add on to what Ketan said, talked about invoice discounting. In fact, we've been working on a broader concept. We call it actually supply chain financing, which is again banking on the credit worthiness of the anchor customer, as we call it, which could be a huge corporate like a Maruti or someone, and they would have hundreds, if not hundreds, maybe thousands of small players, small suppliers who are supplying material to them. And the supply chain financing, starting from the purchase order to invoice discounting to invoice financing, there's an entire supply chain financing that can be done. The advantage is that you finance the working capital requirement of that phase of the cycle. And you also avoid the risk of financing duplicates because you're financing that particular. While TREDS is a platform, I don't know whether TREDS covers the entire scope, but I'm happy to share that private players like us do have this platform, and the traction about this platform is growing a lot. Coming to your specific question about whether the technology is available at the cost which is required, I would say yes and no. Yes, because with the cloud-based models now available, the startups, the small NBFCs and all, we've been working with the largest players in the industry and the smallest player in the industry, and that is possible because the total cost of ownership of technology platform has really come down, so that even the smallest of financiers can afford it, and the pricing can be mapped to their business growth. So when they start small, the pricing can be very low, and as their business grows, the pricing. So I would say that the technology option is available. Why I said no is because how much is that getting adopted is a question mark, and how much is that getting adopted in the entire country is a question mark. I don't see any reason why it can't be, but I think it's a matter of time. We at Nucleus, our vision, our founder's vision is to make a 100 rupee loan both possible and feasible. And I think we are getting closer to that vision. Thank you.
Rajniji, you have been a consummate user of technology, both as a banker and now on the fintech side. What do you think is the state of maturity of technology in our country when it comes to credit and lending to MSMEs?
Yeah, no, as I was giving example of Bharat Pay, which is into merchant acquisition and merchant lending. So financial technology companies, what we call fintech, and I'm specifically to lending, but fintech is a much wider. So the adoption of technology is helping in many ways. And one is, as I was mentioning earlier, that capability to analyze data. And data flow is coming from various sources. Anyone who is part of the formal economy where GST data is available. So if today the technology enables you that if you have data around GST and then if income tax return is there, account statement is there. So that situation where the businessmen were preparing 3 balance sheets, one for sale, one for income tax, one for bank. So that situation now doesn't exist because there are tools available to cross-check the data. And using the data analytics, the ability to predict default, that has improved a lot. Then you have bureau score, credit bureau. So what he was mentioning about intention to pay and capability to pay, both can be determined. And today the fintechs, they are providing last mile connectivity in that sense, which banks or legacy institutions have not been able to do. So the situation is like this. All the liability gathering, that comes to the banks. When it comes to lending that money, they lend, but still the non-banking financial companies as well as the fintechs, they are also flourishing. And why they are flourishing? Because one is the gap, and in the capability of the legacy institutions to lend is small or collect is small. So there is a gap which NBFC and fintech, they have filled in that gap. There's nothing wrong in that model. And there should be an encourage to this model. Because fintechs and NBFC, you will never allowed to take deposits or have access to deposit. That deposit access will remain with the bank. And till they develop that capability where they can directly to the unbanked, then this partnership will work very well and it will ride on technology. All the problems around even co-lending model which Reserve Bank of India allowed but has not succeeded much. So issue is not about the intent, issue is about technology integration. Technology integration is very difficult. Banks have their own legacy system, fintechs have one system, NBFC has another system. Even today when we partner with NBFCs, the biggest issue comes around technology integration. So there is no standard format. Each bank, NBFC, they have their own technology platform. So how do they talk to each other? So that is a big challenge. And but as I said that the kind of development which is happening on the technology front, the what you call commoditization of credit, that is bound to happen. Like UPI changed the way we make payments and the huge volumes now we are capable of handling. So similarly, the access to credit and for small amounts to be underwritten and be collected, that is possible only through development of technology platforms. Otherwise, physically or manually, the cost will be prohibitive and it cannot be done. But the policy alignment around from the regulators, their comfort level. So sometimes I find that there is a contradiction there, that whether we want it or we don't want it. So that clarity also has to emerge. So by nature, because the regulator's responsibility is to protect the financial system. So we talk a lot about risk taking, but the regulation would never encourage risk taking. One regulator is sitting with us here, but I am saying in his front that regulation per se does not encourage risk taking. That is wrong.
Regulation doesn't encourage, regulation tries to protect from the downside risk. I think these are provocative thoughts. I'm going
So their task is very difficult.
No,
I don't blame them.
The beauty of a discussion is it's memorable when it's provocative. So with this I couldn't like thank you enough for bringing out some of these points. I'm going to go across and ask maybe one or two questions to the panelists, but after that we have maybe a few minutes left for questions from the audience as well. So I can see a few hands going up. Should we just go across to the audience now in the last few minutes? Is there a mic in circulation? Gentlemen, if you could just quickly introduce yourself and then raise the question.
I'm KK Gupta from Research in India. Sir, my question is, government introduced a good scheme regarding 100 crore guarantee and new assessment models. So how it is helping the banker and how it is helping the borrowers? Because borrower can get the money without submitting of the balance sheet or any other informations. Because government intention is very clear. They want an assessment by the bank themselves instead of asking any information from the party. So I have a question from the Secretary, sir.
No, so just to get it right, your question is that how are the new schemes going to help the borrower? Yeah. Right. So and if you specifically in the context of the new budget announcements and the ongoing schemes, all these, like I said in the past, all schemes are developed on the basis of stakeholder discussion and all participation from all sides. So it is not as if which the government has prescribes from its own. Something which is coming as a requirement or as a demand from the from the people who want this kind of a product, that kind of a financial product or package is designed. So insofar as the the new risk assessment model is concerned, so this is again it's something which came from the industry, from the industry associations, from the bankers, from various people. So what the essence behind this is that the present system of lending has models which like Rajneesh ji was also saying, there are sense of risk averseness among the bankers. So and the lending models do not are not being able to find resolution or way forward with them. So there is a model of there is a turnover model, there is a collateral based model or an assessed based model, there is a cash flow model. But at the same time, what is happening, like you yourself said, a lot of new things are coming. The fintech is, developing new ideas into the risk assessment processes. So there is use of financial data as well as non-financial data. The government has set up, the account aggregator framework. There are, like mentioned, there are different credit bureaus, there are credit rating agencies, and there are various other things. So what we are contemplating is to create a model which is beyond the existing and traditional model, so that we are able to get there. While this is happening on the ground to some extent, but it is also causing problems. There are issues with respect to data. Now the data, where is the data coming from? There is secondary data, tertiary data. There is data coming from the darknet. Based on that data, credit risk, alternative credit scores are being developed or true value scores are being developed. And then when the the loan is like processed and it plays out, then there is a situation of delinquency. When there is a delinquency, then there is a harsh recovery regime, so on and so forth. These are problems on the ground. Like I said, already this something is working, but it has its own set of structural issues. So the new model which the government proposes will deal with all this. It will deal with the situation of data being standardized, the data being universal. It will deal with creating the processes which do not overlook or have a problem with respect to due diligence and things like that. So it is still in the works. And like I said, it is not something we will announce in 2 days or 3 days. There's going to be a proper stakeholder discussion. It will also be thrown open to the public once the model is developed, and only then it will come out. Thank you.
And if I may just also add, sir, I think again from a CII panel perspective, there is much bigger room for improvement on the collection technologies. I think the industry has invested heavily on lead generation, origination, underwriting. But when it comes to actually collection technologies, there is a significant gap. Just to put some numbers, financial services in India annually spends 50,000 crores on collecting their money back. Now, it's not just financial services. Telecom companies are collecting their bills. Electricity companies are collecting their bills. Auto OEMs are collecting their receivables. If I add all of that, that number hits 75,000 crores. And it's growing at a very fast rate. To the audience, can you guess what percentage of this is actually collected digitally and penetration of digital, more efficient technology-led collections? That number is barely 14%. So the rest of this money, hundreds of crores, is being collected through physical, feet on street, paper-based, time-intensive, effort-intensive means. And I think Rajneesh sir's comment earlier that we do daily collections is just completely fantastic, because then you build so much efficiency. Data collection is also faster. You know every day कि आज इसने पैसा दिया कि नहीं दिया. So my request, I think, just for as CII and for my August panels here also, is that this is potentially an area that we may want to explore in the country's interest. How can we really promote collections technologies to increase efficiencies in the system? There was another question there.
Yeah, hello. My name is Sunil Mehta, quite popular name in banking circle. So, based on what Mr. Rajneesh Kumarji has said, my question is related to trades. Like, as you just said it, like there are so many collections to be made. In trades, what exactly happens? All lakhs of MSME put their bill on the platform and okay, they get their money. Can it be reversed? Like whichever eligible bill are there, the user of the services or material, they put it on the net that this is approved bill, automatically SMS goes to the MSME, and if they want to discount it on trades, they can do it.
You're talking about MSME to MSME?
No, I'm talking about large corporate to MSME. Reverse.
The dealer side.
Reverse, exactly reverse of what you're saying.
The dealer side.
Yeah.
The dealer side is not yet envisaged, where you're saying the large corporate is supplying to the...
No, MSME is supplying material to large corporates.
Right.
But when it comes to collection of payment, they face a lot of difficulties, timely payment. But the moment they accept bill, large corporates, and they put it into their system through trades platform, that yes, this bill is eligible to raise finance on the trades platform. So whether this is feasible.
Yeah, so this is what the mechanism is. The mechanism is that the invoice gets uploaded on the platform. The corporate comes and accepts it. Once it is accepted, then the financiers look at the corporate and do the financing. And this is completely digital. So that means and then the financier will look at the corporate and do the bidding. Why I'm saying bidding is because there is not only a single financier involved, there are multiple financiers involved. So then the financing happens and the MSME gets the payment on the next day itself. It's completely digital. So that means we have a NACH mandate to go and credit his account. So that's fine. But on the due date, we go and debit the buyer. We do not wait for the buyer to pay. So that means this money which the MSME has got is completely without recourse. That means he's got his cash is out. So even if there is a performance issue or whatever, it is to be settled outside the platform once it is financed. So on the due date, the debit file goes to the corporate, large corporate, and he gets debited and the payment goes to the financier who has done the financing.
Okay, fine.
Hey, my name Maybe after this last question we'll take, we are out of time.
My name is Vishal Sanghvi. I'm Serial Innovators and I work as an innovation business accelerator and also support many startups. There is a big challenge about the finance to the startup and MSME because MSME works for some purpose actually, and they are always all rounder for their domain, domain actually. Challenge about we are running traditionally financing about if somebody MSME is starting the factory machineries, then they got a finance loan. But if they any MSME adopt some as we theme of the Viksit Bharat, and we cannot Viksit Bharat without digital adoption, technology adoption with MSME, which is the biggest agenda actually. So how the entire loan process if MSME develops some their IP, some platform, some technology inclusion to expand their businesses actually, it can be also count to as a asset actually counting because their investment something for like currently their customer size is 1,000 and doing some technology inclusion, their customers maybe in the next 2 years of time, something 10,000 because sometimes loan can be given by brand ambassador who is a brand. So how the this entire CGSTM and other loan process, MSME should be if they invest on technology for business expansion, they should be count as an asset. And second things are as you as a dip the supply chain, supply the demand is more, supply is less. How we MSC is connected with the industry specific, their organization, the institution, like how CI and Chamber of Commerce, Community Chamber of Commerce and other. So how this Chamber of Commerce or community organization can become a given up to financing their MSME actually. Sometimes so there is a less failure for the for loan defaulter actually. So these are two things I want to share and take your views on it.
Okay. So I'm not sure what was the question, but what I made is what I can gather from you is that you are basically saying how can we involve the industry associations into the financing part for the MSME? Yeah, yeah. So the government already has some schemes where this part is taken care of. If you look at the cluster development scheme, or if you look at the newly launched schemes of the green investment and financial transformation and SPICE scheme. These are for the green technology and circular economy side. So this here necessarily the involvement of the industry association in demand generation and also the there is an element of subsidy if the industry association gets us these MSMEs on board to partake of this financial product. That's one part. Then the industry association is also helping us in the proliferation of things like the Z certification. Now Z certification has been put on the DigiLocker, and since it is on the DigiLocker, so it is kind of helping. It's like an e-sign of sorts in the credit process, which helps the backers to get you a speedy credit. So though they may not be very direct products, they're like I said, just 2 or 3 products are available, but certainly there are several ways where the industry association is part of the delivery of the government system. So that is just one part. And also what happens with the industry is there is a lot of awareness and advocacy. That's what goes around. So government participates with the industry associations in showcasing and telling everybody what all is the offer in terms of schemes and products. So it is not just at the centralized level, but also at the state government level, also at the district level. So then also industry associations are part of the SL. I don't know if you heard of the state level bankers committee, district level bank. They are all part of those forums as well. So the industry participation is certainly very much neck deep into this into the government system of working, and it certainly helps us in delivery with respect to the various products we've offered. Yeah.
Okay.
I didn't really get it. What was the question? Did you get something out of that?
The moment you start doing for cash flow based lending, then that aspect is taken care of. And traditionally it has been asset based financing, but once one switches over to cash flow based, then that would happen, and that has started happening. Of course, the nature remains slightly different, so all banks may not be proceeding with the same speed, but I guess that is happening.
Rajnish, you may also have a view. I think the question is that if you're taking working capital or buying hard machinery, you can get a loan. But if you're creating an app or a scorecard or a digital journey, you don't get a loan. Should that
this
be
is
an asset?
more of the nature of intellectual property, right? And bank loan will not be available for that. That I know for sure. So if it is difficult to get loan for plant and machinery, then how can you get loan for this thing? Like say for example, it applies to any intellectual property, even for like content creation in film industry, television industry. So the bank finance is not available or suitable. There the role of the venture capital and alternate financing that comes.
Yeah, that is equity risk.
Yeah. And what we have to also understand, that type of financing will be costlier than bank financing. That financing cannot be as cheap as bank financing.
Yeah.
So bank financing comes at a stage when it is safer for the banks to lend. And as I was speaking earlier, it is banks, it's not their money, it is depositors' money. Regulator, they have to protect the system, the depositors' money. So how can they allow risk taking? There's an inherent contradiction, because tomorrow the depositors will lose their money if there is any relaxation by the regulator.
Default.
So a different type of capital is required for these different type of activities, and that will definitely be costlier than the bank finance.
I think that's where Ashwini ji, the point you made earlier, that there are different vehicles, AIF type 1, which has hardly 3,000 crore is something you said, or less than that?
Less than that, it's about 1,600 crores.
1,600 crore, that's trivial for a 45 lakh crore is just the SME lending market. 1,600 crores of equity kind of structure in AIF type 1 mixed. But that can help the issue.
But it would help in the sense that once you go to a angel fund or a venture capital fund, you start getting in the systems, you start getting the governance. That helps you in your IPO journey and your capital raising later on.
That's I think for us as CII, maybe we also need to create some educational platform. We are out of time. Maybe final comments, Atish ji.
Finally, if the answer was the alternative finance, so just to also let you know, maybe you can look at that. The government itself runs, two fund of funds, or three of them rather. So there is a fund of fund for startups, which is for 10,000 crores, which is run by the DPIIT. And there's another fund of fund which the Ministry of MSME runs, which is called the Self-Reliant India Fund, SRI Fund. That's also for 10,000 crores. So one is a back-ended fund, and the other one is a front-ended fund. You can have a look at those, and that's where I think some of your queries can be answered.
Thank you. I think some of this literacy is required. With that, we have actually overshot our time. So thank you very much for this engaging discussion, gentlemen. Thank you very much, audience.
Yes. So thank you, gentlemen. Could I request all of you to kindly step ahead and come close for a group picture? Thank you. And with that, we conclude this session. Kindly allow us some time for a quick changeover, but do not leave your seats. Within the next few moments, we are beginning the next session, which in fact is the last session of day one. The panel moderator as well as all the speakers are here already. So as soon as we set the stage, we will begin the last session of the day. In the meanwhile, let me apprise you that we are having high tea after this session, that is at around 6:35. And tomorrow we begin with a morning breakfast at 8:30, which will last up to say 9:15, and 9:30 sharp, we begin the first session of day 2. So ladies and gentlemen, We have the chairperson of IFSCA, deputy governor of RBI, member IRDAI, chairman PFRDA whole-time member SEBI, and finally the DEA will be joining for the valedictory tomorrow. So we have a day full of significant and new learnings. We will get to hear from senior government officials and regulators themselves. So as we have covered a lot of ground today, tomorrow also we check, check. We have a full day tomorrow, check. So just give us a couple of more moments, check. Am I audible correctly? Check. Okay. So ladies and gentlemen, the last session, Together We Can, Housing for All. As we all are aware, India's economy, check. So as I was saying, India's economic journey is intrinsically intertwined with inclusive growth and social development for its citizens. Towards this vision, the Government of India introduced Pradhan Mantri Awas Yojana, the PMAY, aimed at ensuring affordable housing for all. While significant progress has been achieved on this front, there is still a lot that needs to be done. This session will have financial sector experts, policymakers, and corporates to discuss the progress made so far, explore innovative financing solutions, and identify strategies that can enable citizens to have a place called Apna Ghar for building and cherishing memories. So let me begin by inviting the session moderator, Mr. Sanjay Doshi, Head of Transaction Services and Advisory Head, KPMG. Welcome, sir. Our panel of speakers, Sri Girish Koski, Managing Director and CEO, PNB Housing Finance, Mr. Apul Nayyar, CEO, Hero Housing Finance Limited, Mr. Gurmeet Singh Arora, Managing Director, Rajco Metals Private Limited, Mr. Amit K. Sinha, MD and CEO, Mahindra Lifespace Developers Limited, and Mr. Sachinder Binder, Managing Director and CEO, Aavas Financiers. So with that, I hand over charge of this session to Mr. Sanjay Doshi. Over to you, sir.
Very good evening to everyone. Of course, this is the last session, and that can definitely be seen with the presence in the room. But I hope with people who are already present here and would be keen to really get some insights from this session. And for that, we have a very fantastic panel here. First of all, a panel which is very diversified, starting from the developer community, from the lending community, and again in the lending community it spreads across various segments from the lending community, and also someone from the industry and someone who's really worked on the green housing space. So first of all, welcome everyone, and thanks for joining this panel. So broadly you'll see housing, and our topic is housing for all. It's important. The PM Awas Yojana has been quite instrumental to ensuring that how housing for all really penetrates across the geography and across the country. Along with that, you've seen how lending, whether it's banks really lending to people who they can lend, but more importantly, non-banks and housing finance companies really playing that role again to ensure that people who are not able to get loans from banks are able to get adequate financing to buy their own house. But before we really go into the entire housing finance, let's try to understand what's really happening in the entire housing space, especially from real estate. And that's where I would like to start my first question to Amit. Amit, real estate, right? And you come from the developer community. There is, over the last, especially post-COVID, COVID certainly has become a bit of a benchmark, right? It's a line you typically now start drawing pre-COVID, post-COVID. But post-COVID, people thought, okay, housing will go down. And actually, it's really picked up. The number of projects, the kind of supply which we have seen in the market across the segment, the kind of buyers we have seen, right? But everything going up, cost going up, compliance is going up, and interest rates going up, right? How do you see this market really evolving? What are the bottlenecks? What are the areas where you see things can be really be better from policy, from regulations perspective for things to become easier for the buyer?
So it's a very broad question and very long answer to that I can give, but I'll try to keep it short and maybe invite reactions from my colleagues here. I think real estate sector, I call it a purple patch for the sector. It's going through a time after probably 10 years, 15 years of slowdown. Some cities, some states had more slowdown, some had less of a slowdown. But the sector is going through a purple patch and will continue to go through for a long period of time. And there are multiple very favorable demand drivers, right? Like post-COVID, as you touched upon, the desire to own home, desire to own a bigger home, like 1 BHK, owners looking for 2 BHK, like in the spirit of Dil Mange More, looking for better amenities, looking for better infrastructure. All those things have created amazing demand outlook. And there are many other things that help through that. From a supply perspective, there were very few launches that happened in the previous decade. So there was, because there was inventory overhang, the RERA came in, GST issues, demonetization, and the overall slowdown culminating into COVID. Subsequently, things changed. And I think from a supply perspective, what you saw was many projects that had languished, they started to come for completion. And when the demand actually came back, there was a sudden spurt, let's have a home, and the prices went up like anything. So that's the supply demand dynamic that we have seen. Our view is that while we look at per capita income as a measure of how the demand will continue, in Indian context, what matters is per household income. So there are more income earners within the house, parent support, children support in terms of buying. And this is going to be very helpful for long-term outlook of the sector. What can derail this is, I think, is the desire to make supernormal profits, where you take pricing very fast, very quickly, and that can derail it. Second is some of the other, what you touched upon is from a regulatory point of view, from the TDR premiums, for example, in Mumbai market. Those are the issues that are there, which could actually derail the growth. But from a challenges perspective, I think from a developer perspective, the issues are threefold. Number one is how do we accelerate land to launch? Land prices have gone up, construction costs have gone up. The moment you put equity into land, you just want to start to get the cash coming back in. And land to launch continues to be a big issue driven by approvals, driven by design issues, multiple litigation that come in the way. So that's the first part that we need to resolve as a challenge. The second part is financing. I think if you broaden from a, let's say, affordable, mid-premium, premium, and luxury, we see a K-shaped recovery post-COVID, especially in the affordable segment. Interest rates have hurt the demand. People who wanted to buy homes, they had to really decide whether they buy a home now or they defer their decision given the market sentiments. From a financing point of view, not very, and my colleagues can add more color to that. And the third part is the connectivity issue. Like many of the infrastructure projects have taken much longer. So people bought homes. Like I have a project in Kalyan, which is a little bit away. Now the connectivity starts to improve, but for the longest time, it languished because the roads and infrastructure just wasn't there. For Mumbai, for example, I used to live in Gurgaon. The infrastructure is the biggest multiplier on the housing sector. And it affects the pricing, it affects sentiment, it affects the ability to connect to where the jobs are, to where you want to live in a dream home. So I think these are the three challenges I would say. One is land to launch and regulatory approvals, and they don't stop after launch, they continue till you get an OC. The second is financing, which my colleagues can add, especially for the affordable. And the third one is the connectivity and the infrastructure that's required to make all of this happen together.
Sure, thanks. And Girish, I'll bring you in. Housing finance company, Pan India, also associated with a bank, which also does a lot of housing finance, definitely a different segment. How do you see from two aspects? One is when you're looking at Pan India, and we heard from Amit the challenges which are there across in terms of regulations. And then when you go in each state, things again change, right? So when you are really underwriting either a project or you're underwriting borrowers, what is the lens you provide, and which are the areas which probably, if you have a wish list to say that, which can actually make the lender's life also easier and hence the buyer's life or the borrower's life also easier?
Thanks, Sanjay. I think it's again a very broad question. So let me start from COVID. After COVID, the first industry which was revived was real estate and housing. So COVID started in March 2020, and we saw from October till now, real estate has really improved as a sector, and housing also has improved. And even the asset quality, what was anticipated in terms of deterioration, it didn't really deteriorate. It went up, but again it came down. So I think this space is really doing well. Demand from then till now has been very good, irrespective of the segment, starting from super prime, prime, emerging, and affordable. I think across all the segments, the demand is quite huge. Of course, in last couple of years, there were certain challenges on the affordable side in terms of demand and also on the supply, more to do on the developer side, not on the non-developer side. But I think this industry is doing really well. When it comes to affordable housing, the real challenge is that it is not like any other segment like super prime or prime, where there is a lot of supply and therefore the demand could be met. On the affordable, because there are challenges on the developer side in terms of bringing in more projects, because affordable projects are not really viable given the constraints, and therefore scaling up a book beyond a particular level becomes difficult for any of the lending institutions. I think that is the challenge on the affordable. Demand is quite huge, but it's a very hard working model. Obviously, you need to open brick and mortar branches, not much of digital would work. Your credit model should be very different compared to the other segments. And therefore, it is the scale what is required at the speed what it is required. I think that is something can drastically improve going forward. I think today, if you see, demand is quite good, and there's a lot of supply, especially on the non-developer side. The challenge is that from lending point of view, one is the cost. So cost of funds are really rising. If you look at last year and a half, rates have been going up. So even though we talk about 10 years back compared to today, affordability has improved, customer income levels have gone up, a lot of lending institutions have been more pragmatic in terms of lending, and therefore the coverage of credit in this space especially has been very good. Still, I think a lot needs to be done. I think in this line, government has come out with very good initiative in terms of announcing 10 lakh crore for housing. And for PMAY, if you see this term, the announcement is almost about over 2 lakh crore, 2.3 lakh crore. If you look at last two terms together, amount released was 1,65,000 crores. So we are yet to get the final details of the PMAY scheme. It would broadly be one, subsidy to the end use customer, and number two, it could be interest rate rebate. I think this is going to do a lot of good for this industry, I think, in the years to come.
Thanks. I still have to hear the wish list, so I'll get back to you in a few minutes. But Gurmit, if I have to bring you on the PMAY scheme, right? You heard Girish talking about the amount disbursed. Do you think PMAY scheme is really effective, or is there something more needs to be done there?
See, effective depends on land acquisition
especially when you convert slums to Pradhan Mantri Awas Yojana Housing for All. There is no paperwork available. You can't go back and see who owns the property, because a lot of these slums in the cities are built illegally, and now we want to legalize them under PMAY. So there are problems, but currently, if I look at the figures, already we have 1,99,000 crores was granted and 1,64,000 is already released. We already have 1.18 crore houses sanctioned, 1.14 crores grounded, and 83.67 lakhs have already been completed. So this is also the bigger problem is also that this is a joint effort both by the center and the state. And the center has been mandating certain dates that if you complete by so-and-so date, you'll get the financing, otherwise you won't. And the state has had problems in acquiring land, in looking at the land ownership, where it is taking much more time. So I feel it's a fantastic scheme because in our urban centers, if you see, we are urbanizing currently at 6.7%. We are building 600 square kilometers, or one Chicago is being added to the urban landscape every year. One US will be added to India's landscape in the next 10 years. So obviously we would require low-cost housing and affordable housing for these services. All of us have 2 and 3 domestics at home. Where do they stay? In slums, right? Where there is no sanitation, you are using the sea as your, at least in Bombay, all your sanitary untreated waste goes to the sea. If I look at Delhi, 55% of the black water is untreated and just let into river streams or water bodies. We need to now see how we can ensure that all our black and grey water is treated, all the housing has sanitation, they have electricity, and at least the 300 square foot house that we are giving provides them a proper living. There is a problem on financing because, the land price has increased a lot, and I find that infrastructure is not keeping up to our 6.7% urbanization state. For example, Amit talked about his site in Kalyan, where there's Tata Mantra also next to you, within 1 kilometer. Now I have a factory which is beyond Kalyan, 38 kilometers from Kalyan. Used to take me 2 hours to reach there. Now it takes me 3 hours to reach there and 4 hours to come back. Even from the Mahindra site to Thana, it can take me 1 hour, which normally would take 25 minutes. So I need a metro rail station, I need connectivity, I need transport facility for people who can stay there and come to Bombay to work. They are not all going to be working in Kalyan. So I think government needs to keep up with that. Other than providing affordable housing, and affordable housing you cannot provide in the main city because land prices are very expensive, or the economically weaker section housing. You have to go little far out of the city. Look at the Dharavi issue now. Dharavi, for the next 5 years, they are to build 1 billion square feet. Now, there was a problem on where to house these people, because you're going to displace a lot of families and a lot of businesses, and you have to, Adani is doing this project currently, and it's total 2 billion square feet, and 1 billion is to be done in the next 5 years. Will it be done in 5 years? No, because even shifting all the people from there to an affordable place, because land is not affordable in Bombay. So where will you shift? Where will you build affordable housing or economically weaker section housing? You'll have to go somewhere beyond New Bombay. Even Panvel now, there are HIG housing, Hirnandani over there. Why? Because you have got the Atal Setu connecting you. Within half an hour you reach. And even Panvel now, there's a Kalpatru, there's a Hirko, and all the builders which are not building low-class housing at all. They are all higher income group or middle income group. So we have to find areas out of the city which can give us affordable housing at a cheaper price. Land has to be at a cheaper price, and at the same time improve connectivity for these people. Tomorrow, if I can catch a metro rail and come to the city within 45 minutes, nothing like it. I can stay anywhere then, right? It happens all over Europe. It happens all over Singapore. You look at Singapore. The metro station is now 30 years old. You have just come back from Singapore, I think, on Saturday night or Sunday. And people don't want to go in cars. Well, second big problem in India is that there is now legislation that you have to provide so much parking in every building, right? 2 car parks, 3 car parks free of cost within the flat. Now, if you provide 3 car parks, you're going to get 3 cars. On one hand, you're building eye to sky, 50-story plus. On the other hand, there's no infrastructure, there's no sewage water pipes, there's no electricity.
So I think then probably on the car side, maybe we have to be like Singapore, where every car you buy, you pay 150% of the car cost probably in terms of buying. But giving back from infra to housing, I think we don't want to get here
I have
on
seen
more on the infra
I
side.
have seen suited and booted people sitting in a bus like a BST bus and traveling in London. But we cannot do that because we don't have the infrastructure and we will feel ashamed to go in the bus,
No,
It's
fair
very
point.
sad.
But see, I agree. Bombay as a city is fine, but when you see housing, right, and where a lot of real estate is coming is in the other cities of the country, like tier 3, tier 4 is really coming up. But again, coming back, Apul, to Amit's challenge in terms of as a developer, how does he really get the initial level of construction finance? Where do you see housing finance company really playing that role? Do you think they can?
Yeah. So first of all, Sanjay, thank you very much for CII for organizing this event and touching upon a very critical subject, housing for all. I think all of us are aware 1 rupee invested in housing contributes 1.5 rupee back into the GDP. So it's a very, very critical sector. If you look at India, as a percentage of GDP, housing finance is just 11% of GDP. When we compare it with our Western peers, some of them are ranging 50, 60%, and so on and so forth. So for example, US has a GDP of 25 trillion. They have, housing is about 13 trillion. And 9 to 10 trillion out of that 13 trillion is held by entities like market stabilizing entities like Fannie Mae, Freddie Mac. What is happening is this sector is now getting focus. So why I'm stating that is India is at the cusp of investing in a residential mortgage-based securitization entity, an entity which is sponsored by RBI and NHB in partnership with private banks as well as housing finance entities is going to be set up. The main job of that entity is going to be democratization as well as deepening of finance. So we have originators on one end, wherein there are a lot of 100+ housing finance companies who are originating, some in big metros, others in deep geography, and so on and so forth. One of the critical thing is that they faces asset liability mismatch. They lend long. Most of the housing finance assets are 20, 25, 30 year, but they borrow short, 3 to 5 year from the banking as well as the corporate bond market. What this entity is going to do, Sanjay, is it will aggregate confirming mortgages in the sense on a standardized underwriting norm. It will aggregate assets from these originators and then at the back end sell it or through a PTC route get entities with long-term finance asset requirement like insurance, superannuations, PF, and so on and so forth, invested in that. While the brass tacks is still being worked out, we're applying for the license. But what it will do is it will push two things on the front end. It will deepen the housing, origination or housing finance to the retail consumer on the front end. And at the back end, it will eliminate the liability saturation risk altogether. So I think that my understanding is it's going to be set up with 500 crores of initial net worth. But over a period of time, we would see a lot of I would say, market stabilization framework coming through that element.
So that's great to hear. Slightly mid to long term is what we can see the benefits really coming out of it. To really have, though still you have not answered my question on the construction finance, where how do you really make their life easier from lend to launch?
No, we are here to partner with the industry on the construction finance, wherever the
But do you
requirement.
think anything around the regulations, because it's not easy to really get in at that stage of lending, right? Yeah, the top developers, they find it easier to get the equity, but to mid to smaller developers, it's not easy for them.
So I think the landscape over there, Sanjay, is also changing. What is happening at the land aggregation stage. There are some entities, AIF stroke NBFCs, not HFCs, who operate at that land acquisition stage. Will not discuss the cost of financing, but the risk embedded is also very different. And as the various approvals kick in, more and more deeper, larger suppliers in terms of finance, housing finance entities, banks, etc., start kicking in. It depends on the stage of approval of the project, of the property concern. Once it is at a stage which is I think in the formal markets, if it's closer to RERA or post RERA, then you will find a lot of financiers stepping into that project.
Coming to you, Sachinder. I think, yeah, I've kept you quiet for a long time now, but you play in a very affordable segment, right? You really touch places where banks definitely don't go. And you heard the entire conversation, right? What is your perspective in terms of areas? And again, I'm seeing it purely from the buyer's lens and the borrower's lens. That what are the areas where things can become much better for them?
Thanks, Sanjay. From a perspective of if you look at the mortgage to GDP ratio, which Apul mentioned, I think if you remove the tier 1 and tier 2 towns, I think it comes down to around 5%. So I think we represent and Awas represents Bharat actually, and that is where tier 2, tier 5 towns are actually. And as Awas, we are into a segment which covers unserved, underserved, and partially banked kind of customer segment. Self-construction individual homes, our average ticket size being at 11.5 lakhs. We cover 2,500 towns, 350 plus of districts covering 13 states. So we are much granular. We are at the place at where it is an impactful difference of the real Bharat, which is self-construction individual house for his own living. And again, therein, as unique to us, we are new to mortgage at around 80%. That's very unique because it's the first asset which the customer is building, which lends to the economic stability, the social stability, and finally having a multiplier in the tier 3 to tier 5 towns. I think, Sanjay, it's very interesting to note that I think a couple of things which are aiding that tier 3 to tier 5 growth is if you look at the overall housing shortage of 100 million units, 90% of it comes from economically weaker section and lower income group, EWS and LIG. That's a huge potential. That's a huge opportunity. And that's the one where Awas is really there in last 11 years, so to say. And again, along with that, our commitment to environment, sustainability and green. We are the unique one worked across with IFC for 2.5 years to develop a self-construction individual home to be certified as green. I think that's a unique one, our commitment to that in the ground level at the space which we operate in. So I think that is one which is making an impactful difference to the places which we operate. And the third very important point is that even with that, we had women which is co-owner or owner of the property at around 45% at the towns which we speak about. So I think that is very impactful. And again, what Girish talked about PMAY, there's one component of PMAY which is affordable housing projects, which is under by the nodal agencies and by the likes of the MADAs, the SIDCOs, the Karnataka Development Board and Rajasthan Development Board. They create the one which is there. I think Awas is uniquely positioned across again to serve that segment, which is EWS and LIG. So specifically on that, I think that is making an impactful difference. Again, Bharat is more digitally literate than it was ever post-COVID. I think using the digital public infrastructure and the trinity of JAM, which is Jandan, Aadhaar and mobile connectivity, I think impactful difference to make underwriting and easy access to finance much more faster, much more accessible and at a speed which requires to make an impactful difference is what we are doing. So I think in the space which we operate is Real Bharat, which is going to make an impactful difference where we see a lot of impactful difference coming across by, as somebody on the panel talked about, infrastructure getting to the tier 3, tier 5 towns. So connectivity, digital public infrastructure, housing for all, the government's focus and rural aspiration
to build good, better house, I think is one which we are very enthused about the segment and look at that to make an impactful difference.
Thanks. Taking a segue.
Sanjay, I'll just add
sure,
over
sure.
here. Let's also not forget that the affordable segment is a segment which has been saving for generations altogether to buy a home, because we're all Indians and we all culturally we want to live in our own home and so on and so forth. But with the advent of this Pradhan Mantri Awas Yojana coupled with housing for all vision, once in a lifetime, many generations lifetime, this notion of owning a home has been made possible. So I think we should laud and compliment whatever investment as well as development that has happened in that area. I think it is to this end. We also have a tagline which is "Ghar ke ख्वाब se ख्वाबों के घर तक." So I think this basically addresses the needs of not only the urban poor, but urban, I would say, inclusive population, but also the deep geography in that matter.
No, absolutely, Abul. I think you're right. Means the entire dream of many of the individuals buying their house, not only from their savings, really the Pradhan Mantri Awas Yojana, CLSS scheme, the initiatives taken by the developers and also by the housing finance companies, that's definitely commendable. It's really helped. But now just to take it forward, and if I really want to, make it slightly bolder, if you have to go down, let's say areas or initiatives, which is going to help all the stakeholders, whether it's the buyer or the developer or the financiers, which are the areas? So if Girish, if I have to come to you, again, if you see Pan India, central schemes is one, and then every state has its own way of managing real estate, right? Whether it's the land reforms or whether it's the registration process or whether it's the duty element. Any views or any inputs from you on that? And again, I'll probably ask the same question to each one of you.
I think if you look at all the stakeholders, so on one side we have the landowners. So land acquisition has to be made very, very simple. And the compensation, always there is a gap between the expectation and actual reality. I think that bridge has to be filled, number one. And number two is approvals. As Amit rightly mentioned, from land acquisition to launch, it takes about good 1 year, right? I think if it is only for land acquisition, maybe for developing a project or for developing a layout, right? I think that time has to come down, which means that the processes will have to be much simpler and much faster. There is a concept of single window scheme. Government has taken a lot of efforts, but I think still a lot more needs to be done. So one is land has to be acquired faster, fairly. Approvals have to be faster. This is one. If this is going to be acquired by a developer, but if government is acquiring that, because obviously at the end of the day, landowner would expect fair market value and not the compensation what really he has been offered. So that gap has to be bridged by the government. That's number one. Number two is approvals. Number three, today we have seen so many projects, affordable projects. It could be a project or it could be a land development. Without infrastructure, it becomes really difficult for people who have either purchased a house there or constructed to get to place of work. So infrastructure has to develop, especially in top 20 cities. You go to tier 3, tier 4 cities, I think it's fairly okay. It will not take too much of time, and there is no congestion in terms of traffic. But if we have to talk about top 20 cities, infrastructure has to be improved. There has to be connectivity. Maybe it could be metro, it could be school, all the facilities which they would get at the place of stay, and easy commute to place of work. Some of these things from a lending institution, I think a lot of work has happened more from a lending point of view through the nodal agencies. But in terms of infra, in terms of easing out the process of acquiring the land and working on a partnership, it could be PPP or it could be a government acquired land for developing a project which would eventually be sold to the end customer in collaboration with the financier. I think all of these things should gain pace.
And Amit, if you have to add points here, especially the cost of compliance, do you think there are any areas where you think your wish list?
Yeah, no, that's cost of or approval and compliances. I think these are the necessary evils of this trade, right? And how do we balance with, I would say, speed is extremely, as Girish rightly touched upon. In many cases, the compliance comes to those developers who are more responsible. And there are others who are able to manage through the system. My gut feel is that it's very difficult to fix systematically, but there should be some way to help those developers who are responsible, who are doing the right thing most of the time, right? You can't get everything right all the time, but there is a huge amount of challenge there. And I was in another forum, and somebody told me that when he was getting married, he was a developer. When he was getting married, he said, when he told that he's a developer, then the girl's family walked away. Because what you have to do as a developer is very difficult to make merry in the industry. So it's very important to have the challenge of approval compliances sorted out for the right developers. The biggest thing that kills any developer is the speed. You don't know. You put all the money, you put all the efforts, and it's just taking so much time. So that's one thing that I would say, as just second what was said earlier. But I think there are other things that government can do. There are a few things that we can do, and there are a few things that financing companies can do. Let me quickly cover that, right? And it's not always for us to ask what can government and in the government and quasi institutions can do. But I think for us to prosper this industry, accelerate this industry, I think there are a few things which are relatively easy. There's a lot of discussion about stamp duty reduction, which we saw in the COVID duration, that it really propped up the demand significantly. It exists in some shape and form for affordable segment, but I think it can be. And the revenue went up, the volumes went up. The volumes went up like anything, and which led to higher revenue. So I think there are multiple such small interventions are possible that allow the maybe at a unit level the realization comes down, but as Gurmeet you touched upon, the overall revenues, the volumes go up significantly. So that's something that could be done at the government level. What can developers do is for us to really think about our own cost structure. Land is, we know, has its own challenges, but can we manage our cost structure really well? Can we go for scale? Can we do our procurement better? Can we plan the efficiency of our projects better? Like I know, given the way the Mumbai works, the efficiency of a project, if it is crossing 48%, so construction area to the sellable or the RNA area, RERA net area, is 48%. If I am able to design better, I take it to 48.5, it has a very good benefit on my economics. Pune is at 54 and Bangalore is at 57. So there are some regulatory hurdles that we need to smartly manage that allows us to make the efficiency of the construction really much better. And these are things that we can scientifically do with structural integrity and whatnot. The third part is on the financing side, and I can suggest a few things. There are two parts of financing. One is what we take as construction finance, let's say, or some of the other developers take, or the financing for the end users, like as home loan. I think efficiency, speed, managing your book, your balance sheet effectively will allow you to pass on the benefit to the end customer or to developers, which will help prosper the industry in a significant way. And I can have my colleagues talk more about it. But those are the three things I would suggest that can be relevant as we think about addressing the challenges.
And Apul, if you have to add your points here, especially around how the lenders can be more operationally efficient to pass on the benefit to the borrowers.
Sure. I think one of the things that I was on the side discussing with Amit was on the RERA, I think it's not a complaint, but I think if RERA could have more teeth with respect to the developers and the and the builders who are, uploading the projects onto the platform. It gives more assurance to the lending community of a independent uh, entity in the middle, which is acting as a governance framework as well. In terms of passing on the benefit of efficiency, we had throughout the day we had discussions around technology, new technology, how technology is changing how we operate. One of the things which probably is right now a hurdle in the affordable housing segment is I would say very high touch points in terms of a very high touch products. You have to meet up with the customer multiple times before you can lend. If it's
But that's because of getting the records, or is it?
it's partly because the customer in affordable segment is either self-employed or has informal income, and they will have an informal collateral as well. So all these three elements compound for increased compliance on the front end, whether it's in the metros or in the jeep geography. And that's why I think the cost of operation of most of the housing finance companies operating in the affordable segment tends to be on the higher side. But what is happening is the digital landscape is changing. What UPI did to payments, hopefully ULI will do to lending, and with property records getting added, it will do to home lending as well. So I think, and the second part is use of surrogates, like the payment ecosystem right now is as I would say deep and as professional as it can be. Obviously, it has some challenges, but people are leaving trails. So when they have informal, unassessed income, the digital trails are becoming a surrogate for a housing finance entity to be able to assess the affordability of the customer and lend to the customer. So yes, technology in a big way will add to efficiencies, and we will continue. We have been and we will continue to keep on passing on those efficiencies back to the community, whether developers on one end or customers on the other.
Sure. And I'll bring in Sachin here. You've scaled up affordable housing finance in the lower ticket segment, right? And a lot of digitalization is also happening at your end. So, what are your thoughts, especially given your customer does not come necessarily from a developer background, right? They actually are self-construction people.
So I think Sanjay, it's very interesting when we talk about, we spoke about Bharat being digitally literate. I think at an ecosystem level, the digitization of land records will make a big difference when it comes to the titles, and that will speed up really the efficiency and the accessibility of the finance there. And some of that has happened in the southern states of Karnataka, AP, Telangana, and some part is actually, I think, gaining momentum. That is one which is going to be a major big buildup. Secondly, I think as an economic stability and economic prosperity in tier 3 to tier 4 towns, and what government of India envisages, which is along with housing for all, the mission to get financing micro MSMEs. I think that is another part, and where Awas also plays a very important role to finance that. I think that increases the economic stability, creates a lot of opportunities to really aid the income, and doesn't push up towards moving towards urbanization, and you really have those centers becoming economic centers. I think that is being fueled by the connectivity, the sprucing up of the infrastructure which is there. I'll give you a classic example of Rajasthan. You have a highway from Dausa to Gurgaon. The connectivity with that never had those peripheral towns being really connected to the network. Now you see the connectivity which has led to go to market for those places to be much more efficient. So I think as you more connect through rail, road, air, waterways, other connectivity, I think you have a good amount of waterfall effect which comes, and which is a major impact which is there. I think the third and the fourth important point is that I think we have all responsible citizens, our commitment to environment sustainability. I think from that perspective, whatever we are building, and if you look at construction is the biggest contributor towards the pollution, towards the economic deterioration. I think our drive towards green housing, the ecosystem at a self-construction individual homes, right from the planning stage to other state, and if we can have that movement which will make green housing at a sustainable local level much more impactful, will make a big difference. at Awas, because we use technology, continues to use technology, and what Apul talked about, digital footprints, UPI being a major one, I think those interfaces have really made a difference to really scale up. As we talk, we've already underwritten 4 lakh plus of customers as a pan-India player. I think these three things initiative will further enhance and scale up in a much faster and reliable and sustained manner.
Gurmit, your views, especially on what changes and also on the green side, given your role in the Indian Green Building Council as well.
Well, what Sachinder said, let me echo first. Building sector is responsible for 38% of the carbon emissions worldwide, out of which 11% comes from materials used in building and 28% comes from operational carbon. Operational carbon means air conditioning, electricity use, water use. So how do we bring down this? We have the CII Indian Green Building Council, which I've been part of since 2001. And we have been able to bring down the energy consumption in buildings by over 50%, water consumption by over 50%, less waste generated, and obviously reduction in carbon. We have net zero ratings for energy, water, waste, and carbon now, where we have buildings which do not have to get any energy from the grid, or no water from the grid, or do not give back anything to the grid. Whatever they draw from the grid, they also produce that much energy. Having said that, green buildings today get faster MOEF clearance, Amit, you know that. So all your buildings are green. That's why they are green, because you take pre-certification, and of course you go for the certification also because you want to pass on the benefits. You know, they were speaking of efficiency. What efficiency we passed on to the consumer? Can I reduce his bill by 50-60% on energy, his water bill consumption? So there are right now projects, 12 billion square feet, 1200 crore square feet certified by IGBC. We have a lot of affordable housing, and we have a lot of, by the way, we have the largest ratings in the world. We rate, every metro station in India is rated. So even when the metro rail, the train breaks, even that energy is converted and used for air conditioning. So we have to, what I find an impediment to our growth is that there are not many banks which are financing green buildings. We work with ICICI, we work with the World Bank, IFC. But how much of Punjab National Bank would be? Of course, their own housing is green, certified. But how much of their actual finance goes for green buildings, priority lending? It doesn't happen. So people still do not realize the benefits of going green. Of course, as far as a developer is concerned, a platinum rated building, if you take two similar buildings, one is certified by IGBC and one is not, the certified building by IGBC costs less. It doesn't cost more to build. I'm not talking of operational cost. I'm talking of capital expenditure, CapEx. So it makes business sense to go green today, okay? And to make sure that we reduce our energy, water, waste, and carbon consumption. Let me tell you, we are the second largest green building council in the world today after US GBC. And by 2026, we would beat, they are all over the world, we are only in India. But because of India's sheer size and now the neighboring countries are adopting our ratings, we will become the largest green building council in the world. We are part of CII. And so we have this green business center. Jamshed Godrej is the chairman. We have 10 centers of excellence. IGBC is one of them, where we are now looking at 14 billion square feet in the next 1 year. And to make sure, I am working with the government, Ministry of Housing, Urban Affairs, Ministry of Power, to see how we can mandate green buildings. There are states which give 5 to 20% FSI or FAR if you are a certified green building by IGBC. And therefore, it not only makes business sense, it makes good profit to go green, and the banks don't realize that. So the banks need to really pull up their sleeves, pull up their socks to see how we can work with the bank, at least maybe not of so much on affordable housing, but then we have all kinds of different buildings coming up in India. And we need to see how we can work so that we can finance these buildings to make them to go to the public that, boss, we are working where a housewife will say, I will not buy a house unless it's certified green. And that's what I'm working, where by 2030, all the new buildings to be constructed in India have to be certified green. That's what I'm working with government. And by 2047, when India turns 100, all the existing buildings have to be turned green, because we'll be able to save 50% of energy bill. We'll be able to save 50% of the water. We'll make ourselves water positive. Let me tell you, we have 18% of the world's population, only 4% of the fresh water. We have a very large problem on hand, the way we are urbanizing, the way we are building. 36 kilometers of roads are being built every day, connecting cities. And as Sachinder said, when you connect one city to another, Bombay, Pune, then Lonavala becomes an urban city after some time, you know. So same way this is happening in India, and I think we need to all look at sustainability very seriously and take this message home, how we can save water, how we can save energy. You can work with me separately, talk to me separately. I can save your energy bill by 50% even in your home. I'll tell you one small example, not part of this. I stay at Nepinsi Road. My drawing room is 800 square feet. I have 6 tons of air conditioning in my drawing room. How many tons? 6 tons. Because the thumb rule is every 200 square feet bedroom, you put 1.5 tons. 1 ton garmi ho jayegi. We did Reliance Copper Khairne, 580 acres, 700 square feet, 1 ton of air conditioning. 1 ton of air conditioning, 700 square feet. We did Reliance Jamnagar, 850 square feet, 1 ton of air conditioning. And there are 23,000 employees. So, and it's not that we are not providing comfort. If you don't provide comfort, we will not work with you. So my request to all of you, we're talking of finance, but let's make finance and buildings both sustainable.
So I think it's very interesting. People talk about organized and stuff. I think we at Awas, what we're working on is self-construction individual. So I think just to add on to what you said and where have we developed the model, I think from a baseline perspective of energy, material and water, how do you reduce it sequentially mutually by 20% is what is the impactful difference we are trying to make. I think it's about creating that awareness, curating about that interest at that ground level system. It's easier to do in a very organized multi-dwelling, but it is about making the individual who's building a house really to make him aware what are the economic and social benefits really it comes in when you build a green home. I think helping that ecosystem, and by financing we actually reduce the rate, because the capital cost actually increases when you build. Instead of red bricks, you use fly ash bricks. Instead of the normal energy water saving consumption, you use aerators, you use double flush kind of flush. You use a lot of chajjas which actually prevent what Gunmeet was talking about. You don't, the air passage is good enough. Passive architecture, right? And the kind of reflective surfaces which actually help you to prevent. A rooftop solar which will help you to reduce your energy cost, a typical small rainwater. And we are talking about a 100 square yard, a 200 square yard self-built house to be made. And I think in that awareness level by the government for individuals to really create that moment of green, I think that is where we are really working at the ground level. I think some places we've made a journey, but I think it's a long roadmap, and our commitment towards environment sustainability and bringing green as one of the biggest opportunity as well as impactful difference, what we leave for the new generations really to come across as what I put out, energy, water and resources. So to say, I think that's the impactful difference we're trying to make as Awas. And Awas, as we say, and as our logo says, and our symbol says, we are sapne aapke saath hamara. So wherever it is there, it is you dream and we are there. And we are like a friend who's fair, who's flexible and who's fast. And that's what we reflect. And we are committed to make a difference to real Bharat. And we believe that Bharat is one which will drive and force India to its new age.
Oh, fantastic. And I think just to add on the green, and probably a request I would actually also make to CII is that how does, especially for the lenders, to really motivate them to focus on, of course, they actually go on the back, try to raise green bonds, which actually helps them lower cost of financing, but that's the only avenue for them to really focus on green. But then is there anything more in terms of regulator support or government support which really comes to the financing institutions to really push this agenda? So that's probably one element which I would actually put in as a request.
I I think just to add, I think accessibility, availability of those green materials at the tier 3, tier 5 towns, typically talking about fly ash bricks or BLDC fans or those aerators at a cost which is impactful, a difference, I think will make a difference at an industry level actually, because if you look at it, it's still restricted to the availability, affordability and accessibility.
So I think, Sanjay, one of the things probably is that, we in the morning session, we discussed, the banking sector is about 50% of the total GDP from a framework perspective. There are a lot of deposits in the banking sector. I think if a person places a deposit and which is utilized towards some ESG green kind of an initiative, I think we could probably make a recommendation
Absolutely.
for some tax ops, tax incentives, and so on and so forth, such that from a retailization of investment into the future or climate sustainability, I think we get a clear drift of local pool of capital becoming available for sustainability.
And even to motivate, the buyers or the borrowers, even from an NHB perspective, the CLSS scheme, can a particular incremental benefit can be given as part of the scheme if the house really certifies as a greenhouse. So that also potentially can be one more area.
Yeah, because there is already some kind of a deduction, ATL or something like that, which is on interest on saving deposits and so on and so forth. But if towards a green deposit also, we could probably make a recommendation. We could talk to Sandeep Green. But yeah.
I just want to add a perspective. I think Gurmeet knows it very well. We have multiple, from 2014, we have done only green buildings. And we are one of the few developers that has net zero buildings. One of the challenge we faced, and that's something maybe with CII we can take it up, is the availability of green electrons, like renewable energy, for a residential customer. Mostly it's available in states for high tension customers, industrial customers. And we had to really struggle in Karnataka, where our first net zero building was introduced. And we had to work with the local electricity board to actually get that for and the way it worked is, while the design, to the point that you made, like the design allowed us to reduce the energy consumption by 1/3. So 100 electrons became 67 electrons. Then we put rooftop windmill and solar. We put windmill on top of the building. It brought reduction by only 10%, the consumption. But the 60% that was left, we said we will source it through green electrons. And that was more expensive. So first we had to get approval. And that was, even though it was 10% more expensive, the 60 became 66, but it's still 34%, 1/3 more cheaper than getting brown electrons, for example. So that's the beauty of having a net zero building or a green building that allows us to. But there is a regulatory. It should not be that difficult for a developer or customers to source green electrons, given the focus on solar and wind and hybrid, etc. So that is a missing link that can be resolved through the regulatory support.
See, I'll tell you, green energy now is available at only 50 paisa extra per kilowatt hour per unit, right? So it's not that expensive. But now, as a rating agency, we also allow off-site solar. The only problem in our country is the wheeling charges. Every state has different wheeling charges. Maharashtra has the highest, Gujarat is low. And that's why there's a lot of solar being put up in Gujarat. So we are working with the government where the wheeling charges should be uniform all over the country so that we can put up solar wherever the land is free or much cheaper and draw it from the grid somewhere else. We are doing that, sir. It'll come soon.
But fantastic. I think great thoughts and a lot of thoughts, few specific points probably we can carry out as CII, which has come especially around digitalization of land records, the entire initiatives towards green. So thank you everyone for your inputs, and this was a really interesting session. Thanks a lot.
Thank you, Sanjay.
I think let's give a big hand to the chairman of the session, Mr. Sanjay, who really did very well. Thank you.
So let us have a resounding of claps for the moderator as well as all our expert speakers on the days. Could I request all you gentlemen to kindly step ahead for a group picture, please? A group photograph which will stay with us for times to come. Can you shift a bit? Yes, to the center. Thank you. Moments to be cherished in the form of photographs. And ladies and gentlemen, as you move out, I have a few announcements to make. Of course, we are concluding the proceedings of the day, and as informed, we have arranged for high tea in the adjoining foyer. Tomorrow, we begin with a networking breakfast at 8:30 in the morning, wherein you can network with your peers from the sector and others in the counterpart organizations. The first session begins at 9:30 sharp. Please be in your seats a little before that, which will enable us to cover a lot of ground. Like today, we have been absolutely in time. Thank you for your cooperation. Tomorrow, we will be having the chairperson of IFSCA, Deputy Governor of RBI, member IRDAI, Chairman PFRDA, whole-time member of SEBI, and finally, the Secretary of DEA will be joining in the evening for the valedictory. So tomorrow, it's a full new day of learnings, takeaways. We will be able to hear directly from senior government officials and the regulators themselves. So, see you all tomorrow around 8:30. Looking forward to a big day again tomorrow. Thank you.